And I think commercial real estate certainly is this brewing problem that we all know about. Banks are regulated. It's nothing new, ultimately, unfortunately, and it's not going to become systemic. So, if it balloons and there are pockets within portfolios that are
여러분 안녕하세요. 안녕하세요. 오늘도 이렇게 뉴스 읽어준 여자가 다시 남았습니다.
Where are the financials now going through the rest of this year, given the fact we've got to deal potentially with some big unrealized losses in commercial real estate?
Yeah, working for a bank, there's always.
오늘도
it's a challenge.
나스닥
We are,
주식
when you're investing in a bank, you're investing in
볼까요?
the management team, you're investing on how they approach their loans, and ultimately how the market views the liability.
오늘은 막
And that doesn't change.
올라가고 있군요. 계속.
Individual bank
Does it lead to tightening lending standards though?
요때쯤 급속히 확 올라가고 나서 계속 지금까지 올라가고 있는데 단자 보면 아마 좀 많이 떨어지는 것 같기도 하고
That's the reason why it sort of begs the question: Are people pricing in too much?
많이 올라갔고
especially
지금 좀 떨어지는 것 같아요. 근데 사실은 저 이번 주에는 제가 진짜 운이 없나 봐요. 어제는 엄청 많이 고생했어요. 어제도 잘못 들어가는데 한 송해를 한 60만 원 정도 봤는데 어떻게든 빠져나갈 길을 찾아보고 계약도 늘려보고 뭐 했는데 진짜 너무 오래 걸렸어요. 그럼 결국엔 마이너스 15만 원이었는데 근데 지난번에 좀 그 저녁에 내가 좀 땄잖아요. 한 16만 원? 결국엔 한 10,000원 벌었어요. 3일 동안 10,000원이라니. 진짜. 주원씨 안녕하세요.
You know what? I wouldn't say it's a bright spot. What I would say is that
진짜.
for those that are worried with
저 이제 운이 없어요.
their markets would be more.
진짜 잘못 들어온 거 아니고 거기 빠져갈 팀이 놓쳐버렸어요. 진짜. 이제 너무 무서워요. 들어가고 싶어도 용기가 안 나요, 이젠. 어떻게 해야 될지는 모르겠고 일단 뉴스라도 좀 봅시다. 오늘 진짜 함부로 매매를 못 들어가겠어 진짜.
Hungarian Prime Minister Viktor Orban lifted his veto on the package. Under the deal, EU member states agreed to debate the implementation.
오늘 실적 발표가 좀 많은 것 같은데요.
Contentious split with the EU and marks a significant boost for Ukrainian President Volodymyr Zelensky.
엄청 많네요.
Executives were grilled on Capitol Hill over online child safety. Ranking member Senator Lindsey Graham says the social media giants must be reined in.
Mr. Zuckerberg, you and the companies before us, I know you don't mean it to be so, but you have blood on your hands. You have a product that's killing people.
The Senate Judiciary Committee wants Meta, X, TikTok, Snap, and Discord CEOs to endorse proposed bills for stronger protections for children using the apps. Seven-time Formula One champion Lewis Hamilton is on the verge of a shock move to Ferrari for the
10만 원인가?
2025 season, according to reports. Hamilton recently signed a new
보니까
contract at
어제
Mercedes, but is able to
중격이 너무 컸나 보다. 10만 원, 그럼 10만 원이면, 그럼 괜찮아요. 난 또 만 원인 줄. 마지막에는 저 그냥 에라 모르겠다. 제발 좀 끝내자. 이런 마음으로, 빠져나갔는데, 결국엔 담보금도 안 봤어요. 연기가 안 나요. 진짜.
I'm interested in this trip to Italy.
You want to come on board for that? Up next on the program, a border deal hitting a wall.
쭉 보니까 계속 올라가고 있었는데 하루 종일 올라가고 있었는데 지금 막 떨어지고 있어요. 8시인데 뭐 좀 발표가 있었나? 내가 좀 늦게 들어왔구나 라이브. 그때 뭐 매도로 들어갔으면 딱 좋았을 텐데. 정신도 없어요, 이제. 수익을 좀 봐야 되는데. 도저히 안 되겠어요. 지금 뉴스 보면, 코스피와 항상 계속 올라가고 있고, 해외 선물 100도 지금 올라가고 있고, 우리 나스닥은 제일 궁금하겠죠? 나스닥은 지금 떨어지고 있어요. 2.23%나. 진짜 엄두가 안 나요. 없네. 갑자기 여기 빡 올라가고 있네. 일단 다른 웹 유튜브 분들이 지금 뭘 하고 있나 살펴볼까요? 지금 다 기다리는 중인가 보다.
Streaming on YouTube and Bloomberg Originals. From New York City,
London and Sydney.
from Washington, 9 a.m. in Beijing and Shanghai. Good morning, everyone. Have a great evening.
Here's what I'm watching. You do not want to miss this story.
Is there the kind of upside?
근데 사실 가격만 봐도 그쵸 많이 좀 떨어졌는데 많이 떨어지는데 여태까지 계속 올라가고 있잖아요. 근데 왠지 함부로 얘기를 이제 못해요. 제 느낌상 오늘의 제 느낌상 쇼신 것 같은데 왠지 매도로 들어가야 되는데 일단 좀 대기 중.
In question, the latest Bloomberg News Morning Consult poll showing voter concerns about immigration gaining ground on the economy is the top issue. 6 in 10 swing state voters say President Joe Biden bears responsibility for a surge in migrants at the US
파월의 장애 발표의 인터뷰. 사실 이거는 제가 못 봤어요. 좀 궁금해서 봐야겠다. 도대체 무슨 내용인지 한번 살펴볼까나. 이거 어디 또 뉴스 나오지 않았어요? 어디서 봤는데?
If the speaker were to bring it up in the House, he'd be former Speaker Johnson. There's no political desire among a core group of House Republicans to get this done. There's a core desire among a core group of Senate Republicans to probably not get this done. So we do look at this very much through the political lens. You highlighted kind of the impact on the presidential elections. When we look at polls, when we talk to pollsters, the border, inflation, geopolitical risk are some of the biggest drags on President Biden getting reelected. And so for Republicans, they're not very interested of handing kind of a win to President Biden because they clearly have an alternative candidate who is Donald Trump.
Well, Ed, let's talk about the bill that did get done overnight. Except Senator Chuck Grassley in the Senate saying the quiet part out loud when it comes to what the upper chamber may do. Passing a tax bill that makes the president look good, mailing out checks before the election means he could be reelected, and then we won't extend the 2017 tax cuts. Do you expect this tax bill that passed on a massive bipartisan support overnight to actually get passed in the Senate?
I think it has real momentum, Anne Marie. I don't think that this is a kind of guarantee, but when you look at this bill, it has a couple of provisions that are really important. First of all, it always gets this headline that it's $78 billion. It's actually much more than that. For 2024 tax returns, it's $125 billion for research and development, bonus appreciations for corporations. It's $8.3 billion in expansion of the
아직은 뭘 할지는 잘 모르겠고 좀 기다려보고 좀 이따가 들어가면 괜찮을 수도.
Exactly the timing in the Senate, but I think it has a greater than 50% chance because with that momentum and that 357 to 70 vote, it's hard to be that individual in the Senate who's opposed to this, especially as there's so much pressure to get this across the finish line. But as you mentioned, we are in an election year, and politics absolutely will play a role in kind of how fast and if this gets done.
And the White House already has come out and said they want to sign this bill into law. But what kind of amendments could we see from the Senate side?
So I don't think there's much time for amendments in the Senate side. What we are hearing in terms of conversation is a desire to maybe expand out the state and local tax deduction. There's going to be a vote potentially in the House on that sooner rather than later, expanding it from a $10,000 maximum of deduction to $20,000 for individuals that in households below $500,000 of income. That's going to get headlines. That's not going anywhere. In the Senate, they've talked about some of the provisions of the child tax credit being too expansive, the fact that you can choose 2 different calendar years for getting the benefits. So right now, I think if there's real opposition, this dies because remember, the tax filing season started on Monday.
또 떨어지고 있어. 제 생각엔 계속 떨어질 것 같은데 아직 제가 들어가기엔 좀 그렇고 좀 기다려봐야죠.
It's a great question, Lisa, but this is something that passed with 357 votes. I mean, it's unusual to have something that this is bipartisan. Yes, there was a core group of House Freedom Caucus members who were opposed to it. There was a small group of members from high tax states, the SALT caucus, that were opposed to this. But what Speaker Johnson said is if there's a bill that has overwhelming support, he's going to...
주현 씨 비몽사몽이네요. 뭐 때문이죠? 혹시 방금 일어나셨어요? 시간이 좀 아이고 고생 많으시네요 진짜. 저도 사실 어제 한 6시쯤 잤는데 좀 한 4시쯤 들어가는데 6시까지 잠을 못 자가지고 계속 자고 나서 계속 안무도 보고 그러니까 지금 눈이 거의 안 떠져요. 그러니까 주원 씨 우리 정신 차리셔. 정신 차립시다. 이거 말도 안 나와요. 오늘은 그 커피 몇 잔 마셨는지 몰라. 이거 아마 한 4-5잔? 인가 잘 모르겠어요. 근데 문제는 효과 없어요. 전 커피 진짜 효과 없어요. 오히려 커피 마시면 훨씬 더 뭐지? 말도 안 나와요. 아무튼 저한테는 카페인 타격이 아예 없어요. 그래도 매면 화이팅 해야죠. 매매라도 제대로 해야 되는데.
Good to catch up. Thank you, sir. Ed Mills there of Raymond James. Thank you.
또 왜 이 지경인데? 떨어지고 나서 또 계속 이렇게 이어지는데 돈 좀 벌자이. 공간이 중요하지만 돈도 중요해요. 인정하기 싫은데 또 중요해요.
You know what? They shouldn't. So, the Fed obviously is supposed to be apolitical, but from a deficit perspective and really worrying about the treasury market, I do think that those conversations are out there. And I think part of the Fed certainly doesn't want to be at the helm of a recession. But part of really this pivot discussion over the course of the last couple of quarters to me is to avoid a recession just because the amount of debt that
돈 많이 벌면 근데 나중에 좋은 병원에 가도 돼요. 열심히 돈 벌고 나중에 좋은 병원에 가서 검진도 받고 뭐 할 수 있으니까. 그러니까 돈이 중요해요. 돈이 없으면 병원도 못 가요. 저도 지금 못 가고 있어요. 치과에 좀 가야 되는데. 치과에 가야 되는데 못 가고 있어요 지금. 좀 떨어지는 것 같기도 하고.
Interesting. Marvin Lowe, State Street. Marvin, great to catch up. Thank you. Lisa, I imagine we'll have more of those conversations in the weeks and months to come.
계속 기다려야 될 것 같아요.
As different as some people.
It's true too.
Yeah, so it's sort of, either way.
Coming up shortly, counting you down to
무리하면 안 됩니다, 여러분. 여러분 계속 기다려야죠. 저는 이제 진짜 함부로 못 들어가요.
for the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock.
우리가 좀 기다리는 동안 좀 신나는 음악을 좀 들어볼까요? 매매는 힘이 안 나지만 음악으로 흥을 만들면 되잖아요.
Then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority.
Yesterday was pretty interesting, let's put it that way. In the equity market, bit of a downdraft, biggest one-day loss on the S&P 500 since September. I think on the Nasdaq, biggest one-day loss since October. State of play this morning, bit of a bounce, positive a third of 1% on the S&P. On the Nasdaq, up a half of 1%. In the bond market, interesting morning going into the afternoon. Had some ECI data, small downside surprise, and then the big thing kicked off. Started to worry about banks all over again, yields aggressively lower. Then lower again in the news conference, and then we finished lower, I think, by about double digits. Basis points, 2-year, over to the 10-year, Lisa.
Basically, people looking at the fact that the Fed is probably less likely to cut in March, but still on an easing path this year at a time where we're clearly seeing the stresses coming up still from the commercial real estate problems that people have been talking about for years. Still, though, the unknown is looming, and the unknown being reported as potentially more than expected is spooking some.
So Chairman Powell was not a snooze. The ECB last week was. The euro looks like this, 108.04, negative by 0.1%. I have to say, just to sit on the story just for a moment, that is a big aid deal that's come out of Europe today, Anne-Marie, for Ukraine. And the difference between Europe and the United States is pretty stark, once again.
Yeah, 50 billion euros.
자, 여러분, 좀 신나는 음악을 찾아봤어요.
Suffering on the front lines because of it. Interesting, they were able to get Hungary's Viktor Orban on board, Jonathan, to get this deal.
What's amazing, though, that number. Can you imagine if the Europeans had invested that number themselves in defense over the last 5 to 10 years?
Well, this was the complaint you heard from former President Donald Trump that we then spoke to Mark Rutte, all three of us, at Davos about, and he said this was appropriate in terms of a criticism for Europe. We should have been investing in our 2% defense, and now they're going to have to start. You saw a complete 180 from the German Defense Ministry when you saw Russia's invasion of Ukraine.
That's a big change. 108.05 on the euro.
단시간 방향성이 나올 것 같네요. 그쵸, 저도 좀 지금 기다리고 있는 중인데 좀 있다가 타이밍이 나올 것 같아요. 그때 확 잡으면 돼요.
To just over 1 in 3. Lisa, I think we should leave the quote up because he doesn't say no. He says it's just not likely. And I think the economic data between now and then can always change that conversation and change it fast.
Which maybe makes tomorrow's jobs number really live, right? We might actually get a pretty significant. Sure. Yeah, I mean, if it's a real downside surprise, suddenly March could be back on the table. The bigger takeaway is they're ready to ease. They're happy with what they see. They just want to keep seeing more of it. So now how do we price in exactly how much they're going to cut? To me, this sort of puts the Fed on the back burner.
진짜 이제 함부로 얘기 못 하는데 근데 왠지 매도로 가야 될 것 같아요. 근데 이번 주제 감을 진짜 모르겠어요.
If the data gets weaker, they're willing to step up more quickly.
It's a great point. They're not scared of strength. They want to see strength. He even said that explicitly. This idea that you can get strength and have your cake too in terms of disinflation is something that's new.
Let's talk about where there is no strength right now. Worrying signs in the banking sector and commercial real estate. New York Community Bank Corp plunging as much as 46% yesterday after after the bank's loan loss provision surged to $552 million. The bank took on part of Signature Bank last year during the crisis in regional banking, including a pair of troubled loans for a co-op complex and office space. One bank in Japan also sinking, warning of a $191 million loss tied to commercial real estate in the United States. Instead of the top of the program, phase of the cycle where you talk about banks you've never heard of before.
내가 모시고 있는 신들이 다 나가버렸어요.
This is where we're at now, easily spooked about something we've been talking about for a while.
It's the idea of losses being bigger than we previously expected, and I think it's Aozora, probably, in Japan.
Nailed
That's how
it.
I pronounce it. But honestly, I'm looking at this. It's the idea of bigger losses than expected. We've known this is a problem. Have we been accurately pricing it? Not necessarily a systemic issue. It's this question of, have we adequately accounted for weakness in sectors like the office space sector?
네, 샤워타워 하시고 저도 아마 티타임 좀 해야 될 것 같은데, 근데 여러분 제가 좀 이따가 못 나오면 제가 죄송해요. 제가 잠들 수 있으니까 티 먹다가 커피 먹다가 기절할 수 있으니까 그 최대한 빨리 돌아올게요. 네, 좀 이따가 다시 뵐게요.
That said, it's not that idiosyncratic in terms of office space and other types of sort of reckoning that have not yet been fully
It
priced.
certainly wasn't taken that way yesterday, given the move we saw in the regional bank index from KBW. You said it earlier, I think down something like 6%, worst day going back to spring of last year. Deutsche Bank with some news this morning, slashing 3,500 jobs. In earnings this morning, the bank also raising its revenue target with a plan to buy back 675 million euros worth of shares. Deutsche Bank outperforming peers, BNP Paribas messy, according to one analyst. ING sliding after missing estimates and lowering expectations. Deutsche Bank this morning, Bramo up 5%. Look at the different story over at BNP. We're down 7 there. ING also down almost 8%.
And Deutsche Bank has said that they're going to actually make additional cuts after already cutting pretty aggressively and seeing their expenses come down. What I think is interesting about BNP and ING is that everyone's been saying, okay, it's finally the time for European banks. I want to get some of those people back on and say, okay, is it really still? I mean, are you reassessing how much this is really going to fuel earnings in a new way for the banking sector in Europe?
The latest on Deutsche Bank, BNP and ING this morning. Big tech earnings coming after the market close. Apple, Amazon, Meta, all coming off a strong year of gains. Apple looking to avoid a 5th straight sales decline, which is amazing when you look at the share move of Apple over the last year. Investors looking to Amazon and Meta for progress in artificial intelligence while avoiding disappointments like Alphabet and Microsoft earlier this week. Bloomberg's Alex Webb joins us now for more. Alex, let's start with Apple and just think about the move we've had over the last 12 months. Fantastic rally, and the fact we're discussing whether they can avoid another sales decline. How do we reconcile those two things?
Well, they still post remarkably good EPS growth, right? The market's looking for a 12% bump in EPS, earnings per share in the most recent quarter. They find a way, even as the top line numbers slow, of leaning more into the high margin products. So if you're selling the iPhone you want to be selling is stuff with a lot of memory, because the margin on memory, really, really good. If you're experiencing growth in your services business, that's things like the App Store, where it's basically software and very high margin, things like iCloud, all those sort of things. They've really managed to squeeze the profit out of sort of every last dollar, and it's very much Tim Cook's Apple.
At this point, is the bar fairly low for Apple, given all the bad news that's been coming out? Is it lower than, say, for a Microsoft and a Google?
It's certainly not been trading anywhere near the multiples of Microsoft, which is at something like 36 times its forward earnings. Apple's more in the sort of mid-20s at the moment. So with that being the case, quite possibly, but it's still, again, one of these magnificent seven, has enjoyed a pretty good year, as John was saying. I think, though, people are aware of there being quite a lot of headwinds. I think it's been quite well telegraphed that there are problems in China. The really interesting thing will be seeing quite how bad those problems are. There was some reporting from an analyst last week that suggests they could experience a 30 to 40% sales decline in China in this calendar year, or this financial year as well. If there's any indication of it being even worse than that, then you start to have a bit of a problem.
The reason why I ask is because I wonder if the bar is somewhat higher for Amazon and the potential to disappoint is that much greater. And I ask this because AWS has a real question mark around it, the cloud services business that has driven so much of the profitability. How much market share are they going to be losing to Microsoft, to even Google, because of not as robust of an artificial intelligence offering.
Yeah, I think it is a thing that a lot of Amazon investors are looking at. As we know, even as the e-commerce business accounts for a huge amount of the lion's share of the revenue, almost all the profit is generated by AWS, at least in the current way it's set up. And the thing that's interesting is if you look at Microsoft's numbers from the other day, if you strip out what it attributed to the AI gains of about 6 percentage points, actually the growth of its cloud business wasn't terribly impressive. That was one of the reasons actually that the share price got a little bit punished by investors in the hours and days afterwards. Now, is that because in general the cloud market is not good, or is it because Amazon is actually succeeding in gaining share in that core cloud business? Yes, the AI stuff is important and is going to get more important, but for right now, it isn't something where companies are changing their whole business just yet. That might be yet to come, in which case people want to know what Amazon's plan is. But is the core business actually still showing some resilience without that AI consideration?
Alex, I wanted to ask you about the Vision Pro headsets because they go on sale tomorrow in the store, even though they seem to have sold out in pre-sale. Is Apple banking on this future?
No, I mean, I think one of the things, and I wrote this in the newsletter last week, one of the things that's sort of misunderstood about the Vision Pro, to my mind anyway, is that Apple does not need it to be a success. There's an important caveat to that. It doesn't need to be a success as long as no other headset is a success, right? Because it can't afford for the next sort of vector of computing, personal computing, to be, on your face in terms of smart glasses or something like that, and it not to have a product there. Now, if the space doesn't take off at all, Apple's fine. It's still pretty dominant in mobile phones. It's, as of last year, the biggest seller of mobile phones and the smartphones in the world. It's got a very strong position in of course, PCs or laptops, computers, and in tablets. So it'd be, if it gets a bit of a boost from this in the medium term, it won't complain. But it's less important than ensuring that Meta doesn't dominate the space in the years ahead.
Alex, that's product. Let's talk about geographies. China. What's the latest on that? You and I have been talking about this all of last year into a new year, about the clampdown on foreign tech and all of that coming out of China. How have things changed?
Well, the thing that's been sort of cracked down on is very much the government, in government departments, in state-owned enterprises. The message has gone out, according to Bloomberg reporting at the very least, that you should not be owning Apple devices. The question, now that in and of itself isn't particularly bad news for Apple. It's probably a bit of a rounding error when it comes to the actual unit sales. It's more the kind of mood music, what this means actually for the perception of Apple in the country as a whole. We saw this 6 years ago where there was a sort of real upswell in patriotism where people said, oh, we need to buy Chinese. If that is happening right now, that is clearly bad news for Apple. The Min-Ching Kuo report from last week that I mentioned earlier, talking about the potential for a 30 to 40% sales drop in China, that would be clearly quite painful, particularly as China has been, up to this, these recent quarters, actually a bit of a bright spot. Having recovered from that slowdown of sales a few years ago, it was experiencing growth again there, and that's not something you could say about it globally. So it is a concern for Apple, but again, as I said at the very beginning, it still somehow manages to find a way of eking more profit out of the dollars that it does sell in revenue.
Given the mood music regarding relationship between Washington and Beijing, is this only going to get worse for Apple to try to continue gaining market share in China?
Certainly right now, it doesn't look like it's going to get any easier. I think the other concern, of course, is what it means for Apple's manufacturing base there, right? It employs directly and indirect, well, through its contract manufacturers, millions of people there. China probably doesn't want to be losing those jobs. At the same time, Apple has been gently trying to increase manufacturing capacity in geographies like India, Vietnam, and elsewhere. So at the moment, they are still very, very small and it's very, very nascent, but any constraints on Apple's ability to build, cutting-edge devices, what it sees as its cutting-edge devices in China, is the other side of the coin that they really don't want to put at risk.
Hey, Alex, great to catch up. Alex Webb there of Bloomberg on the latest. More earnings coming this afternoon. Apple, Meta, Amazon. Some earnings coming right now from a cruise liner that was up 162% last year. Lisa, one of the best performing stocks on the S&P 500 in 2023.
Cruises are hot. I mean, I think that
Apparently,
you should
yeah.
take one. Yeah. Essentially, Royal Caribbean coming out. Adjusted EPS for this year is seeing $9.50 to $9.70 versus the estimate of $9.15, seeing first quarter adjusted earnings per share of $1.10 to $1.20 versus an estimate of 91 cents. Shares are climbing more. People are going on cruises. It's the post-pandemic reality, John. When are you going to go?
Have you seen the Icon of the Seas? Have you seen this ship?
No, I haven't.
7,500 passengers, 20 deck ship. It looks like a theme park on a boat.
That's what they are.
It looks absolutely ridiculous.
Well, I
you should
mean,
Google this boat.
okay,
It's absolute nonsense how big this thing is.
Nonsense for one person and just absolutely a wonderful way to vacation with family for another person. I'm just throwing that out there.
Especially if you don't like to fly. My father hates flying, so a few times we were forced to go on cruises.
What was your experience of it?
It was nice. But we went on smaller ones, not
Smaller
these,
boats.
not these massive. I'm looking at this Icon of the Seas. It looks like Disney World's on a Disney World.
Thank you. That looks like a nightmare to me. Stuck with 7,000.
No, but you are very particular in your cruise.
Absolutely not. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg brief with Yahara Hackers. Hey, Yahara.
Hi, John. Boeing CEO Dave Calhoun has admitted the company, quote, caused the problem behind the incident that saw a door plug blow out during an Alaska Airlines flight last month. Speaking on the company's earnings call, Calhoun said an investigation into the cause is underway, but the ultimate responsibility, he said, is on Boeing. The plane manufacturer declined to issue a financial forecast for the year. Workers in transportation and warehousing took home record pay in the last quarter, according to new data from the Bureau of Labor Statistics. Employment costs in transportation jumped a record 6.3% in the fourth quarter from a year earlier. Meanwhile, factory workers fell behind. Their pay climbed just 3.7%, and the biggest gap between the two sectors on record. And Elon Musk is going all in on Texas, seeking shareholder approval to move Tesla's corporate registration from Delaware to the Lone Star State. Musk took to social media platform X to poll users on the change before saying Tesla would soon hold a shareholder vote. It came after a Delaware court voided the CEO's $55 billion pay package, calling it excessive. He's already moved Tesla's home office to Austin and relocated himself and his charity to the state. And that's your Bloomberg Brief. John?
Yahara, thank you. You should see Lisa's face. Googling this. Looks absolutely disgusted by it. 1,200 feet long, almost 4 city blocks long.
It looks like being trapped in a Las Vegas casino.
46-foot tall drop slide. That looks fun.
Okay, for a day, maybe.
See?
That's the issue.
Okay. Up next on this program, the Fed in no rush to cut. The BOE on deck.
I think it's likely that the committee will reach a level of confidence by the time of the March meeting to identify March as the time to do that. But that's to be seen.
That's next. You're watching Bloomberg Surveillance live from New York. This is Bloomberg.
One of the largest and wealthiest consumer markets in the world. And there are very few global companies that can afford not to trade in the EU. So as the price for accessing the European market, these companies need to obey European regulations. That's not surprising. But often these companies choose that they will extend the European standards across their global conduct and their global production because they want to avoid the cost of complying with multiple different regulatory regimes. So there are benefits to standardization, benefits to uniform production. So all the EU needs to do is to regulate the single market. It is then the market forces and the business incentives of global companies that transform that EU rule.
Lots happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions. That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
Live from New York City this Thursday morning. Good morning to you. Equity futures bouncing back from yesterday's losses on the S&P 500 at 1/3%. Under surveillance this morning, the Fed in no rush to cut. The BOE on deck.
I don't think it's likely that the committee will reach a level of confidence by the time of the March meeting to identify March as the time to do that. But that's to be seen. So I wouldn't call it, when you ask me about in the near term, I'm hearing that as March. I would say I don't think that's probably not the most likely case, or what we would call the base case.
Here's the latest this morning. Chairman Powell throwing cold water on hopes of a March rate cut. The Bank of England decision due out at the top of the hour in about 12 minutes' time. Jennifer Micchione, Capital Economics, expecting the BOE to hold but signal a pivot right in this. The BOE will probably throw in the towel on the pretense that interest rates could rise and take the first steps towards cutting rates. We've penciled in the first cut for June. Jennifer, I'm pleased to say, joins us now. So Jennifer, we had some hawks on the MPC at the Bank of England putting their hand up and saying we need to go one more. What is it about the data in between meetings that you think has clipped the wings of those individuals?
Yeah, I think probably most prominently the surprise in inflation, which has come down a lot further, certainly than the Bank of England was expecting. We're going to see its new inflation forecasts later on, and it's very likely that they'll need to come down quite sharply given the surprises that we've seen. So I think that's probably the big thing. Activity obviously still pretty weak as well, but I think we knew that already, and the surprises around the persistence or lack of persistence in the inflation figures.
A couple days ago, Bloomberg put out a piece showing that Britain's economists have been missing the estimate that has been put out by the Office for National Statistics time and again. Actually, they've not been able to coalesce around what actually comes to pass when it comes to inflation in the United Kingdom. How much pause do you think that's going to give the Bank of England to make anything definitive, especially at a time where inflation is still a lot higher than other places in Europe and beyond?
Yeah, those are all really good points, and it's very difficult to forecast inflation. But I think at the moment, a lot of the decline that we're anticipating, that most people are anticipating, is more or less based on the cake. The 3-month annualized type rates, the rates that are looking more at the more recent developments in inflation, already show that it's come down significantly. Yes, wage growth is still very high, it's over 6% in the UK, and the same applies actually to services inflation, over 6%. And those are both reasons why the bank won't be ready to signal strongly that rate cuts are imminent. We suspect it will end up cutting well after the Fed. But the fact that these nearer term measures are starting to ease off and that headline inflation has surprised on the downside, I think is a good reason to expect that a pivot is coming fairly soon.
Still, on January 17th, England put out their latest CPI for December, and it actually increased for the first time in about 10 months. This really caused some people to raise a question about how good the projections were and the direction that's going to follow. Do you think that that's valid, or do you think that this is just a fluke in year-over-year comps to some of the changes, particularly to energy policy?
I think that's right. And it is slightly worrying that services inflation has been relatively sticky, and as I said, above 6%. But one big surprise has been in gas prices, which the Bank of England had been expecting to remain, assuming would remain relatively high in line with futures prices, but they've come down a pretty long way, and that has been an important factor for the UK economy as well as for the Eurozone, and that's a good reason to expect inflation to keep coming down further on the headline measure. Then at the same time, we've got clear signs of an easing in the labour market, things like vacancy rates, which should help to bring wage growth down from those very high rates that we've seen.
Jennifer, I think that Chairman Powell, often criticised, often by us as well, was actually quite transparent about how he felt about recent inflation data. He just wasn't comfortable. The 6 months of data wasn't enough for him. It's not that he wanted it to get better, he just wanted to see more of it. And then he offered up the fact that maybe, just a question mark, the last 6 months could be due to one-off factors, not a base case, but ultimately the concern is that inflation stabilises above target. When you hear things like that from the Fed chair, what do you think he meant? What could those one-off factors be that help bring inflation down to something north of 2, around 3?
Yeah, well, the one-off factors have been obviously the very sharp fall in goods inflation related to the let-up in shortages following the pandemic, and also the decline in energy inflation. And those have been the easy wins in the inflation battle for the US and elsewhere. So I think it's fair to say that the easy part is pretty much behind us. But if we look at what we would consider to be the more difficult, the more persistent part of the inflation story, there are some really positive signs there too, that core and services inflation are going to keep coming down, most notably from the labour market. We might see some more signs of an easing in the US labour market from the payrolls data that are coming tomorrow. But also in things like rents, newly signed rental agreements point to rental deflation in the US now. So that's a really big change, and another reason why we'd expect services inflation to come down. I think it's understandable after this period of very, very high inflation that Powell is still sounding very cautious. But it's really noteworthy that, as you said, what he wants is a continuation of this good news that we've seen, not better news. So if we just see similar inflation outturns, a similar softening in the labour market over the next couple of months, then I think the Fed will be ready to cut come May.
Here's a tough one for you. This is probably a better question for capital allocators, but I'll throw it at you, Jennifer. What do you think the number would need to be in payrolls tomorrow to really tee up a conversation about reintroducing a March rate cut, given what the chairman said yesterday about perhaps moving more quickly on softer economic data?
I don't know. We've penciled in 150,000, and we don't think that that's going to be enough to reintroduce signs of a rate cut. I mean, labour market indicators are somewhat lagging. It may be that it's more in the inflation figures themselves that you would expect to see renewed talk of a rate cut, or perhaps moreover in activity. I think one thing that Powell and the Fed really have going for them is that they can hold off, they can wait and see, because as we know, activity's still been holding up really well in the US. Now in the ECB's situation, things are a bit more difficult because you've got evidence that inflation is coming down at the same time, an economy virtually in recession. It makes it very difficult to argue that it's time to sit and wait, whereas for the Fed, for the time being, with activity still resilient, it makes sense to err on the side of caution. So I think if we were to see things like retail sales data start to come off very sharply, then that might be what would prompt more talk of a March cut.
It's a point well made. Jennifer, thank you. Jennifer McKeown there of Capital Economics. Bramo, unfair of me to ask in many ways, but ultimately isn't that the question we're asking tomorrow going into payrolls?
It's essentially what is going to move the market, what is going to be enough. Honestly, I think at a certain point, people want to see a rate cut. They expect a rate cut later this year. Is it going to move the market that much? I don't know.
What I'm interested with the Bank of England, do they have to come out and say something about the Red Sea? If you look at what S&P CPM had to say about the managing index, the Federation of British Industry, manufacturing sector in England is suffering because of what they're saying is longer delays out of what's happening in the Red Sea and the Gulf of Aden.
It's a brilliant question for the next hour. Coming up in the next hour, Sri Kochagamadan of Aberdeen, Bruce Van Son of Citizens Financial, Chris Maranock of Jenny Montgomery Scott, and Mandeep Singh of Bloomberg Intelligence, live from New York City. Equities are positive. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
From the world of politics
We're not going to be relying upon countries whose values we don't share.
to the world of business.
It's all about corporate power at the end.
Balance of Power. Live from Bloomberg's Washington headquarters.
We're going to be more excited what's in store for you.
How long will it take? How many years while we take this one day at a time? Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join host Anne-Marie Hordern
It's the one area really of bipartisanship.
I think we're getting more.
That's optimistic.
and Joe Matthews.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Lyons.
The door was open for regulators to do more. And that puts the
Fed between a rock and a hard place.
As they deliver news
This is such an important economic issue.
He's no longer trying to run away from
That really blew some minds.
insight,
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
and analysis.
I think your audience will get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with two more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority. Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
Jay or other authorities.
Was going to keep being welcome.
This is as the economic picture.
We're at the intersections of Hollywood.
People ask me all the time, what is the key to being a really good investor? I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Today, I would say perhaps only second to AI right now, which is AI has got so much going on and folks are so excited about it. Climate tech is obviously to be in.
What do we want to see? We want to see more good data. I don't think it's likely that the committee will reach a level of confidence by the time of the March meeting.
I think that's the story. Is it May? Is it June? It's not March. It's pushing back because they don't want to rush into a cutting cycle.
If the economy wasn't as strong as it was, the Fed would be much more inclined to cut rates.
Markets really want to take off and put a lot more cuts in than the Fed is really willing to do.
Jay Powell thinks the runway for a soft landing's in sight, but right now that's a forecast.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, this is Bloomberg Surveillance alongside Lisa Abramowitz together with Anne-Marie Hordern. I'm Jonathan Ferro. Your equity market bouncing back from the biggest one-day loss on the S&P since September. We need to talk about the similarities and differences between central banks. Let's take the Bank of England and the Federal Reserve. I can talk about some similarities as that decision drops. Unchanged, they drop their reference to the risk of further tightening. So that's the similarity, what they have in common with the Federal Reserve of yesterday. Here's the difference, Lisa. The way they vote on the MPC, that is a split vote. Some want hikes, one wants a cut.
And this comes at a time where they're having it very much out in the open. And I would also say another difference here is the economic backdrop. Very different when you have inflation materially higher than where it is in the U.S. and frankly growth not as rosy as it is in America.
Just to go through that vote again, 2 voted for higher rates, 1 voted for a cut. That is certainly not how things are going at the Federal Reserve. But I'll say this about Chairman Powell, and you said it too. It felt like he was herding cats yesterday, just struggling to, I would say, reflect the consensus of the committee in the news conference. And I think we got a flavour of that at the last meeting in the middle of December as well.
There seems to be a struggle between him representing the committee and him representing himself. And that sort of goes to this question around walking back some of the aspects of what he said after, and I'm thinking particularly of December. The Bank of England is unique, not only because of split votes, but also because it is a very different economic backdrop. On one hand, yes, there's disinflation. On the other hand, growth, I think, is the second worst behind Germany in terms of the developed market economies, the largest. So it's not as clear cut, maybe, as it is in the United States.
Anne-Marie, who does this sound like? Governor Bailey, evidence needed before we can cut interest rates.
Well, it sounds like Jay Powell, and also sounds like Christine Lagarde in some ways. All of these central bankers say they want to see more data. Jay Powell, though, wants to see, I think, a lot of more confidence. The BOE, I love because you actually get to know who is looking at hikes and who is looking at easing. But again, disruption to the Red Sea shipping a, quote, material risk. I'm really shocked by some of the manufacturers in England, which are saying we are seeing costs go up because of this and the length of deliveries also expanding.
Which is the reason why I think it's compelling that the Bank of England says that they see inflation at 2% in the second quarter and then accelerating. That is different than what we've heard elsewhere and kind of puts a coda on this idea of maybe we're in a sweet spot that just can't last.
Got a fantastic lineup for you. Let's just start with a move in the FX market. The pound just reversing losses here. The pound against the dollar, cable 126.63. We're still negative by 0.2%, but that story's just turning, just changing in the last 10 minutes or so. The broader price action has the equity market bouncing on the S&P 500 up a third of 1% after losses of yesterday. In the bond market, yields a little bit higher on a US 10-year by 3 basis points, 3.94. Coming up on the programme this hour, Sri Kochagomandon of Aberdeen on the Bank of England rate decision, Bruce Van Saun of Citizens Financial, and Chris Marinac of Jane Montgomery Scott on new concerns about regional banks. And Mandeep Singh of Bloomberg Intelligence looking ahead.
저기 나가버렸네. 잠시만요.
The Bank of England rate decision, leaving rates unchanged. Lizzie Burden is outside the Bank of England. Lizzie, unchanged, but ultimately this isn't boring. There's a lot in this one.
Exactly, John, and no one expected the Bank of England to cut rates yet, but it was all about the clues for the future path to rates. And there are mixed signals here. In the vote split, as you say, there's one fewer hawk in their number today, two voting to hike, but now we have Swati Dingra voting to cut. And if you look back through the history of the Monetary Policy Committee since its inception in 1997, if you look at the times when they've changed direction of rate, it's usually 2 meetings after they go in the other
계속 떨어지고 있는데 이렇게 조금씩 그래도 아직은 좀 들어갈 타이밍이 별로 없어요. 오늘도 10시 30분부터 슈즈디 발표일이 아하 애매한 시간이네. 참 애매한 시간이네. 그때까지는 좀 보라야 되는데 얼굴 컨디션이 조금 나아진 것 같아요. 아니요 조금 더 나빠졌어요. 눈이 안 떠져요. 기분 탓이요.
And then it boosts inflation again. So, a slap on the wrist for markets. Will Andrew Bailey give us more clues in the press conference at 12:30 UK time as to the future path of rates?
One thing that I really like about some of the statements that they put out is how granular they get. The Bank of England saying that 2/3 of policy tightening has already impacted the economy, and yet still inflation risks are skewed to the upside, with inflation potentially accelerating in the second half of this year. Lizzie, do you get the sense that
지금 또 올라가고 있는데 아마 또 떨어질 것 같아요. 여기쯤에 그리고 왠지 발표 시작하기 전에 계속 이렇게 왔다 갔다 할 것 같은데 좀 안 되겠네. 조금이나마 보고 싶은데
And I was speaking to Michael Saunders, former Bank of England rate setter, earlier. He says they could do 100 basis points of cuts before it actually takes effect.
Hey Lizzie, great to get your response to this. Lizzie Burden of Bloomberg outside the Bank of England in the city of London. Sterling just erasing some of this morning's losses. Still negative.
왜 안 떨어져?
The cable rate right now 126.56. The pound bouncing just a touch. Just a touch. Joining us now is Sri Kochagomandon, senior researcher.
억울하니까 좀 떨어져.
Your thoughts on this one, and I would ask this one. You've still got people on the MPC.
오, 많이 올라가네? 갑자기?
I think there's a number of issues here that might be concerning to the MPC. First of all, there were very good signs in terms of headline inflation.
역시 오늘도 제 감이 끌렸구나. 설마 매수로 들어가야 되나?
outcome of the April wage round, pay round indexation. That'll give more clarity in terms of the sustainability of this trend. That's one thing. Second thing, as you've already mentioned earlier on, is some of the risks in the Red Sea that might be a concern for some members. Now, from our perspective, it looks at the moment to be contained.
그러니까
The
왠지
supply chain issues are very muted.
매수로 들어가야 되는데
The pandemic, Russia, Ukraine, so relative to that, this is a very low base. Demand was low.
여기서 들어갔어야 되는데 여기 있어.
However, there are risks with this duration of this.
그래도 지금이라도 들어가면 조금이라도 수익이 볼 수 있지 않을까?
Furthermore, what if it actually spills over to Strait of Hormuz or, a broader escalation of the tensions? Then that could be a risk. I guess these are all factors that could be just playing on the decision for some members.
Do you already see British manufacturers preparing for those risks and hedging against them?
At the moment, what we've seen is that freight costs have
어떻게 하면 좋을까요?
escalated quite dramatically. Now, that could be some impact on manufacturing. At the moment, what we're seeing is that there are plans that they could potentially pass this through, but we're not seeing a big impact in terms of actual pass-through just yet. If we think about how much does this actually feed through into CPI, the weights across different CPI measures,
계속 빨간색이네.
transportation costs. So
에잉?
the direct impact,
뭐지?
however, it's really the spillovers across various aspects of the
뭐
supply chain. Now,
떨어지겠지?
again, this is very different to what we saw in the pandemic, where we had COVID restricting supply across Asia.
뭐지?
Also, the Asian Taiwan Straits, Korea shipping routes, they are much bigger than the Red Sea. So the Red Sea, in context, is a much smaller problem in a sense in terms of inflation. However, as I said, it really depends on the duration of this problem that could lead to some pickup in pass-through and inflation risks.
감을 못 잡아 진짜.
Is our base case if the tensions remain contained.
One thing that strikes me about this statement as well as
요즘엔 겁이 너무 많이 들어가지고 쉽게 매물을 못 들어가요. 오, 바로 떨어지네. 어메. 지금 혼자 로봇을 하고 있어. 저 지금 이렇게 멀리서 보고 있고 잘 놀고 와.
That would definitely be good for news. It's exactly what the central bankers want and need. I think really the balancing act here is what's happening with inflation. The headline inflation story has been very good across both the UK and the US. In the UK, what we're seeing is that base effect drag from energy prices, from food prices. That has been a very good contribution. Also, thinking again about Red Sea goods prices, which had been which had really escalated during the pandemic. That's flat growth, deflationary territory. All of this is very good news.
근데 사실 이렇게 짧게 들어갔었어도 여기 매수로 들어가도 여기 빠져나가고 여기 매도 들어가도 빠져나가고 혹시 앞으로 이렇게 해야 되나 진짜? 조금이나마 벌기 위해서 이렇게라도 해야 되나? 물론 제일 쉬운 방법은 한 포지션을 골라서 매도로 들어갈지 매수로 들어갈지 그리고 계속 기다리는 거예요. 1시간, 2시간 동안 이렇게 잔이 열 때쯤 그때 계속 왔다 갔다 할 테니까 그렇게 포지션을 해놓고 그냥 마음 편하게 이렇게 잘 모르겠다 일단 그냥 굳이 이런 뭐 이런 거는 제일 편하긴 한데 그만큼 수익을 그만큼 손해를 많이 볼 수 있는 방법인데 그러니까 오히려 좀 귀찮게라도 이렇게 계속 집중하게 하게끔 이렇게 계속 차트 보고 타이밍을 잘 잡고 하면 뭐 물론 불편하겠죠. 불편한데 그래도 좀 제일 괜찮은 방법이지 않을까 싶어요.
66. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hi, John. Shares in Royal Caribbean are climbing in pre-market trading after the company beat fourth quarter analyst estimates. Cruise travel is in hot
안
demand,
되겠네.
with the company's
하품이
2024
너무 많이
outlook also
나가지고
coming in ahead of expectations. Royal Caribbean surged a record
지금의 내
162% last year
상태는
and is debuting a new ship. The largest in the world. Icon of the Seas costs $2 billion to build and measures 1,200 feet.
죄송해요. 합봉을 보여주기 싫어서 아니면 완전 그 시청자분들도 완전 기가 팔릴 수 있으니까 이거 안 되니까.
And political uncertainty. New York and San Francisco are facing similar headwinds with both
여러분 화이팅 하세요. 화이팅 하고 진짜 성공하길 바래요. 우리 다 같이 성공합시다.
Saying an 11th team would, quote, not provide value to the championship. Formula One said it was willing to revisit Andretti's bid in 2028 when they'll be able to use an engine provided by General Motors. That's your Bloomberg Brief. John?
Yahara, thank you. Lewis Hamilton, Ferrari 2025. The reports of that, nothing else matters. And still no one around this table is interested. Up next on this program, real estate risks hitting bank stocks.
This appears to be not a capital issue per se, but really an issue of loan quality.
화이팅! 화이팅!
Well, I'm interested in the trip to Italy. I've made it very clear.
Okay.
I find it fascinating, the mechanics of it.
Good. The conversation on bank stocks up next, not Formula One. Live from New York, this is Bloomberg.
It's the JCPenney Valentine's Day jewelry sale. Save up to 70% off jewelry. Get lab-grown diamond rings starting at $299.99 and studs starting at $39.99. Let true love shine. JCPenney, make it count.
나스닥 쭉 떨어지고 있어. 2.23%로 지금 계속 떨어지고 있어요. 즉 매도로 들어가도 될 듯.
Business Week Radio. Live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Harnessing the power of Bloomberg Business Week. Carol Messer and Tim Stenevec bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
저도 들어가고 싶은데 지금 뭐 매도로 들어가야 될지는 아니면 매수로 들어갈지는 잘 감이 안 와요.
Live
한번 추천해보세요. 근데 나중에 이런 거 하지 마세요. 아, 제가 제 말을 왜 들었어요? 이런 거 하지 마시고요. 저는 제 감을 이번 주에 제 감을 못 믿겠어. 일단 오늘은 좀 주한 씨 말을 좀 한번 들어보는 게 어떨까 싶어요. 매도, 매수, 매도? 매수? 에이씨, 투자는 본인의 목숨이죠. 으야, 안 해. 재미없어. 안 할 거야.
warning of significant losses in US commercial real estate investments, while in Europe, Deutsche Bank more than quadrupled its US real estate loss provisions.
신기 떨어진
With us around the
님.
table this morning, I'm really pleased to
네,
say,
줍니다.
Bruce Vanson, the CEO of Citizens Financial Group. Bruce, good morning to you, sir. You've got a strong story to tell. We'll talk about that strong story in a moment. Can we just begin with the stress of yesterday and the stress of last year? Have we put behind the difficulties of last year for the rest of the banking sector?
Yeah, I'd say for the most part, everything's in the rearview mirror now. So there were a few idiosyncratic bank failures that related to the business model and how fast those banks grew, and then the stress caused by the Fed raising rates.
한 직만도 보고.
And so I think as the year went on, people could differentiate between the traditional regional banks and how well they managed and been able to handle their interest rate risk.
오케이.
And so
매수로 갑시다. 일단 모르겠고 매수로 가보고.
So yesterday's announcement on NYCB was a bit of a surprise.
조금씩 먹고 애매한 타이밍에 빠져나가면 좀 괜찮을 수도. 그러니까 해보지 뭐.
I think, in that particular instance, it was more than just commercial real estate because also as banks grow in size and they enter the new weight category, they have to do a lot around capital, liquidity, and funding. And so I think the regulators are having that bank deal with those issues, and that's going to depress the net interest income and profitability outlook, and so cut the dividend as a result.
제발 좀 올라가자. 조금이라도 소유를 봅시다.
Looks pretty good. The one area we're focused mainly on is the office sector, given the slower return to office trends, et cetera, combined with the higher interest rates, it's put a squeeze on that sector. But that's been relatively predictable and manageable for us. We have a certain number of loans that are coming due every quarter. We're looking through the front windshield at what's going to happen this quarter, next quarter, the quarter after that. And all of our people are working with those borrowers to come up with solutions that work for them and work for us. So we are charging off a certain amount of loans every quarter.
지금 계속 자꾸 볼 수밖에 없죠. 왜냐면 이렇게 짧게 가야 될 것 같아서 매수로 들어가는데 지금 빠져나갈 타이밍을 기다리고 있어요. 왜냐면 계속 올라갈 수 없으니까.
A valid reflection of losses that have yet to be taken down, not at your bank, but more broadly with the good actors and the bad actors and potentially even more regulatory pressure from Washington?
Yeah, it's hard to predict in the round how big that's going to be. Certainly, if rates come down as they're expected to, that's going to be beneficial to the commercial property space. And then if return to office picks up, which we're starting to see signs that that's happening, that could also be beneficial. So, real estate is very localized. So each building has its own story, it has its own rent rolls. I think what we've tried to do is stay very diversified and stay more in the suburbs and in the central business districts, stay more at the
왠지 괜찮은 것 같은데 지금 분위기.
class buildings and away from C-class buildings. So there's certainly going to be some pain based on location and the dynamics around the building and whether it's a C space. And so there'll be some losses. But I think for the super regional space that we operate in, I think all those will be manageable. we'll be able to deal with those reasonably well.
I wanted to ask about the geography. Is this idiosyncratic to New York? We've seen everyone, or a lot of places, move. People are going to Nashville, Miami, Denver.
보니까 좀 잘 들어갔던 것 같아요.
Markets like New York and San Francisco and Chicago probably have the biggest pain factor right now, but we're also seeing some early signs that leasing is starting to pick up, and the city feels better, feels more vibrant. So I wouldn't write off New York City.
You've been on the front foot expanding in New York City. Talk to us about that expansion. What are the plans for the New York metro area?
Well, I guess
제대로
almost 10 years ago.
들어가는지 모르겠는데 파전하고 싶어. 떨어지네.
Kind of had this hole in the donut, if you will, which was New York City. HSBC decided they wanted to exit their East Coast retail presence in New York. And then Investors Bank we didn't think HSBC by itself was enough, so we went out and called the so-called 1-2 punch and bought Investors shortly after we closed on HSBC.
조금씩 에피타이저로 맛보기로 시장 열기 전에 이렇게 맛보기로 좀 해볼까나. 오메. 좋네.
Well, the other thing that I think we've done in the past couple of years, which is pretty exciting, is last year we had an opportunity to lift out a bunch of teams that were leaving First Republic.
저기 좀 무서워요, 진짜. 어제 그저께로 그 중격으로 너무 조심할 수밖에 없어요.
Purchased an investment bank about 3 years ago called JMP Securities, which is a really
오늘 그냥 완전 소심하게 욕심을 부릴 거예요. 소심. 3만원? 딱 좋아요. 2,000원? 맛있어.
Everybody in PE, VC, innovation economy, and we can go in without the full ground game. In New York, we have the full ground game because we have the 200 branches. So a little different strategy, but interesting opportunity.
That innovation economy has been absolutely hammered.
제 느낌으로 제대로 올라갈 수도 있을 듯하네요. 저는 아직 감을 못 잡았어요. 지금은 약간 그 기사원 같은 느낌인데, 그러니까 지금 계속 계속 차트를 보고 있어요. 왜냐면 이 시간대 이 포지션을 계속 믿음이 안 가요. 그러니까 지금 다시 빠져나갈 타이밍을 기다리고 있어요.
Hopefully that just continues to flow through and it turns out to be a bounce back year in the capital markets.
We've heard a lot of this, Lisa. We heard this in Davos as well. The banking business bouncing back, coming out of recession, 24 into 25, 26.
But it feels like there's a lot of pent-up demand. I mean, how many PE investments haven't had their exits for a long time?
That's right.
We're hearing about that again and again. So the question is just whether the market will cooperate.
Bruce, you're going to stick with us, I'm pleased to say. Bruce Van Saun there of Citizens Financial. If you are just joining us, your equity market on the S&P 500 is slightly positive by 0.4% after yesterday's losses. Coming up shortly, Mandeep Singh of Bloomberg Intelligence previewing mega cap tech earnings due out
봐요. 지금 계속 똑같은 가격에 는 아니고 떨어지네. 그러니까 저 지금 조금 기다리다가 봐주려고 했는데 지금 좀 나쁘지 않을 수도. 왜냐면 너무 불안하게 지금 떨어지고 있어서. 근데 이게 뭐야 이거 10,000원밖에 없어. 뭐 지금 가져가기엔 좀 쪽팔리는데? 너무 쪽팔리는데? 뭐 물론 4,000은 마이너스보다 훨씬 낫죠. 훨씬 나는데 잠깐만. 타이밍을 놓쳤나? 뭐예요? 왜? 에이, 이거 아니지, 왜, 어떡하라고. 아하, 진짜. 역시. 역시 그 타이밍이었어. 이젠 다시 올라갈 때쯤 다시 기다려야지 뭐.
They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
이건 트레이드의 모습이 아니야? 전 트레이드 모습인지 뭐 이미지는 저 상관없고 제 돈만 중요해요. 오케이. 그렇지, 올라가자.
To the kabaddi tournaments in India.
To the cornhole boards at your local tailgate.
저는 이미지 관리 안 해요. 저 제 통장 관리만 할게요.
More studios in New York and San Francisco. Our expert hosts the data and analysis about the companies you know and the startups to watch. Plus the interviews you don't want to miss.
올라가자, 여러분. 힘 좀 주세요.
Bouncing back this morning, good morning to you. Equities positive by 0.4%. 2 days of weakness on the S&P 500. Yesterday, big time.
힘냅시다. 올라가자.
Biggest one-day move lower since October. This morning, higher by 0.6%.
킹스같이 또 떨어지네.
Making up about 12% of the index on the S&P 500. Apple, Amazon, and Meta reporting after the close. That's the equity market. Here's the bond market picture for you. The 2-year, 10-year, 30-year shaping up as follows. Yields bouncing back too here, Lisa, up 3 basis points. The 10-year 394.24.
가져나갈 준비 좀. 너무 불안해. 아니 안 되겠다. 조금 더 올라가면 그때 빠져나가야겠다. 진짜.
With his idea that we can continue disinflation even in the face of growth.
I like the Stuart Kaiser takeover at Citi. The Fed created some volatility without materially changing the base case outlook. Isn't that the truth that the last 24 hours or so?
You could basically say that they didn't give us anything conclusive that we didn't already know, but they pushed back a little bit just on the edges of market pricing, which is probably beneficial to their ultimate goal.
I'll throw in Peter Cheer as well of Academy Securities. I was just going through the reaction yesterday on the south side. While the punch bowl wasn't completely taken away, it was put out of reach. I think it would take the markets a day or two to accept that. We're accepting it this morning. Stocks are positive, yields a little bit higher. I'll finish on foreign exchange for you. The euro looks a little something like this against the dollar. We are just about negative on the euro at the moment. 108.15 on the euro. The pound, cable, 126.74, almost unchanged on the day now.
포지션이 제일 애매하네.
1%. Under surveillance this morning, central banks holding steady. The Bank of England opening the door to rate cuts.
애매하고 완전 기싸움 같은 포지션인데.
This on the back of the Fed's message, not so fast. Chair Powell saying,
근데 이겨내고 확 떨어지면 어떡해요? 제가 그 시작하고 나서 바로 이게 했잖아요. 오늘 왠지는 매도로 가야 될 것 같은데, 근데 내가 지금 매수 포지션을 계속 유지하는 거는 사실 바보 같은 짓인 것 같아요. 감으로 매도인데, 근데 손으로 그리고 마음으로 매수를 해버렸어요. 진짜.
How much does a rate cut grease the wheels for you, the business? Does 25 basis points get it down 50, 75, 100?
Yeah, I think he should go gradually because they don't want to have to turn about and then have a hike. So I think they'll put their toe in the water and start with 25 and do a series of 25.
Lisa, I asked this question because we always talk about March, the importance of going early, but ultimately, does it move the dial?
그러니까 이제 제 감을 좀 들어와야 될 것 같아.
Plan A business model says no. I like that you rattle it off like auction numbers. 25, 50, 75, 100. What gets it done? How are we doing?
아우, 저 이 자리 너무 마음에 안 들어, 진짜. 너무 거슬려. 이제 눈이 아파. 계속 쳐다만 보니까.
Some news out of Washington. Let's turn to that. The House passing a $78 billion bill that could hand President Biden an election year political victory.
모르겠다. 짜증나. 안 할게. 일단 안 할게. 오늘은 매도로 가야 될 것 같아. 일단 기다려보고 매도 타이밍을 기다려보고.
Well, it looks like it's on the path to potentially happen. I was struck by the vote count, 357 to 70. This is a House of Representatives that's been stymied with dysfunction, and they're able to get a tax bill done. But we heard from Chuck Grassley, the senator, talking about the fact from Iowa, talking about the fact that this would give Biden a huge win. And they're questioning why would we do that. But it's less controversial, say, than the border deal. So I think there is more hope for a tax deal.
Bruce, favourite part of the programme when we ask about politics and guests trying to ignore it. That's going to happen right now. 2024 elections, how important are they to your industry?
I think they're quite important. We'd like to see strong economic policy going forward and probably a little bit moderated.
걱정이랍니다.
But what I would say is the banking industry historically just
이번 주 진짜 감이 없어. 다 떨어졌습니다.
Certainly deal with another 4 years of Biden, and we could deal with 4 years of Trump, which we've already had in the past.
Are the proposals, though, that different? And I guess this is something that we've been talking about a lot in terms of the deficit and some of the, different policies that would come down the pipe. How different is it?
Well, the funny thing is, you don't really hear that much about substance and policy. When you see these guys talking, they're kind of throwing mud at each other, but they're not really telling us what they're going to do for the country and what the policies they'll affect.
There's a feeling we'll get a softer touch on bank regulation if we get another Trump presidency. Can we talk about the regulatory proposals on the table right now? What do you think of them? Do you think they appropriately confront the risks that we went through last spring? What do you think of them?
Well, I would say historically, anytime there's an incident or there's some turmoil, the regulators come with a toolkit, and usually the pendulum will swing too far, and then it needs to be dialed back. And I think we're going through that process.
일단 이런 포지션을 좀
how are you going to go about that?
이런 기싸움을 좀 견디다가 나중에 제대로 올라갈 때쯤 아니면 떨어질 때쯤 그때 타이밍을 잘 잡고 들어가면 될 것 같고 아직은 아닌 것 같아요. 애매하네. 이런 애매한 타이밍을 제일 싫어요.
Well, I think there's
기발려요,
still
진짜.
the residue of too big to fail. And so if you aren't sure, 100% sure, was this a broader regional bank crisis or was it just isolated to a few banks that grew too fast and had undiversified business models? You shoot first and ask questions later. So I'd take my money and put it in one of the mega banks, even if they're not paying me great rate of interest, but the government will never let those banks go down.
Deposit insurance. Do we need to see reforms?
In which
for deposit insurance.
Deposit insurance. I think it would be good if we could cover companies' operating accounts because they're not rate shopping between banks and they need those services provided to them. And so I think if those were covered, that would create more stability. But that's difficult to achieve politically, so I'm not optimistic that that'll happen.
That's the politics down in Washington, Lisa. I think the broader assumption right now is that they water down this proposal, much stricter, stringent capital requirements.
It's wildly unpopular, and it also is regional banks, they're going to see a lot more pressure if they have to comply with regulations that are fit for JP Morgan rather than just some of these smaller banks. And I mean, we already are seeing it with New York Community Bank. They had to change the regulatory capital in response to hitting a new bracket. Who's next?
So true. That's the banking sector. Let's talk about tech. Mega cap tech earnings resuming today with Amazon, Apple, Meta reporting after the close after a big year of gains. AI set to be at the forefront once again. Some analysts have perceived Amazon Web Services as lagging behind Microsoft and Alphabet in generative AI, two companies that failed to meet lofty AI-fueled estimates earlier this week. Mandeep Singh joins us around the table for more from Bloomberg Intelligence. Mandeep, good morning to you. Let's talk about expectations for later on this afternoon. What are they?
Well, so in the case of Amazon, clearly all eyes are on the AWS growth number, which is decelerated sharply if you compare it to Microsoft Azure at 30%. You're comparing it to 12 to 13% growth for AWS. And in the case of Meta, I mean, look, this is a company that had almost 80% drawdown, reclaimed its 1 trillion market cap, and now everyone is expecting, you know, they have course corrected. Metaverse has become a sideshow, and they're pivoting to AI, which they have. But they're still losing $15 billion a year on Metaverse, which nobody knows what they're losing on. So I think the call will be interesting to find out if that has changed.
Maybe they'll change their name to AI, right? It sort of will be the latest thing. I'm just curious, you know, how much we're going to see additional job cuts and things of that nature, because that was really what triggered some of the rally, was this sort of right-sizing, whatever that phrase is, that Meta put out there. Do you expect more of that?
Well, so they did pretty big round of layoffs last year, and my sense is they're done with the cost structure optimization. Now the focus is on top line, and look, they are expected to grow 21% this quarter, so that's very healthy. When you compare it to others like Snap and Pinterest, they're still growing mid to high single digit at best, and that is where there's a disconnect. Online advertising is a very cyclical industry. If these companies are growing north of 20%,
이런 끼싸움 생각보다 오래 가네.
Pinterest should catch up.
오래 가노?
I feel like in the case of Meta specifically, their user growth is low to mid single digit, engagement is low to mid single digit, but they're growing top line 20% plus. And that's a function of all the ad loads that they have increased. They're stuffing the feed with more ads. That's working for now. But clearly, there will be a pushback in terms of engagement. At least that's how I look at it. Like, it's not as if you can keep showing more ads and people will be okay with that.
We have a Bloomberg opinion piece out today from Dave Lee saying, when it comes to Apple, iPhone makers never face this many uncertainties at the same time. What does Tim Cook need to say today?
Well, so in the case of Apple, look, all these companies had a decline in EPS last year. When you look at Meta and Google, also had a sharp deceleration. Apple was steady. Look, they're not growing top line, but because of the huge buybacks they do, their EPS growth has been still steady. And the main concern around Apple is how do they grow top line because of the China factor. Look, the units are declining, there's no doubt about it, but they're made up with higher ASPs. They're selling the higher end phone more and more, and that has somewhat offset some of the unit decline. So it's about unit growth, and Vision Pro, it's a new category. I'm glad they announced a new category because for the longest time people were like, what's next with Apple?
왜 올라가고
There's
있어?
something on the horizon. I don't think it's going to be as big as your smartphone category, but at least there is something new to talk about.
Mandy, you talked about
올라가고
Android
있어.
over Google.
올라가지
You
마.
integrate AI. How's iOS going to do that in the years to come?
I mean, Apple hasn't even talked about large language models or generative AI.
Isn't that odd?
It is odd, but they've always been like that. Even when machine learning was the rate, they never really talked about machine learning that much. And so Apple does things quietly. They've done so much at the chip level, the vertical integration. So to me, they will catch up.
많이
Yes, they are
올라갔구나.
behind in technology. Probably have talked about this on your show. They need an acquisition. There are so many companies that are developing large language models. That would help. But the key concern is that services line. that is the profitability driver. And over there, half of their revenue comes from App Store. That's coming under pressure from EU, saying you can't. And to me, that is the part that worries me the most with Apple.
Bruce, that's Apple. Let's talk about AI. As a bank, how are you integrating some of these new technologies that we've all been talking about over the last year?
Yeah, so we have an AI group inside the bank, and we're looking at launching. We've already launched 3 or 4 use cases, which allows us to start to test and learn. So, for example, how we
이 사람 진짜 환산. 이거 눈이 목숨이죠. 근데 나중에 내가 얘기했잖아요. 안 들을 거예요. 안 들을 거예요. 제 선택입니다. 얄미워 죽겠어요. 제가 알아서 할게요.
Cost efficiency is going to ring some bells in people's
봐요.
minds in terms of
지금
how
확
many
떨어지고
people are not
있잖아요.
going to have a job because of artificial intelligence and how it changes the mix of the people you'd hire.
Yeah. Well, what's interesting, I just look at us citizens since we to our IPO, we had about 18,000 people in the company. We've done several large acquisitions, and we've also just grown organically, but we still have 18,000 people.
저는 고집과 승부욕이 되게 센 사람인 것 같아요.
I'd like to, be on this journey of continuous improvement, where we can take out more manual processes and then we can reinvest in things that help us grow the bank and better serve customers. So I think that churn is what you're going to see. I'm not sure you're going to see a big reduction in employment, but you'll see different kinds of jobs inside the bank.
I think it was Jamie Dimon who talked about working fewer days in a working week.
3.5.
3.5?
That's what he said. Yeah, I was looking at it, so I was like, if he's going to lead the way,
I can't think of any time in human history over the last 100 years where we've taken a technological advancement and worked less. We've just taken that productivity boom and worked even more with it. Is that going to change?
Yeah, no, I don't see it. I mean, sometimes Jamie just says some things to be amusing. I don't think he probably in his heart of hearts thinks that's going to happen, because people, this country has a high work ethic. We're very industrious
올라갈
people.
길이
If we gain a
있으면
little more
떨어질
free time, we
길도
figure out, what else can we
있으니까
do with it?
Totally.
A lot of times it's not sitting by a pool,
지금
it's being out on the golf course.
계속
It's like,
올라가자.
let's get on to the next kind of business that's interesting. Let's innovate. Let's do some more great things.
We're on the same page. I feel exactly the same about this. It's human nature. It's human nature. Three-day work week.
Okay, it's not going to happen. But what's going to happen is some people are going to work a whole lot more, and some people are going to struggle to be employed.
True.
And I think that really is what I think maybe needs to be focused on.
Needed that Brahmo-esque take on it, and that's absolutely right.
So
Mandeep's good to see you. Mandeep Singh of Bloomberg Intelligence. Let's get you some more stories elsewhere this morning. Here's your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hi, John. Boeing CEO Dave Calhoun has admitted the company caused the problem behind the incident that saw a door plug blow out during an Alaska Airlines flight. Speaking on the company's earnings call, Calhoun said an investigation into the cause is still underway.
조언을 항상 물어보고 있는데 모르겠어요. 눈이 목숨이죠. 윤희는 조이스잖아요. 계속 이러고 계시잖아요. 이제 안 들을게요.
To poll users on the change before saying Tesla would soon hold a shareholder vote. It came after a Delaware court voided the CEO's $55 billion pay package, calling it excessive. He's already moved Tesla's home office to Austin and relocated himself and his charity to the state. Universal Music Group has begun pulling its artist music from TikTok after failing to reach a new licensing deal. That means TikTok users will have to find alternatives to music from the likes of Taylor Swift, Drake, and Bob Dylan. In an open letter, the world's biggest record label said negotiations stalled over disagreements on compensation for artists and protections against AI tools. That's your Bloomberg Brief. John?
Yahara, thank you. Up next on the program, regional bank stocks under pressure.
I do think that overall regional banks are going to be weak in the months ahead on the back of this news.
That's coming up next, live from New York City. This is Bloomberg TV.
허허허 좀 떨어질 수도. 매도 준비 중.
And/or you just get invited onto the board. You go to your first board meeting, and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, first of all, we don't bring that to the board. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the board. We try never to solve an issue in a board meeting. It's always best done the day before, the week before, outside that. We wouldn't be there if they
조금 더 떨어지면 들어갈 수도 있어.
So it's really hard for them to straight face and tell us they're doing well. And we presented with a plan.
A lot's happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts.
일단 해봅시다. 모르겠다.
We've got the information
잘못하면 어쩔 수 없고.
And words like that get used a lot.
from business's most influential and instrumental.
America's economy needs a diversity of institutions. That's something that Wall Street pays a lot of attention to.
잘 되면
Wall Street
좋고.
Week, live Friday with replays all weekend on Bloomberg Television and Radio. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month.
Equity futures near session highs on the S&P 500 up by 0.5% on the S&P. Yields a little bit higher by 2 basis points on the 10-year, 393.49. And the surveillance this morning, regional bank stocks under pressure.
In some ways, it's easy to say that New York Community Bank Corp stands alone, and that this is a
지금 매매하는 모습이 약간 화자 먹는 모습처럼 조금씩 먹고 요리 제대로 식사하기 전에 조금씩 먹고 있는
Here's the latest this morning. Wall Street scrambling to take the temperature of US regional banks following a dismal earnings report from New York Community Bank. The bank sliding a record 38% yesterday after saying we'd have to hold more money to cover losses in commercial real estate loans. Chris Marinac of Janney Montgomery Scott writing this: every bank above 100 billion in assets must plan for tougher capital standards. We think the bank credit cycle is still early innings and more issues will unfold. Chris, I'm pleased to say, joined us now for more. Chris, let's get into it. First question, do you think this is a New York Community Bank Corp issue or a banking sector issue?
John, I think it's a bank sector issue. Every bank has a certain amount of problems. We call that the frequency of problems. We think that will rise the next 2 years. It's still early innings in the process of recognizing credit risk. And then we transition to the severity of losses, which I think will be lower than investors fear. But the problems and the recognition is still happening. That's exactly what happened with New York Community, in addition to their decision to cut a dividend and in addition to build more liquidity.
Is your concern centered around
엄마가 식사 먹기 부르기 전에 빠져나가고 그리고 조금 있다가 다시 제대로 식사하면 돼요. 이것도 그냥 에피타이저.
Sure. Every time we go through a credit cycle, whether it was in the early 90s, the early 2000s, the most recent great financial crisis, all of these times you have to recognize risk, set up reserves, and then take the losses. So I think the concern is across the board. I think it varies by the type of loans you do, but it's not just commercial real estate. It's going to be typical C&I lending. It'll be some consumer. It'll eventually be residential if prices come down in residential down the road. So I think we have to be prepared to recognize risk, build reserves, and then eventually take charge-offs. I think the ultimate charge-off rate is going to be a lot less, but I think the recognition of issues is still happening. And I think it's particularly keen in certain commercial real estate types like multifamily, which have been pristine and are no longer pristine. And that's sort of the exact prescription of what NYCB had to recognize, but I think they'll do more of that in the next 2
조금
quarters.
더 올라가면 바로 바이바이야.
Repair as time passes. A lot of these borrowers are stressed by higher interest rates. If interest rates back off just a little bit on the 5-year Treasury, for example, it's going to make life a lot easier for them to get through, and that would be how I think this plays out.
Bruce?
Yeah, Chris, nice to see you. But I guess what I would say to that is that, the traditional super regional banks all reported in the last 2 weeks. And really, they're pretty optimistic. Like
에헤이, 설마 또 올라가나요?
But then things should pick up in the back half of the year as the economy gains some steam and the Fed starts to cut. And in terms of credit, folks were kind of giving charge-off guides that were pretty manageable.
또
We've already built a lot
밀당하네.
of credit reserves. So I would say the markets have responded favorably to that. And and to me, I would view New York Community as an idiosyncratic one-off. They attempted to do a lot in a very short period of time, buying buying Signature Bank, lifting out a bunch of teams, and so they're like acclimating to kind of that bigger size and all that goes with that. And they did have a very strong commercial real estate focus.
헤헤이,
The
놓쳐버렸어.
dynamics around that and had a very high loan-to-deposit ratio. So there's still actually more work for them to do. Traditional banks kind of hurt us last year when people called it regional bank crisis. It was the West Coast banks that
정보를 안
grew
했기
faster, more
때문에
diversified.
지금
That's
조금
where the problem lied, and then it's built by
방향을 가고
association.
있는 것 같아요.
If you have a similar asset size, you must have the same problems. From where I sit, we don't have anything like the same problems, and I think you'll see that 24 will be a year that gains steam as the year goes on, and we're setting ourselves up for a really strong 25, 26, and 27.
So Bruce, I agree with your points completely from the standpoint of low charge-offs, and I think the particular issues that set up with SVB and First Republic and Signature last year. But the only point I would kind of contrary is that as 10Ks are filed in 3 or 4 weeks, I think we're going to see the criticized assets do go up from September to December. And that's really more of loans that used to be pristine that are now on watch lists or downgraded to substandard. It doesn't necessarily change the charge-off guidance, and I think the point's really well taken. Charge-offs are still low and expected to be low. Even the largest banks with big consumer books are going to have 45 basis points in losses this year, and that pales to the 150 to 200 points that they wrote off in 2009, 10, 11 when they had these extremely high loss rates. And I don't see that happening at all. But I think it's the recognition that pass-rated loans become non-pass, i.e. criticized, and that's where the reserve building still has to happen. Obviously, in New York Community's case, they had to catch up from used to be 40 basis point pre-signature to now being 80 and then now at 125, and that brings them back to peer. And because they're graduating to $100 billion today, they have to be a peer. That was the primary change that the reserve related. But the liquidity piece is still ongoing. My concern is the Fed's liquidity stuff is going to continue to throw curveballs at the industry.
Hey Chris, great to catch up. Chris Marinac there of Jenny Montgomery Scott. Got about a minute left, Bruce. Your final thoughts on that?
Well, the one thing I agree again with some of that perspective, but
오케이. 또 들어지네. 역시 음악의 힘인가?
I actually think that we're starting to feel more positive that we've identified where the issues are, and they're not continuing to grow as we go through 2024.
Interesting. Bruce, it's good to see you. Thanks for being with us. We've got to do this again. Bruce Van Silver of Citizens Financial, just sort of flipping the table, Bramo, and taking on the analyst.
I love it.
The analyst taking on the bank.
It's perfect. It's
I've got
actually
time for that
really,
as well.
Yeah, that's I think we're very valuable. Shoot again.
Got to work it out, haven't we? This is a big issue we've been talking about now for about 12 months.
지금 여태까지 여기까지 또 떨어지면 저는 만족합니다. 아하, 또 올라가네. 참.
Let's set the stage for the next hour on Bloomberg Surveillance. The third hour just around the corner. Coming up on the program, Mike Wilson of Morgan Stanley, Herman Chan of Bloomberg Intelligence, Stephen Stanley of Santander, Pierre Farragut of New Street Research on tech earnings. A little bit later, the reaction to the Federal Reserve, the stress in the banking system, if you think there is any, the stress in the banking stocks of yesterday. We'll build on all of that. Equity futures right now on the S&P 500 positive by 0.5%. It yields a little bit higher by a basis point or two. On your 10-year, 392.92. From New York City this morning, good morning. The third hour of Bloomberg Surveillance. Up next.
Keeping the faith in billionaire Warren Buffett. The legendary investor turns 93 this August. His signature must-read letters to shareholders have been getting shorter and shorter. This year's letter contained few fresh ideas. But most investors in a Bloomberg survey say Buffett's steady Eddie approach of buying cheap, safe, high-quality companies will beat the market. They expect returns in his investment company, Berkshire Hathaway,
아 설마
over the next
설마
5
꺾기
years,
싸움이야?
adding to an incredible run in which Berkshire shares have returned more than 3 million% in the almost 6 decades Buffett has led the firm. Investors are also willing to pay up for Berkshire, which owns everything from the railroad
일단 모르겠다.
and car insurer Geico to See's Candies and Coca-Cola.
모르겠다.
About 1/5 quantified Buffett premium at more than 10%
조금씩 이렇게
More than a
먹었다니.
quarter say it's somewhere
아이씨.
between 5 to 10%. There is one problem for Berkshire Hathaway.
아
its
진짜.
size. Thanks to a bunch of cash-generating insurance
왜
companies,
나갈 때마다
Berkshire has at least $130 billion
이지경인데.
that it
어?
can put to work. But it needs big
아니야
acquisitions to
그래도
move the needle.
4만 원이야.
Buffett calls it
괜찮아.
hunting for
괜찮아.
elephants. And
좋네.
we know Buffett hates overpaying. So that means sitting tight, patiently waiting for the right moment to pounce on the right company, which might be a drag on performance for now, but as Buffett fans know, usually works out in the long run.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show.
전 분명히 얘기했어요. 저 에피타이저로 하는 거예요. 식사를 나중에 할 거예요.
Only on Bloomberg Television. Context changes everything.
그래도 아직은 수익을 많이 아니고 수익을 벌었어요. 마이너스 아니어서 다행이다.
We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
Right.
so it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right? And making sure you have the right amount of people at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
Bloomberg UK, your
전
source
하나도 안 따가워요.
facing the UK
저는 만족해요.
financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
This is Bloomberg.
Markets have been rallying strongly, not just in mega cap tech, but broadly speaking, over the last 2 or 3 months.
This has been more than a tech-driven rally. It's just tech has sort of over-rallied versus the rest of the equity market.
It's absolutely critical that tech can hold up here. We still have the AI preference, and Magnificent Seven is expected to grow their earnings by 21% this year.
That's where we think the excitement will come this year as we see more efficiency coming through for tech stocks.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
90 minutes away from the opening bell, live from New York City this morning. Good morning, good morning. For our audience worldwide, this is Bloomberg Surveillance alongside Lisa Rabbits together with Anne-Marie Hordern. I'm Jonathan Ferro. Your equity market bouncing back by 0.5% following the biggest one-day loss on the S&P 500 since September after Chairman Powell pushes back against March rate cut calls.
Okay, so he pushes back on one hand, but he giveth to the rest of the year and sort of suggesting that he believes in the immaculate disinflation. So he taketh and he giveth, because right now people are expecting the Fed to cut rates this year. He confirmed that. The question is just when they start.
Throw in a bit of backstop stress of yesterday. Still can't believe this. Need to go over it again. Why wasn't that talked about in the news conference? It was dropped from the statement. Clearly, it was a big part of the move in the bond market in anticipation of the Fed decision going into the news conference, and then tumbleweed for about 60 minutes. No talk of it whatsoever.
A lot of talk about other things like the terminal rate and some of the inflation concerns and some of the idea of the strengthening economy. The issue here is this idiosyncratic or is it systemic? Have we seen the full effects of correction in commercial real estate prices, especially given the incredible overweight that a lot of these regional banks have had? So you guys know what I think. No journalist was going to come out and waste a question on something that was just developing when they know Jay Powell's probably going to say, I don't have enough to really have a substantial statement to say on that, and likely he would say this is idiosyncratic to this New York Bank.
Is it idiosyncratic? Commercial real estate stress, unrealized losses, provisions? How idiosyncratic is that going to be?
It's idiosyncratic in the sense that each loan has its own issue, but the fact that you've got Barry Sternlicht coming out and talking about $1 trillion of market valuation losses on some of the office-based real estate market that could be near $3 trillion before the pandemic raises some concerns. Who's going to be left holding that?
If you get enough idiosyncratic issues piled on top of one another, you've just got a big issue.
Okay, I think that's called contagion. Well, okay, but it might be contagion that's already priced in. I mean, it's not exactly as if the KBW regional bank stock index has been absolutely flying. I mean, it's been decimated. So how much has already been baked in at a time where arguably we could be getting people back to work, everyone's calling everyone back to the office, the UPS saying everyone back in.
I said those headlines,
이거 많이 들어지네. 아유.
People haven't gone back to work yet. That's still a thing.
Get back to the office, Jonathan Farrow.
Kind of bizarre.
Describing. I know, but this is a shifting kind of sphere where people are realizing.
If you want to succeed, no, I'm not going to do that. Equity futures on the S&P 500 just about positive 5.4%. We are just a little bit firmer. Yields high by a basis point or two. No one needs that, Lisa.
와, 야 이거 뭐야? 어디까지 떨어져? 어디까지 떨어져? 와.
January payrolls report and New Street's Pierre Ferragu looking ahead to Apple earnings after
설마 과연 내 말이 맞았나? 오늘도 매도인가?
Morgan Stanley's Mike Wilson writing this. The data tell us growth and inflation are slowing directionally, and the Fed will be easing this year as a result. Under such conditions, quality growth outperforms. When in doubt, it pays to go with the highest probability winner. In this case, it's high quality growth. Mike, I'm pleased to say, joins us now for more. Mike, it's good to see you.
Yeah, great to see you guys.
Good morning. Fantastic to have you with us around the table. We'll get to stocks in a second. I want to talk about the outlook. A convictionless outlook is a theme in a recent note of yours. How convictionless are things right now?
Well, look, we spend time with clients all the time. That's what we do for a living. And I would just say that we had this big rally after the pivot, and I would say it started with the Treasury squeeze when they said they're going to issue less coupons. So it was really a duration rally that then fed into a stock rally. And so now we're
그때까지 떨어지다가 그리고 갑자기 슉 올라갈 수도 있어.
A couple things that will determine the direction. Number one, what is the
찬란식으로 매수로 들어갈까?
We'll come back to the banking question. I think that's to me that issue it's not a systemic issue. What it is it's a weight on credit growth. Okay, like the regional banking systems just not lending at the same rate that they were because they're constrained, and that's been our view all along. Which means quality stocks will continue to do better. Right, the companies that are reliant on that kind of funding are going to continue to see that's a paperweight for them, and I think that's the main takeaway from the banking situation. And then of course new themes were last year was about two main themes. Right, it was about GLP and AI. So can those two themes continue to drive the stock market? Yeah, to some degree, but it's probably going to morph a bit, and then there'll be new themes. And I think that's what investors are looking for now, looking for new themes to kind of latch onto in a world that's going to remain macro uncertain.
Can you identify any themes right now?
Well, I mean, I think the AI theme is the one, instead of enablers, we're going to adopters. right? So that's probably the biggest thing we have as a firm. The GLP-1
아하,
is sort of
이게
positive and
애매하네.
negative as we've seen, and that's a great thing
어디로
for all
갈지,
sorts of investors. And then
갈지,
I'm wondering if we're going to
갈지.
get some growth out of the international markets finally. The international economies have not really
재밌네. 일단 매수로 조금 더 들어가 볼게요.
that could be a great thing for EM. It could be a thing for things that are levered more to global growth as opposed to just the US, which has really been the only end of growth.
Since you say that you fly around and you talk with clients, I was just noticing some of your recent travels recently in Miami.
오늘의 방송 컨셉은 에라 모르겠다야.
Magnificent Four now, and it's related to earnings. Who are the Magnificent Four? Who gets dropped?
Yeah, well, I mean, I think it's, we're not talking about specific names, but I think it's obvious. People have been talking about this too. I'm not the only one, right? We're seeing, you can identify which stocks have fallen off.
오늘 왠지
And I would say there's a Magnificent One, quite frankly, that has real
길이
top-line
보이네요.
acceleration
길이
growth
보이긴
that
하는데
is. And then the other ones are a bit more cost-cutting
길이
stories.
반만 보여.
And
약간 여기도
my sense is that what we're going to see
여기까지만
here
보고
is a broadening
끝!
out in quality growth. In other words,
나가버리고
when we do our screens on quality growth,
이렇게까지 떨어지고 참
is in IT. Another 10 or 12% is in comm services.
재밌네요.
So there's another 60 to 70% of the S&P 500 that kind of qualify for that high
일단
quality
봅시다.
bucket. And that's what should happen. We should broaden out if we have a soft landing that doesn't have other issues. And that's the other thing that we've been really trying to help clients with is give them a framework on the macro. That's what we do. And say here are the three buckets. Okay, soft landing with decelerating growth and decelerating inflation. That's kind of what we had last year. It's high quality growth. A soft landing with accelerating growth and maybe stickier inflation. And that's an environment where we can see a broadening out, perhaps to lower quality areas. And then the third scenario is still a hard landing. I mean, we can't eliminate that. And I think that's going to be how, that's going to determine how you position your portfolio from a stock standpoint.
How do you hedge if you are cautious and there is this uncertainty? Is it energy stocks? Is it more duration sensitive stocks? I mean, how do you even understand what it
과연
means
오늘의 내 감이 어떤지.
Diversification. You got to be diversified. Now, one of the things we talked about at this conference as well, which didn't make the headlines, is this idea that we finally have very
사실
attractive real
지금
rates.
제 감을 트레이닝 하는 중이에요.
This is the first time in 15 years where you can bonds actually provide their diversification benefits. And we saw that yesterday, right? Bonds rallied, stocks were down. So, we're very bullish we've been bullish on duration since 490, 10 years. I mean, so here we are, whatever, it's probably not as good a value, but in the event that something systemic does happen, there's another shock to the economy, that bond portfolio now the yields are high enough where they can actually provide some diversification to your equity risk, which means you can take equity risk, still up the quality curve, okay? So it's a diversification between stocks and bonds, and then understanding what within the
오늘도
equity
제
market you
감
feel more comfortable
트레이닝이
with. If
잘 안
things get better
되면
on the
그럼
economic front,
앞으로도
and we see better growth, then we can go
답이
after risk
없어요,
and equity.
진짜.
Take more equity risk as long as we have that duration benefit.
그래도 제가 많이 떨어지네. 제가 한 2주? 3주인가? 저 이제 헷갈리네. 2주 반 정도 이렇게 해외 선물 하다가 제가 좀 260? 지금은 260 정도 벌었는데 뭐 나름대로 좀 나쁘지 않은 것 같아요. 좀 나쁘지 않을 것 같기도 하고 근데 진짜 더 이상 못 벌면 더 이상 계속 손해를 보면 이게 진짜 제 길이 아닌 것 같아요. 제가 초보자라서 우리 초보자들한테 운도 따라오잖아요. 네, 어느 정도 맛을 하다 보니까 이제 초보자 아니고 중보자. 그러니까 진짜 더 이상 안 되면 하면 안 될 것 같아요.
Okay. Now, one of the things that worries me a little bit about AI in the short term, we've seen a lot of layoffs recently within the tech sector. So, maybe these guys are already seeing the benefits and they're able to remove headcount. So, the labor market, I think there's various views on the labor market. I mean, our view is it's slowing, it's weakening. A lot of government jobs, a lot of healthcare, social worker type jobs, which are somewhat government related. And if companies get a fish, this could be an interesting catalyst actually for more layoffs potentially. So it's going to be uncertain, right?
Okay, I just have to ask this because I get messages all the time. You're such a downer. Why are you so pessimistic? When you go around and you're talking to different clients, how much pushback do you get to just sort of a more realistic view of the potential risks, given that only the rosiest seem to have come to pass?
Well, look, I mean, our clients are active managers, right? So they're not worried about the S&P 500. They're trying to find what works. I mean, for all of the headlines we get around the S&P 500, I mean, what we usually talk to clients about are individual sectors and stocks and like what's going to work. And so, like last year, we get an F on S&P, but we get probably an A or B on being in the right places in the market. And that's our job, and that's what active managers are trying to do. So you don't have to be super bearish, it's not about being bullish or bearish. It's about being bullish in certain parts of the market and opportunity, and being cautious or concerned about others. And look, last year was a really great stock picking market. Most stocks, up until October 27th, had a tough time. And then we had this little rally at the end of the year. And we've been very consistent about this
시간을
over the
못
last
보고
12 to 18
그냥
months, as you guys know.
차트만 보고 있었을
We don't think
텐데
the trade is to then go to the lower
차트만
quality
보고
bucket,
있었는데
to go for the low quality
그때
cyclicals. Like that's a
10시
recession trade.
30분쯤에 발표가 있는데 와 계속 떨어지네 진짜 짜증나게. 아무튼 10시 30분에 발표가 있는데 그때까지 상황이 나아지지 않으면 또 고생을 해야지 뭐.
People hating on you for being gloomy?
Oh, yeah, all the time. It's okay. I mean, honestly, I actually don't think I'm all that gloomy. But sometimes...
Not at all, Bramo. Not at all. That brand is so unfair. I agree.
결국엔 큰 그림을 봤을 때 제 말이 처음에 말이 맞았어요. 오늘은 매도.
Hi, John. EU leaders struck a deal to send 50 billion euros in financial aid to Ukraine. The agreement happening after Hungarian Prime Minister Viktor Orban lifted his veto on the package. Under the deal, EU member states agreed to debate the implementation of the aid package.
카지노에 마카라도 매매도 왔다 갔다가 항상 잘못될 수 있습니다. 그러니까 좀 카지노를 안 해요. 카지노는 진짜 거기엔 완전 제 길이 아니에요.
Prime residential prices likely to fall more than 10% amid high interest rates and political uncertainty. New York and San Francisco are facing similar headwinds, with both cities impacted by remote work and low return to office rates. Workers in transportation and warehousing took home record pay in the last quarter, according to new data from the Bureau of Labor Statistics. Employment costs in transportation jumped a record 6.3% in the fourth quarter from a year earlier. Meanwhile, factory workers fell behind. Their pay climbed just 3.7%, in the biggest gap between the two sectors on record. That's your Bloomberg Brief. John?
Yahara, thank you.
진짜 짜증나요, 진짜.
Rising concerns facing regional banks and commercial real estate.
I'd say, for the most part, everything's in the rearview mirror now. So yesterday's announcement on NYCB was a bit of a surprise. I think that's an outlier.
Live from New York, that's coming up next. You're watching Bloomberg TV.
결국엔 제 말을 계속 믿어서야 됐어. 그냥 발표 때 결과가 좋았으면 좋겠어. 일단 지금 이 희망밖에 없어요.
Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Today, I would say perhaps only second to AI right now, which is AI has got so much going on and folks are so excited about it. Climate change is
안 되면 완전 잘못할 수밖에 없죠. 와우, 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 어디까지 내려가? 와우.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Live from New York City, equities doing okay, 1 hour and about 14 minutes away from the up and about, positive here by 1/3%. Yields higher by almost a basis point on a 10-year, 392.17 on a US 10-year this morning. Under surveillance this morning, rising concerns over regional banks and commercial real estate.
I'd say, for the most part, everything's in the rearview mirror now. So there were a few idiosyncratic bank failures that related to the business model and how fast those banks grew, and then the stress caused by the Fed raising rates very quickly. So yesterday's announcement on NYCB was a bit of a surprise. I think that's an outlier.
Here's the latest this morning. New York Community Bank Corp plunging as much as 46% yesterday after the bank's loan loss provision surged to $552 million. The bank took on part of Signature Bank last year during the crisis in regional banking, including a pair of troubled loans for a co-op complex and office space. Herman Chan of Bloomberg Intelligence joins us now for more. Herman, good morning to you. New York Bank community problem, or is it a banking industry problem?
It's more of a New York Community Bank issue. It's indigestion from the Signature acquisition. They cleared the $100 billion in asset threshold, which ushers in higher regulations.
Okay.
They're conducting the stress
희망이
test
있어.
with the rest of the larger
뭐 물론 엄청 많이 떨어지긴 했는데.
City banks
여기
later in this year. So it seems
그러니까
like
어제
the whole issue
들어봤어.
of cutting
기억이 안
the
나.
dividend, increasing the loan loss
몇 주쯤?
to better put themselves in a place to pass the test.
You know why they spooked investors? It involved commercial real estate. We saw provisions up at a Japanese bank overnight, saw the same thing from Deutsche Bank. We've seen this a few times now, and that's going to get people worried. We're going to see more of it.
Right.
Do you not share that concern?
There is still concern because we haven't really seen the real pickup in commercial real estate defaults yet. That's what happened later this year, 25, 26. So it's going to be a long cycle when we see charge-offs really affecting the industry. But overall, the banks have been reserving against the eventuality of higher loan losses.
Mike Wilson of Morgan Stanley is still with us, and I'm wondering, you were talking about how the real issue is credit being constrained. How much of this is all priced in, though, already, given how decimated regional bank stocks have been?
Yeah, well, once again, I'm more focused on the impact on the broader economy. Okay, so you could also say that small caps have underperformed for part of that reason. Okay, but we do have a refunding need over the next 12 to 24 months across the broader economy. Even these are private companies too. So to me, that's the thing to watch. We have C&I loan growth now, which is basically flat on a year-to-year basis. Does that go into negative territory? That would be my main concern. Now, maybe that changes. Maybe these write-offs are going to be the catalyst to get regional banks to say, okay, we cleared the decks, and now we can start lending again. That's a possibility. But this is a
4만 원
live
벌었는데
situation that's going to weigh through earnings, and this is another reason why we're just going to be slow in terms of making that move to small cap.
I don't know, when you analyze some of the underlyings in the balance sheets, do you find that loans are really slowing and they are having some sort of constraints on how much they can extend?
Yeah, so in the fourth quarter reporting for the regionals, loans were flat across the board. And really that's a function of banks have pulled back a little bit in terms of shoring up their capital in their balance sheet. And second, it's not a lot of loan demand given where interest rates are. So across the board, management teams have talked about less demand from business borrowers because of high rates and less need to invest, being a bit more cautious from their commercial borrowers.
Since the pandemic, Bramo, there's just been this feeling that ultimately we're not going to see the credit stress we would see in a normal cycle because of these massive transfers we saw from the Treasury to individuals, individual balance sheets, household balance sheets, super strong. We saw the same thing with corporate balance sheets as well. They termed out all this debt, super low interest rates. Do you think, Mike, that we could get through a cycle without credit stress? And I think that's why we keep going back to commercial real estate, because it's this one part of credit which we can identify as a problem area. Do you think it is the problem area to focus on?
No, I don't. I mean, I
그때까지
think
상황이
commercial real estate
나아지지
usually is a
않으면
kick the can type situation. I mean, we had probably
나아지지
a much bigger
않으면
CRE problem in
그냥
the 80s. It took 12 years. We had two
결과에 기다릴
RTC1,
수밖에 없죠.
RTC2. I mean, so my guess is it's going to be a situation where, once again, it just constrains the ability for the banks that have these loans to lend to other businesses. Now, your other question, I think you laid it out right, which is that there was just so much savings created in the pandemic that has allowed the consumer to avoid the typical kind of credit cycle, and because they termed out their debt. Now that may morph itself. Now, look, the cycle's not over, right? So eventually there will be a credit cycle. Okay, is it this year or is it 3 years from now? That's we don't know. But we're moving in that direction. In other words, we're past the midpoint, right? Credit situation, credit conditions are tight. They're tight. So that's late cycle, and that's why we think the quality trade is still the right place to be.
You mentioned the banks. Let's just sit there just for one further step. It's going to hinder their ability to finance the economy. Got that. That also means that it's going to be a massive headwind to profitability, surely, for the sector. Would you extrapolate that right out through the whole banking sector, or just for a small group of banks, regional banks, smaller banks?
I mean, the market's been really efficient, and I mean, not just in the banking sector. It's like all over the place. I mean, this is why the Mag 7 did so well last year. They were the only company really showing positive earnings revisions. We have the data. I mean, so I think the market has done a really good job of idiosyncratic risks are being priced. To your question earlier, is it fully priced? Well, it's getting priced. You know what I mean? Like, but stock by stock. It's not systemic. And we're going to see more of these. I don't know which ones, but there's going to be more situations where there's going to be some winners.
희망이 있어. 일단 계속 기다려볼게요.
Idiosyncrasy, excuse me, I'll get my words out, of the moment. We were just talking about $100 billion in assets being a threshold for some new regulation that could force some of these write-downs. How many banks are on the precipice of that $100 billion in asset kind of level?
Right. So there's going to be two new banks that are going through the stress test this year. New York Community, which wants to intervene, and First Citizens, which wants XBB. So those are going to be new participants. First Citizens has a much higher capital ratio versus New York Community. So it is in a bit of a better standing heading into the stress test. And then there's a couple banks like Comerica and Zions that are in that 85 and 90 billion range. And what I would say is that they're not really growing their balance sheet at this point in the cycle, and so they have some runway, maybe 2 or 3 years before they pass it. So they've got more time to develop their systems and processes before they undergo.
Lemon, good to see you. Lemon Chan of Bloomberg Intelligence. Got some time for some final words with Mike Wilson and Morgan Stanley. Mike, you mentioned this a little bit earlier in the conversation. Let's build on it. International. It's just felt like that the only game in town has been US tech stocks and Japanese equities. I think someone said that on the programme yesterday. Does anything else take your interest on the international stage?
Well, I mean, Japan is international. Yes, it has been our favorite region for the last couple of years. But a lot of that's currency. So I think the risk on the Japanese trade probably is currency, and that usually does move markets. So if the Fed gets more lenient this year, right, the dollar will probably weaken at some point. The question is, which currency is the beneficiary of that? That's going to be a big switch. Usually that's good for EM broadly, and China has its own kind of story. So EM, I think, is going to be idiosyncratic as well, but I do think EM is the place to be when the dollar starts weakening, but we're not there yet.
Where does Europe fit in?
Europe is Europe. I mean, it's just not that exciting. They're kind of hovering around recession. They're not in it. They're not out of it. It's just low growth, unexciting. I mean, if there's things going on around the world, people choose to go somewhere else. I don't see why that changes. I just don't see that changing.
I don't take it personally, Bramo. Christine Lagarde might over at the ECB. We'll see.
All I can say is I love that there's the FANG in the United States, there's the granola. It says everything. Europe, exactly.
Europe's going to Europe.
Europe is Europe.
분위기가 좀 나쁘지 않은데? 일단 기다리는 동안 화장실 좀 갔다 올게요. 같이 일단 같이 지켜보시죠.
But those gains fade just a little bit this morning, Lee. So the 10-year is back down to about 3.92.
Yeah, when people take a look at the actual statement, basically this is a Fed that's poised to cut. It's a matter of when, and I don't know that it matters all that much for people who are looking at a 2-year horizon. Maybe if they're looking at a 1-month horizon, it matters a bit more.
We'll get the thoughts of Stephen Stanley on that 1-month call and a 2-year call as well. Stephen Stanley of Santander looking ahead to tomorrow's payrolls report and reacting to the Federal Reserve and chairing the Pound News Conference yesterday. Live from New York City. This is Bloomberg.
오케이. 좀 분위기가 나쁘지 않은 것 같은데 발표 5분 전인데 5분 전 아니고 3분 전인데 지금 나갈까? 마이너스 7만원인데 근데 20만원이 아니잖아요. 그냥 지금 나갈까? 아니면 계속 기다려야 되나? 잘 모르겠어. 진짜 완전 멘붕 상태. 그냥 지금 빠져나갈까? 빠져나가고 그리고 나중에 또 괜찮은 타이밍이 있으면 다시 들어가고 다시 수익을 보면 되죠. 일단 나갈게요.
The EU is one of the largest and wealthiest consumer markets in the world, and there are very few global companies that can afford not to trade in the EU. So as the price for accessing the European market, these companies need to obey European regulations. That's not surprising. But often these companies choose that they will extend the European standards across their global conduct and their global production because they want to avoid the cost of complying with multiple different regulatory regimes. So there are benefits to standardization, benefits to uniform production. So all the EU needs to do is to regulate the single market. It is then the market forces and the business incentives of global companies that transform that EU rule.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern. We got a little bit of talking. Harnessing the power of Bloomberg Business Week. Kara Messer and Tim Stenevec bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed has potential?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg.
Every word you say, when you talk to me, talk to me.
Our next guest, is that what he said? Our next guest doesn't think we'll get rate cuts until after the election. Look out for that in a moment. Equities right now on the S&P 500 positive here. We are positive by a third of 1% on the Nasdaq, up by 0.5%. Waiting for some economic data, jobless claims in focus. The ISM a little bit later this morning. Into the bond market, yields look like this, just about unchanged on a 10-year, down a basis point. Let's call it 390. With your jobs data and a little bit more, it's Mike the King. Hey, Mike.
Hey, John. Well, we do have a little bit of a jump higher in jobless claims, which probably doesn't surprise a lot of people given the number of layoff announcements that we've had recently. Jobless claims rise to 224,000 from a revised 215,000. Not a huge jump, still within a range, but a little bit higher. Now, I know one of the people who has drilled into me that you don't pay attention to jobless claims in the holiday seasons is Stephen Stanley. He'll be on in just a moment. See if we've gotten outside of that season yet where we could actually say there's something to this. The other big number out this morning is productivity, the first read of productivity for the fourth quarter, and it comes in at 3.2% after 4.9% in the third quarter. So another big number, another strong productivity number for the U.S. economy, and one of the reasons perhaps that we are seeing inflation come down even as workers are getting more money. Unit labor costs rise 0.5% after falling 1.1% in the third quarter. So decent news this morning, not terrible jobless claims, but at least reflecting maybe a little reality.
We'll get into the price action, Mike. Equity futures still doing okay. Not a big move here at all. We're positive by 0.4%.
참, 그쵸. 아깝다. 근데 뭐 원래 그렇지 뭐. 저는 미래를 볼 수 없기 때문에
on a 2-year at the moment. But I know from Bank of America, months ago, worth bringing up.
여태까지 갔었으면 좀 수익을 좀 더 봤을 수도 있었을 텐데 지금 급속히 떨어지기 때문에 이 타임에 놓쳤을 수도 있으니까 지금 마이너스 59,000원인데도 조금 있다가 괜찮은 타이밍이 또 있을 수도 있으니까 그때까지 기다리는 것도 방법이요. 아직 시장이 열기 전이니까 그 타이밍이 많을 거예요. 분명히 많을 거예요. 근데 역시 예측할 수가 없다, 진짜. 여기 보시면 계속 올라가고 있었는데 갑자기 떨어지는데 이게 뭐 할 수도 없어. 봐봐요. 하루 종일 계속 올라가고 있었고 왜 하필 이 타이밍에 괜찮아요.
we can move. And the advantage to them for May is they get 3 more PCE nodes. So they will have more data. He said 6 months isn't enough, maybe 9 months is.
저는 계속 기다려보고 괜찮은 타이밍에 분명히 올 거예요. 인생 그렇지 뭐. 아시잖아요. 떨어지는 길이 있으면 올라가는 길도 있을 거예요. 예를 들어 지금 같은 상황에 매수 들어가면 나쁘지 않을 듯.
It wasn't that they are ignoring a situation like that, but New York Community Bank is not a big bank. It has a loss because of real estate. Remember, they took over Signature Bank accounts, so probably that was part of it. And you're going to have losses at banks because of commercial real estate. So it doesn't seem to be a systemic problem in the sense that it's going to spread through the banking system or cause runs in the same way that we saw in March of last year. So I don't think the chairman would have had a lot to say about it because he wouldn't have been informed about it enough to really talk about it.
Mike, appreciate it. Good to see you. As always, great work. Always give you a victory lap after the Federal Reserve. Thank you, sir. Jobless claims then, the final read on the jobs market before payrolls tomorrow. Santander chief economist Stephen Stanley has his eye on labour force participation, writing this. If we cannot count on a repeat performance from the labour force participation rate in 2024, it will be tougher for the unemployment rate to back up further unless or until the economy and the labour market weaken more dramatically. I see the unemployment rate holding in the 3.5 to 4% range. Stephen, I'm pleased to say, joins us now. Stephen, good morning.
Morning.
I'm not going to bury the lead. I'm going straight to it. You're looking for 50 basis points worth of cuts. Not at the next meeting,
시장
not in
열기
the
전
summer,
그냥
for the
버텨볼까요?
whole year and not until after the election.
Correct.
Why are you all the way out there? Because this is super contrarian. What's driving it?
So I think
다행히 당분간은 좀 있으니까 에라 모르겠다 이렇게 하면 해볼 수 있어요. 있다고 생각해요.
Bring inflation down will probably not be repeated in the first half of the year. So, and you kind of got a sense of that yesterday. I mean, to Mike's point, we've had 6 months.
애매한 타이밍에 들어갔지. 아하, 아니다. 일단은 지금 결과가 좀 애매할 수 있는데 와리가리 할 수 있는데 시장 열기 전에 일단 매수로 좀 버텨볼까요? 버텨보고 왠지 느낌이 좋아요. 일단 가보시죠.
above target. What are those one-off factors that help drive inflation lower over the last 6 months?
냄새가
And you don't think will be
좋네요.
there over the
아직까지는.
next 6?
일단 지금 같은 상황에 제가 제일 좋아하는 전략을 해볼게요. 매매로 들어갔다 보니까 이제는 차트를 아예 안 볼 거예요. 아예 안 보고 한 시간 있다가 보고 상황이 좀 괜찮으면 오케이 계속 이어지고 망했다 싶으면 그때 뭐 나갈 방법을 찾아보면 되죠. 일단은 차트 안녕 안 볼게요.
Given the fact that they seem poised to really cut rates as soon as they feel any comfort whatsoever. I mean, if things don't necessarily take a material tick upward in inflation, they're going to be cutting rates.
Yeah, at some point, and he was clear about that. I think he was reflecting that the situation probably hasn't changed a lot from December. We have the dots from December, so we have a sense of where they are, and the median was for 3 cuts, and I only have 2, so a little different there. But yeah, I mean, I actually was encouraged because, given all the market talk about cuts in March or in May or whatever, to me, they don't seem particularly close to being convinced. And he only was willing to go out as far as March, but even, based on what he said yesterday, I would say even a May cut would really require some pretty stellar inflation data over the next few months.
We did just see initial jobless claims climb to the highest levels in a couple of months. Granted, it's probably noisy data, as Mike was pointing out. What levels of job kind of weakness would you have to see before you shift the gears, whether it's tomorrow's data or just down the line?
Yeah, no, that's a real interesting point. And Mike made, I think, the really salient point there, which is a year ago, Powell and the Fed were saying, hey, we're going to have to see a weakening in the economy. We're going to have to see subpar growth. We're going to have to see the labor market cooling to get inflation where we want it. And now they're not saying that anymore.
포지션을 계속 유지해봅시다.
The jobs data are not necessarily vital in that sense. But if the economy and the labor market do start to weaken in a meaningful way, it would clearly accelerate the thinking at the Fed. So for me, I'm looking at the unemployment rate. Is the unemployment rate back up significantly? We've been in that 3.5% to 4% range that I cited in the piece for about 2 years now, and we're still solidly in that range. I think we'll eventually get above 4% this year, but it's going to come in the back half of the year, not in the first half.
I want to talk about the politics. You don't see these cuts coming until after the election. Is that for good reason? Is that associated with the election itself? What's that about?
So I would say here's where the election plays in. If the market's right and the Fed gets started early in the year, they can just keep going right through the election. And they've done that on either side, tightening or easing in the past. But I don't think they want to make newspaper headlines in the heat of the election season. So if we get through, let's say, the July meeting and they haven't moved yet, then I think the first move is not going to come until after the election.
But for those that are concerned that if he cuts, it looks like a boost to Biden, if he doesn't cut, it doesn't look like he's trying to sink Biden?
They're damned if they do and damned if they don't, right? So I think they have to do the right thing. But I would say, in my view, the political risk is much lower after the election than it is before, because you don't have people campaigning anymore, right? So what they really don't want to have is they don't want to have one candidate or the other who's going out and making speeches every day saying, the Fed is doing this wrong or the Fed is biased or whatever, and you won't have that after the election.
You've clearly got a window in mind. You said July, which makes me think that even if they do start before July, do you think they'll stop in July? What is it about going into the summer that you think is just not going to be the thing that this Fed wants to do?
Well, again, it's really historically they've tried to avoid being in the news during the heat of the election cycle, which is really after the conventions. So kind of into the summer, almost Labor Day to Election Day. But I mean, they're not in the news if they're cutting for the 4th meeting in a row or 5th meeting in a row, right? So if they get started early, they can just plow right through, and they've done that before. But I think the first move is always the biggest, the most significant one, and I don't think we'll see the first one coming in the month or two before the election.
Stephen enjoyed this. It's funny, we're calling it super contrarian, but 50 basis points of cuts is only 25 basis points out from the dot plot.
So I keep telling people.
It just feels so foreign because of what the market's priced for, Lisa, this year.
It also is, when do you start? And it sort of raises this question of, are they basically stymied in not being able to move as much if they start too late? You know what I mean? Because of the political calendar. So that's something else. The first cut is always the deepest. I've now have that.
Okay, you're going to start singing?
No, I'm not going to
Okay, Stephen, thank you. You should run. Stephen Stanley of Santander. Let's get you some stories elsewhere this morning. Let's get you the Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hi, John. The BOE has opened the door to interest rate cuts. The central bank slashed its inflation outlook for 2024 and dropped guidance that borrowing costs may have to rise again. Its Monetary Policy Committee left the key rate unchanged at 5.25%.
If we were to keep bank rate at 5.25% for the next 3 years, we think it's likely that inflation would eventually fall significantly below target. But if we were to follow the market condition path, we think inflation will be above target for much of the next 3 years.
The committee was split on action, with 1 vote to cut, 2 to hike, and the remaining 6 members voting to hold. Elon Musk is going all in on Texas, seeking shareholder approval to move Tesla's corporate registration from Delaware to the Lone Star State. Musk took to his social media platform X to poll users on the change before saying Tesla would soon hold a shareholder vote. It came after a Delaware court voided the CEO's $55 billion pay package, calling it excessive. He's already moved Tesla's home office to Austin and relocated himself and his charity to the state. FTX, the now defunct crypto exchange, said it plans to repay former customers and creditors who can prove their losses. A lawyer for FTX said restructuring advisors will examine millions of claims to filter out those that are illegitimate. Attempts to restart the exchange have also been halted after the team overseeing the company failed to find investors willing to inject cash. And that's your Bloomberg Brief. John?
Yahara, thank you. Coming up next on the program, high hopes for big tech.
When you look at Microsoft and Google, the results were fine. It's almost like the market's looking for a bit of a reason to pull back, and that's understandable given the run that they've recently had.
Earnings from Apple, Amazon, Meta coming up after the close, going into the opening bell about 47 minutes away. Your equity market on the S&P 500 shaping up as follows. Equity futures on the S&P positive by 1/3%. Live from New York City, this is Bloomberg.
Just like that.
NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona
to the kabaddi tournaments in India
to the cornhole boards at your local tailgate. This is what's next in sports.
Our studios in New York and San Francisco. Our expert hosts of the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of a trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority.
From New York City,
London is the
9 a.m. in Beijing and Shanghai.
Good morning, everybody. Here's what I'm watching. You do not want to miss this story. There to kind of upside.
So here we are going into the opening bout, 45 minutes away. Equity futures on the S&P 500 attempting to bounce but fading a touch. We're positive by 0.4%. Yesterday, big one-day rally. Biggest one-day move, or rather one-day sell-off, going back to September on the S&P 500. Biggest one-day move lower on the Nasdaq, going back to October. Pretty dreadful stuff, sparked by Chairman Powell pushing back, throwing some banking stress. Lisa, take your pick. Yields 390.28. Decent rally there, that's for sure.
Yeah, and it's definitely on the heels of jobless claims having just come out at about the highest, the wrong side of a kind of upside surprise in about 2 months. Right now, we're seeing that two-year yield at about the lowest going back to January 15th. So I guess not that much, it's 2 weeks. But still, I'm looking at this and I'm just thinking to myself, okay, how much are we pricing out rate cuts in March? But that just means that they're going to be sort of
역시
Chairman Powell set this up yesterday. We talked about it earlier this morning.
여기나 여기에 봤었으면 더 마음이 무너질 수 있었으니까 여기까지 딱 빼고 그럴 수 있었으니까 그러니까 지금 계속 이 포지션을 가보고 그리고 편한 마음으로 식사를 좀 제대로 이 식사 그리고 제가 진짜 식사를 좀 가보려고 해요. 일단은 여러분 화이팅 하시고 저 같은 제가 쓰는 방법도 한번 써보세요. 매매 들어가서 그리고 들어가고 나서 차트 안 보는 거 좀 마음이 편해질 거예요. 추천합니다. 아무튼 이따가 다시 올게요.
From Alphabet and Microsoft. Pierre Farago of New Street Research writing this. We recommend staying away from Apple. If comments and guide are cautious on the iPhone, investors will struggle to see a next catalyst. Pierre Farago, I'm pleased to say, joins us now for more. Pierre, wonderful to catch up with you, buddy, as always. It's kind of bizarre that we had a name rally by almost 50%, I think up 48% in 2023, and yet we're sitting here today asking this question: can Apple avoid its fifth straight sales decline? What was supporting that run, Pierre, last year before we get into the year ahead?
Yeah, that's a very the stock behaved in a very surprising way in 2023. So you saw the run, but at the beginning of the year, it really went all the tech stocks that recovered. So I don't think it was really specific to Apple, but it reflected just growing optimism on the fact that the outlook for all tech, all what's tech related, all strong players, strong franchises in tech, having been battered down in 2022. And then what you see it well on your charts. Since June, the stock has been trading sideways in a fairly large volatility gap for that name. And that's really what happened. People saw a bit of weakness, but never, compared to what we've seen elsewhere, like in autos with Tesla, in semiconductors that work, Apple on a relative basis looked like very, very resilient. And that's really what the stock told us over the last 6 months, and that's where we are today.
So how big of a disappointment are you expecting tomorrow? Or later today, I should say. How much are you seeing this play out in this earnings cycle versus just sort of a slow bleed over the next, say, year?
Well, it's always difficult to time saying we don't have any any significant edge in order to call this quarter and to see something coming. What we saw is a lot of weakish, painful data points in December about China, consumer demand being weak, Xiaomi and Huawei being back. Remember that Apple, in 2020, 2021, gained easily 20 million units out of Huawei getting out of the market, and now Huawei is coming back and Xiaomi is doing well, and the Chinese consumer sentiment is what it is. So my concern would be that today expectations reflect a flattish, sort of iPhone kind of development on between 2023 and 2024 and beyond. And so if there is a crack on iPhone expectations, if management feels the need to guide down on iPhone, that's really the quote you took on your screen. It's if that happens, then it's going to be difficult for investors to be patient and wait for the next catalyst. So that's the risk I would see on the stock tonight. Do I have a high conviction that they're going to disappoint? Not really, to be honest. It's more of a risk than a conviction.
You know, guest after guest come on here and they say, you know, we might see Magnificent 4, Magnificent 1, Magnificent 8 given AMD, but that seems to have fallen by the wayside for the moment. Do you think that Apple doesn't belong in the same category simply because they're not as leveraged to the whole AI kind of trend?
Yeah, I think it's a very important aspect of Apple. Apple today is the highest quality consumer franchise to take in the world. So that's a great business, a great investment for that reason. But you don't see any news flow, or barely see any news flow on AI with Apple. And of course, they're working a lot on it, spending $1 billion on it. They're going to come up with something like the iPhone user experience will be probably revolutionized by generative AI, but they are not on the forefront of that, and the news flow on that front might be concerning or very weak at the very least in the near term. So that might make Apple actually, falling a bit off that route.
Yeah, this is something I've always struggled with, and it's a question I often ask you. I come to you with this question. What multiple do you put on this name? You've got the core growth story of the last decade, which is the iPhone going X growth. At the same time, the revenue mix is shifting towards services. We've seen that over the last year. Pierre, what multiple should you put on this stock?
Well, so it's a very, very high quality franchise, which means that Apple will always be able to grow, in high single digits their earnings power over a long period of time, even if nothing exceptional, nothing magic comes through. So Apple probably is still worth like a premium on the S&P, a premium on the overall market, but not a premium for growth, a premium for quality. So the stock is trading on 25 times, what could be like a good earning in 2025 today, and I feel like I think it's a reasonable multiple, and which means that between now and well into 2025, maybe the stock doesn't have much room to grow, because if we are like on a 7-8% earnings growth trajectory, that's the only kind of upside you can expect if the multiple is already full. But I think like the multiple of today is a bit fair. Now, if we come into a period of duress for the iPhone and a pullback in the iPhone, you could see a multiple compression, and that would create more than anything like an opportunity maybe to buy a high quality name.
Yeah, I wanted to finish with a multiple question, but on a different company, a company that falls under your coverage. You know where I'm going. I'm going to talk about Tesla. Should I be valuing this now just a traditional car company going against Chinese manufacturers? What is this now?
It's a very good question. Tesla is at a very interesting point in time where they are basically maxing out their addressable market today with the portfolio they have today. What's very interesting, we've pulled a lot of numbers together recently with the team, and we've found out that Tesla has actually addressed already 15% of their addressable market today with the Model Y, the Model 3, the Model X, and the Model S. So Tesla has come through like a first leg of development very successfully. And now it's a 15% market share player on their addressable market. Just as a reference, when the largest car manufacturer in the world has only 12% of the total market. So that's a very high market share in autos, 15%. And now what can they do? They still can grow. They're still guiding from some growth this year and next of that portfolio, which means that they're going to continue to gain share or expand their addressable market with trading up. And then, in 2 years from now, they will be ramping in very high volume lower price point cars, the next gen models, the Model 2, that will like quadruple their addressable market in volumes. And they should still be able to achieve 15% market share. So Tesla still has like an exceptional growth opportunity ahead of them. And they are in a transition phase now. I think in 3 to 6 months, they'll start expanding margins again when prices stabilize and costs continue to come down. Excepting the Chinese, they don't really have competitors on their EV segment. Yeah. And if they took 15% of their addressable market with what they have today, they should continue to grow from there. And with the Model 2, that's a very high growth potential.
We'll talk about CEO pay another time. Pierre, I know you've got to go. Pierre Federger there of New Street Research. Pierre, thank you. Anticipating Apple earnings Just around the corner, after the bout a little bit later, Tesla. It's got a buy, Bramo, 255 price target.
Talking about just the addressable market and how much of it they have. I mean, at a certain point, are you buying an electric car, as you've pointed out, or are you buying a Tesla? And that's sort of been a key question.
We've both been asking that question. I think we all have over the last few months. Coming up tomorrow, it's Payrolls Friday. Don't miss this. This lineup is absolutely stacked. Ellen Zettner of Morgan Stanley, former Fed Governor Randy Krosner, Jeff Rosenberg of BlackRock, and our good friend Mohammed Al-Arian of Bloomberg Opinion. All of that and more coming up tomorrow from New York City. This was Bloomberg Surveillance.
Lots happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions. That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
We've been so used to the fact that every time there's a problem, central banks come and ease. This has been the kind of playbook, throughout my career, before that, after I left. Now we're in a very different environment. Central banks actually have to create a recession, in essence, to get back to price stability. So it's a complete reversal of the modus operandi, in a sense, of central banks as they've known it for the last several decades. So that's why it's not so much that they're getting something wrong. They've now acknowledged that there is this trade-off, these costs to pay, but it's a completely different way of thinking about central banks, and it's a different role. Another way to put it is they have to be unpopular now in order to get inflation back down, where it used to be you could count on them each time to rescue you, to stabilize the system, to bring support. And that has shifted, and I think many people, even in the markets, have not quite understood in my mind how much we are now in a different regime compared to the last 4 decades, effectively.
So it's what, almost an easing bias in the markets? How would you describe it?
In the U.S., yes, and I think it's this idea, this almost pre-programmed idea, when there is a problem, i.e. potential recession, central banks will come and ease.
So let's go inside the boardroom. Let's suppose you win a proxy fight or you just get invited onto the board. You go to your first board meeting, and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, first of all, we don't bring that to the board. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside of the board. We try never to solve an issue in a board. Okay, it's always best done the day before, the week before, outside that. We wouldn't be there if they really were doing well. So it's really hard for them to straight face and tell us we're doing well. And we present them with a plan.
From New York City, for our viewers worldwide, I'm Manus Cranny, in for Jonathan Farrow. It's Bounce Back Thursday. Will it last? It is day 2 of mega tech, with Apple, Amazon, and Meta all setting the agenda after the close. The countdown to the open, well, that starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Coming up in the show, futures rebound from the worst day of the year. And the Fed delivers a reality check on the rate cut expectations. Investors brace for the next wave of big bad tech earnings. We begin with a big issue looking ahead to, you got it, jobs day in the USA.
The bigger news for the week is probably going to be payroll.
Did you get payrolls on Friday?
Payrolls are out.
Jobs report, will be an important number.
Very important for our outlook for equities.
To get a sense of, is the labor market slowing?
We have a very robust labor market. The labor market is basically chugging along.
I don't think the labor market's really a problem. I think the labor market is a real bright spot right now.
I think strong payroll is positive for markets.
The labor market tends to be often a lagging indicator. So
Under the surface, the labor market is cooling.
whether it shows up, it's a noisy number. Whether it shows up on Friday or not is harder to tell.
Joining now to discuss everything in the markets, MUFG's George Goncalves and Sophie's Liz Young. Okay, here we go. We had the pushback from Powell yesterday. We're looking forward to maybe a little bit of a slowdown in the jobs report tomorrow, but I want to focus on yesterday before we cast ahead. At the presser, George, you said it was a hawkish U-turn. It came out of nowhere. Well, what is greater confidence before they move forward is the question I have. Good morning.
Good morning. Yeah, look, I think Chair Powell's really trying to buy time. I think in general, the Fed has been trying to buy time. And so, really trying to cool the markets, which have been really forcing this issue for quite some time. But eventually, we all know they're going to start easing rates. It's just a matter of when do they start, right? And given that March is just 6 weeks away, and there's a lot that could happen between now and then. But at the same time, they're not ready to communicate ahead of time. I guess that was the proof thing to do to kind of get greater confidence. But I think it's beyond that. They're really trying to sequence things and slow us down. They know once they start cutting, the market's going to run.
Yeah, I mean, sequencing, they've tried that before. Liz, good morning. How are you? I mean, there's lots of notes that you have. The cuts go marching away, and it was a little bit of tough love. I call that a good thing.
Yeah, I mean, I think what's happened here is that the market actually hadn't been listening to Powell for a long time. He'd been pretty clear that from the beginning of this hiking cycle, that they would rather wait a little bit too long instead of go too early with cuts and reignite inflation, reignite financial loosening that might get us to a place where they have to start hiking again later. I think that they are pretty terrified to repeat some of the mistakes of the 70s. And what he did yesterday was remind markets that even though you may want a cut in March, you may want us to start doing that to support valuations, the data that we see and the confidence that we have isn't quite there yet. So let's be realistic. But the interesting thing is, the market did price out a cut in March, stays consistent still with 6 by the end of the year, and just started to back-end load them. So the market hasn't necessarily come off of what we think is going to happen this year. It just pushed back the beginning.
Yeah, well, there's always a way of rearranging the deck shows, isn't it, when you're desperate for the trade. And let's talk about those traders. They're bracing for a jobs number, a payrolls report coming in tomorrow. It is the finale to an action-packed week. Mike McKee is with me. Mike, what is the round number? What's the whisper? Where are we? What's our thinking?
Well, our thinking is we get one more good month, but it may not make a whole lot of difference to the Fed. Now, Jay Powell did say if the labor market goes bad, they could move up their rate cuts. And we did get a disappointing number for jobless claims today, with claims coming in at 224,000 after 214,000 the week before. We've had a lot of layoff notices. Does that mean we're likely to see a bad number tomorrow? Not really. This is January data tomorrow, and we're in February. The change in payrolls still expected to be strong, 185,000, and the unemployment rate is expected to go up, but still stay below 4%. Average hourly earnings, this will be interesting, expected up 0.3%, but base next keep it on a year-over-year basis at 4.1%. We should mention one reason that wages can run ahead of inflation at this point is that productivity is way up, 3.2% in the fourth quarter. And this is the number that the Fed is going to be watching. They've expected unemployment to rise, but 23 months so far, it has stayed below 4%. Only one time in history has that happened before, and that was in 1967-68 during the Vietnam War, when half the people who were in the labor force were over in Vietnam. So if that starts to go up, there could be a problem, but the betting is we're still going to see a 24th month in a row tomorrow.
Okay, setting the stage, Mike McKee. It's all eyes down for that. George Goncalves is Young with me, my panel for the morning. That's a pretty staggering number, isn't it? Unemployment sub 4% for 23 months in a row. You haven't seen that since 1967. You can understand why Powell tried to deflate a little bit of risk yesterday, can't you, George?
Well, you know what happened in the early 70s, right? We had the Nifty 50, we had a pretty big boom in risk assets, and it kind of went into a recession as well. So, I mean, look, it's great to look at these historical analyzed comparisons. To me, it's more about what's going to be the change and what's going to matter from here going forward. And that unemployment rate going up, it could have gone up to 4% last month, and it did it because of how labor force participation rate was accounted for. So at this point, I think we're at the real risk where the unemployment rate actually starts to move much faster. You have those layoffs. January was a big layoff month in general, so there is downside risk. The ADP number was close to 100. I think there's downside risk for tomorrow's number. And more importantly, we get also these benchmark revisions, which I think could be illuminating as well. So I'm actually concerned about tomorrow's number, reminding folks that there are cracks forming underneath the surface in the labor market, and the headlines look great, but a lot of it is optics.
Yeah, Liz, I mean, it wouldn't take much to jolt us. I mean, it took a tiny whisper of a miss by Alphabet yesterday on core advertising sales to give us a shakedown. It took a lack of huge forward guidance from Microsoft to just unnerve us. So this macro data, it only takes one sort of large prick in the balloon to unsettle us, doesn't it?
I think that's right, but I'm not sure that we're there yet, at least in the labor market. But I do think George is right that we do run the risk right now with unemployment where it is. Typically what you see is as unemployment starts to tick up, it catches velocity and it starts to move very, very quickly. So if and when that turns up, it's probably not going to be this stepwise calm function upward from 3.7 to 3.8 to 3.9 and a 0.1% at a time. So we do run the risk of sort of escape velocity on that number. The difference with the labor market is that the data that we get on a monthly basis, so what we're going to see this Friday, is pretty lagged. It takes a while for it to start to react, and I wouldn't expect it to be inching towards 0 jobs added. I do expect it to continue to cool, but I think the Fed's threshold for pain is higher than people are wanting it to be. I think that they do expect more cooling in the labor market, and they're okay with it. In fact, maybe even welcome it to try to assuage the fears of a wage price spiral and all the other things that we worried about when the labor market was so tight. So I think as investors, we have to up our threshold for pain with some of that economic data and understand that even an unemployment rate at 4.1, 4.2% is still quite low by historical standards.
Liz, give me your viewpoint on this. Last week it was record after record. We were going into the earnings. I opened the Bank of America flow show this morning. Mutual funds, pension funds, insurance companies dumped the most amount of equities in a decade since 2015. Is that smart money taking money off the table at a near-term peak? Because that's quite an indication. That's quite a stat, isn't it? The most amount of money in a week out of the market in a decade.
It is, but when you put it in the context of the rally that's happened since the end of October, also a rally that's in the 98th or 99th percentile by historical standards as well. So taking some of that money off the table, and really in context, it didn't cause that much of a drawdown, right? So taking some of that money off the table is valuation based, and it's just the idea that when you look at the technicals of the market, they did look extended. Nobody can really deny that. I think what we have to look at, and what we're obviously dealing with this week with big tech earnings, is that we need something that will drive a rally forward in a durable fashion, and big tech companies are expected to contribute the majority of earnings power to the S&P for this last quarter. So we need those earnings to come in solid. We don't necessarily need them to knock it out of the park, but we do need them to come in solid to prove that the level of valuations that we're at is worthy of new money to be added. And I think right now a lot of investors are questioning whether or not 20 times forward earnings on the S&P makes sense at this juncture.
Yeah, I mean, there's a wonderful line from BI. 28 times forward earnings. It's just a 0.2 away from an all-time high. This is on the Max 7, so you've got like a near 40% premium to the index. George, what is that moves the needle for you in terms of calculating risk? We're looking at Apple, we're looking at Meta, so on the equity side, we're going to have some proof points on that. But this bond market seems trapped in the hell that is 375 to 425 offered.
I mean, look, I think it's ironic that yesterday, obviously Fed Day, also the announcement of the Treasury's auction schedule, which if you go back 3 months ago, marked the beginning of the rally in everything. So November 1st, so we had the Fed meeting as well. We had the Treasury say their issuance patterns were going to be less, and that marked a big rally and kind of a short recovery move into year end, which continued to the beginning of this year. I think it's ironic. We live in these hyper-narrative kind of environments. I think it kind of bookends a pretty big move. You know, everything's pretty much priced to perfection and priced to the idea that we're soft landing. So it's already in the tape. So the question from here is all about risk management. It's about being defensive, and it's about being in shorter duration and fixed income. And really, you know, the bond market has done a lot of this pricing in already, but it doesn't mean it's wrong.
We're going to touch on commercial property, which could be a little bit discomforting for a few people in this market. Well, maybe we should pay a little bit of attention to it. We'll come to that in a moment. George Goncalves and Liz Young, my guests this morning on the markets. Let's get under the hood, see what's ahead of the opening bell. Abigail Doolittle is with me. It feels like Big Brother, day 2 of big tech.
Day 2 of big tech, but let's take a look first at cruise lines. I don't know if you would go on a cruise, Manus. I really have no desire, but apparently a lot of other people do, because Royal Caribbean put up a great quarter. They topped adjusted earnings with a profit of $1.25. Truly incredible relative to those losses during the pandemic. And some analysts are even saying that the outlook is impressive. Count me out, though. Honeywell down 2.4%. The fourth quarter was good, but the fiscal year revenue range fell short. In addition, the CEO was named as the board chairman. That's not a reason for the stock being down, but just some additional information that came out of that report. And then finally, here's some big tech. Interestingly, coming into today over the last year, Qualcomm only up about 5%, right now down 2.4%. The fourth quarter was a big beat. The outlook was solid, but they did warn that their inventory is building. Investors not liking that right now. Qualcomm, another chip maker, down after earnings.
Not a buyer of the whole cruise. Open-ended bar, open-ended food. I'd just come back and wouldn't fit into any of the suits. Abby, thank you very much. Abigail Doolittle. Coming up on the show, I warned you, commercial real estate, it's a concern, and it is hitting regional banks.
I'd say, for the most part, everything's in the rearview mirror now. So yesterday's announcement on NYCB was a bit of a surprise. I think that's an outlier.
Is it an outlier? Let me take a deeper look at the New York Community Bank's warning. That's next on Bloomberg.
Thing in life I've often said is to be happy, but you seem like a very happy person.
It's like nature. Nothing ever stops. So you could be super happy 1 minute and then something happens. So it's just the joy of life.
For any young woman that's watching this, wants to be the next Diane von Furstenberg, what would you recommend?
I think the most important thing in life is the relationship you have with yourself. Once you have a good relationship with yourself, any other relationship is a plus and not a must. And the second advice is to be as true to yourself as you possibly can. And you have to accept and own things you may not like, but the more you could be you, the happier you would be.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month.
I'd say, for the most part, everything's in the rearview mirror now. So there were a few idiosyncratic bank failures that related to the business model and how fast those banks grew, and then the stress caused by the Fed raising rates very quickly. So yesterday's announcement on NYCB was a bit of a surprise. I think that's an outlier.
It's an outlier. That's the Citizens Financial CEO, Bruce Van Saun, downplaying the risks facing regional banks and commercial real estate. Now, New York Community Bank had a record one-day plunge. We brought that to you about 24 hours ago, reporting swollen credit losses of $552 million, $500 million, bringing commercial real estate back into the spotlight and an area of potential pain. Joining me now is Abigail Doolittle with a deeper dive. Abby, take it away.
Well, I think one thing everybody can agree on was that yesterday was a shock, that we did have that plunge for NYCB, New York Community Bancorp, and that the reason behind it, as you mentioned, those swollen loan loss preserves 12 times the estimate. But beneath that, they also, in addition, cut their dividend. And the reason that they cut the dividend, if you don't know the composition for those loan loss provisions, but the driver of cutting the dividend had to do, the bank said, with office and multifamily commercial real estate. So this seemed like it was last year. I think that there are other experts, people in real estate, Manus, who might disagree with the CEO of Citizens, saying that there could be some kind of quote-unquote debt crisis ahead. That's according to one of my sources. Given the fact that you have $1.5 trillion CMBS due by the end of 2025, all of those factors that he mentioned, it really creates a backdrop for values to potentially fall. 80% of CMBS is held by the regional bank, so it is somewhat spread out. But we could have other situations, as occurred yesterday with NYCB. I think it's too early to say whether or not it's over, because a lot of these properties, they simply haven't traded. So we don't know how bad the distress is going to be. We don't know how bad the values are going to be. But some of the big office owners that I've talked to, mall owners that I've talked to recently, Bloomberg Interviews, Manus, they've said that in New York here, values could drop as much as 25 to 75%. So basically, a loan would be worth 25 cents on the dollar from previous values. That could still be kind of painful, so stay tuned.
Okay, whether it is idiosyncratic or not, multitudes of idiosyncrasies can cause a big problem. Abigail, thank you very much. Abigail Doolittle. The panel this morning is George Goncalves, Liz Young with me. I mean, look, call me old-fashioned, but a huge canary in the coal mine yesterday. Deutsche Bank, $123 million of a write-down in U.S. property. A Japanese number 16 bank in Japan tanks 20% on U.S. property. Is it idiosyncratic, George, or can it manifest into something more?
Look, I think it's a reminder. I think it's idiosyncratic for now. You have to take it at face value as information comes in, and things can change quickly. I think it is, again, that's a reminder that this is going to be with us for quite some time. This is going to take many years to work out this. What's different than what we've been used to in the last decade or so, these kind of acute, big financial shocks that come out of nowhere. This is not that. This is not systemic. Okay. It's more of a kind of a death by 1,000 cuts, right?
Okay, so it's not 2008, but it is an ongoing death by 1,000 cuts. You're right, it could be individual names rather than a systemic issue, and the banks are better capitalized, so we're told. Liz, $560 billion worth of commercial real estate comes to maturity through the end of 2025. Is it just going to be a series of bumps in the road, or what opportunities will it present for you?
Well, I think one of the things that we have to recognize is that we've known about this commercial real estate risk for a long time, and frankly, since the regional bank crisis happened last March. So it won't be something that comes out of left field, even if there are negative headlines about it. I think the real risk is that when you look at the timing of how this may all shake out, and with the news that we got yesterday about New York Community Bancorp, the Bank Term Funding Program is set to expire in March of this year. So some of the backstop that regional banks have perhaps relied on, and we don't know how much and who in particular is relying on it, but some of the backstop is set to disappear. So some of the risks that maybe we haven't seen yet, we haven't seen come to the surface, could come to the surface in late spring, early summer. And then we still have this lingering commercial real estate risk that we know is there, and to the point that was made earlier in the segment, we just don't know what the marks are on those particular loans. So as things get refinanced, it could come out that it's a bigger problem than we originally thought. But again, the important thing is, and the important thing for market reactions is, we already know this is a problem. This is not going to be some sort of shock that nobody was prepared for. So in the meantime, I don't think it's something that's going to come out and surprise us, but I do think that it's something we have to keep in mind when thinking about regional banks and their exposure going forward.
And to that end, Liz, let's just square it away. You see these pockets of drawdown. I like what you said, which is, look, man, you can sell the most amount of stock in a decade at the institutional level, but it didn't knock the market. It didn't brutally bruise the market. So are you specifically looking for opportunities when there are drawdowns? I mean, do you think that we will get a 5-10% drawdown, or it's just going to be these incremental days of 1-1.5%, but nothing cataclysmic?
Well, there's always a risk for a bigger shock, but I do think that in the context of seeing such a ferocious rally, it's healthy to have those little pullbacks, and honestly, even a 5 to 10% correction, quite normal, quite customary in the context of the market. Those little pullbacks are healthy. What I would be looking at for opportunity in some of those pullbacks are the things that did not keep up with the market in 2023. What we've had as a theme for the last couple of years is this big rotation aspect, in the sense of what did bad last year does well the year following. So when you look at what happened in 2023 and this huge bifurcation among the Mag 7 versus the rest of the market, I'd be shopping in the rest of the market category, because if we do indeed pull off a soft landing, you probably want to have exposure to those cyclical stocks and maybe the rest of tech, some of that smaller cap tech that didn't keep up last year. But you also want to barbell that with some of those sectors that haven't necessarily shown their luster yet, but they would be considered more defensive sectors. Healthcare is a good spot to be shopping right now, I think. Staples, I think, is a good spot. Utilities. And if the Fed starts cutting rates in spring or maybe early summer, you have rates coming down, dividend-paying stocks start to look much more attractive. So those are some of the places that I'd be shopping, particularly during a small pullback.
Okay, George, you know what? In 30 seconds, give me what a barbell looks like to you for risk.
Barbell, I mean, for us is still being defensive and having high-quality IG. It's a little bit too tight here, so maybe lightening up there, but moving and staying in the front of the curve. I mean, the Fed's going to start an easing cycle this year, because if it doesn't, we're not going to have a soft landing.
Yep, they got to pull the trigger at some stage. The question is that going to be May or June? George, thank you so much. Liz, great conversation. George Goncalves and Liz Young, my guest this morning on the market. Morning calls coming up. Richard Bernstein from Richard Bernstein Advisors joins me right here this morning.
I was interested in the following question, which is, there are a bunch of dinosaurs called sauropod dinosaurs, which have really long skinny necks. So Apatosaurus is an example. They also have really long skinny tails. So I made a computer model that showed that, in fact, the tail of these sauropod dinosaurs could actually act like a whip. The way a bullwhip makes that cracking noise is because the tip of the bit actually goes about twice the speed of sound. Okay. I think the way they got a date was to impress the females by making loud booms.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world.
Bank Thursday. For now, we'll be counting down to day 2 of a massive tech reporting. Nasdaq futures up 0.5%. Institutions sold the most amount of stocks in 1 week relative to 2015, the most in a decade. Time now for your morning calls. This is what we've got from the scribes of Wall Street. First up, Citigroup downgrades Qualcomm to neutral, pointing to the company's disappointing outlook. Next up, Deutsche Bank upgrades Cigna to a buy, expecting the sale of its Medicare business to serve as a catalyst. And finally, Goldman Sachs adding Target to its conviction buy list, highlighting the stock's compelling valuation and, of course, the resilient U.S. consumer. Coming up in the show, Richard Bernstein joins me. Is he as optimistic about the resilience of the consumer? What is quality breadth to Richard Bernstein? That's next on Bloomberg.
Have you thought maybe I should go do something else? I can't do anything better than I'm already doing. I've already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We've made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who would help grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. In this business, I would still say is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
You were offered a money-losing women's basketball team, and you said, I want to be in the other sports as well. Is that right?
Well, yeah, you got to be smart about this.
Makes you Wilson tennis rackets. Hammer Sports, they're looking happy up there on the balcony. Small rebound in this equity market. You saw one of the biggest sell-offs across the equity markets yesterday on the back of Jay Powell pushing back on March as a live cut meeting and deflating some of the sentiment in the market. We're rolling over to a happier opening. It's a big day. 15% of the S&P 500 will report after the bell today. Amazon, Apple, along with Meta, defining the next trajectory in AI. There you go. They're happy over at the Nasdaq as well. Equity markets set for a warmer opening today. One stock we are keeping an eye on, it is Qualcomm, reporting better than expected sales and profits, but delivering a modest outlook for the year ahead. Bloomberg's Ed Ludlow joins me now. Is this the poor man's NVIDIA? Ed, good morning.
Is it a poor man's NVIDIA? It's an interesting question. With Qualcomm, you always have to go back to basics. Modems that go into smartphones, and
the big picture outlook, smartphone sales overall will grow flat to slightly up in 2024. They declined in 2023. There's an inventory issue and debate to be had here, which is that they are showing signs that smartphone makers work through inventories, and those inventories have stabilized, so there will be some forward ordering. There's some confidence, therefore, in the outlook for the current period in terms of revenue, but also EPS. The worry is everything else, connected client appliances that Qualcomm calls IoT, and in that sense, the recovery is going to be delayed to the second half of this year. But Manis, you may have a sense of deja vu. I've said this before. How many chip makers will say, well, the recovery is coming, it's just going to be in the second half of this year. The AI story with Qualcomm is they want to be in the race, both on the smartphone and PC. It's a show me the money. Where is it showing up in the financials? Not quite yet.
Yep, you're right. Everybody wants to be in the race, Ed. Ed Ludlow there with the very latest. And Ed will be sitting down with the Qualcomm president and CEO, Cristiano Amon. That's a little bit later today on Bloomberg Technology at 11:45 a.m. I don't think he'd be putting the, are you the poor man's NVIDIA to the CEO. Might be a bit disingenuous. It's just trashy market talk. Let's turn our attention to the financials. Investors are watching the shares of the New York Community Bank after its biggest one-day decline on record. Abigail Doolittle is with me. So, Abby, it's a debate, isn't it, as to whether it is idiosyncratic and just their problem.
It certainly isn't. Good morning, Manis. It's also a debate for shareholders because the stock had been up about 2% in the pre-market, a little bit of a recovery. Now it's down. The reason that the stock had some sort of a bounce yesterday after the close, after that record plunge, management did say that 2024 net interest income would be above the street. But in the light of what you were just talking about, the fact that their loan loss provisions are more than $500 billion, 12 times the estimate, they lowered the dividend to raise reserves for commercial real estate, specifically office and multifamily. It's just too scary in terms of what could be next for investors. So the stock is still down. And it does put the spotlight, to your point, back on CMBS. Is it going to be a big issue in 2024, bigger than it turned out to be in 2023? The reason it matters is 80% of the $1.5 trillion CMBS that's coming due by the end of 2025, well, those values haven't been established. So it's going to be interesting to see whether this is a one-off or if it's more spread out, as some of the real estate experts that I've talked about saying that there really could be some sort of a debt crisis ahead, Manis.
Okay, well, the Citizens Bank CEO told us its regional bank pain is in the past. It'll play out on the marks, won't it? Abby, thank you very much. Turn our attention to earnings season. Peloton results coming up short, warning investors another sales decline for the current quarter. We'll go back to the gym. Katie Greifeld.
Another rough ride for Peloton shares this morning. Let's get into some of these numbers right now. Third quarter revenue forecast, it came in between $700 to $725 million. That was short of estimates. And for the year, Peloton revised its revenue forecast down to $2.68 to $2.75 billion. The estimate had been for $2.74 billion, so right below the upper end of that range. And that's really sinking shares this morning, Manis, especially given that the second quarter was just okay. Revenue, it beat slightly, while the loss per share was in line for estimates. And as you know, this has been a long turnaround story for Peloton, and it's clear that this journey is not yet over. In the shareholder letter, the company wrote that our outlook tempered by uncertainty surrounding our ability to efficiently grow paid app subscribers. So there you have it. Shares currently off by almost 10%.
Yeah, and those connected fitness subscribers came in at 3 million. The estimate was 3.01. Connect me up. Katie, thank you very much. Staying with the earnings season, Royal Caribbean delivers an upbeat forecast due to the record booking volumes since November. Isabel Lee is with me. Big business, the Caribbean Cruise Company.
Big business indeed, Manis, which is why shares are popping up now by more than 4%. Full-year EPS, the company said, will be between $9.50 to $9.70. That implies a 40% growth and is higher than analyst estimate. We have Wells Fargo saying that this guidance was, quote, impressive. And we have Stifel saying that they were, quote, pleasantly surprised. So the bullishness stems partly from what they're seeing is a record start to the booking season. They saw their best 5 weeks of bookings so far in the recent weeks, and if they're on track, they will achieve operating efficiency goals in 2024, and that's 1 year ahead of schedule. The stock is, again, still rising, continuing its rise. It's up now by almost 5%, and it surged 162% last year, Manis.
Thanks a million. Thank you very much. Stocks are coming in for a third consecutive month of gains. It may be bumpy along the way, but here's what Morgan Stanley's Mike Wilson had to say about the rally a little bit earlier.
We had this big rally after, the pivot. And I would say it started with the Treasury squeeze when they said they're going to issue less coupons. So it was really a duration rally that then fed into a stock rally. And so now valuations are stretched again, and people are looking around going, okay, what's next? What's the next catalyst?
Well, let's put that very question in conversation with Richard Bernstein, CEO and CIO at Richard Bernstein Advisors. Richard, good to see you this morning. I thought it was an interesting, a very succinct way of putting it. It was a duration trade, first of all, that gave, the elixir of life to equities. So what is it that delivers a step change up for equities? What is the catalyst next to continue the equity bull run? Good morning.
Good morning, Manus. I think, normally PE-driven markets are followed by earnings-driven markets. And I think that is the story that we should be looking at now for the next several quarters, is the profit cycle has begun to trough. Profits are beginning to rev up. And I think, in a portfolio, you don't want necessarily companies that are just interest rate sensitive and see multiple expansion, because we know if interest rates go up, multiples come down. The question is, will the multiple come down by the P going down in the PE or the E going up? Cyclicals are really where the E goes up in an earnings-driven market.
So, Wilson's looking for high quality growth. Those people, and I hear this time and time again, pricing power and strong balance sheets. Do I get that going for breadth? Do I get that going for the Russell? If it is going to be soft landing, I want breadth, and I don't want all my concentration risk in Mag 7.
Look, I know Mike Wilson very well. He's a very smart guy, but I think we disagree with him right now in terms of the future role of the economy. What's going to be the path of the economy? And I think consensus is more, we're still talking about landings. People are talking about it's going to be a hard landing or a soft landing. Will the economy slow? I think an increasing amount of data is showing the economy is either bottoming or actually accelerating. And in that environment, as I said before, we think the profit cycle is starting to accelerate. When profit cycles accelerate, actually lower quality investments work better than higher quality investments because they're more cyclical, right? Cyclicals cause the cycle. We always have to remember that. And so stable growth and strong balance sheets are great when things are bad, but when things are good, you actually want the financial leverage and the operating leverage on a balance sheet because they actually add to performance when the cycle is good. And I think that's a big contrary that's sitting out there, is that people are still waiting for the landing and the economy isn't really playing along with the forecasts.
And you're looking at the city economic surprises. We had a little bit of a tick up on the jobless numbers today. We're going for 23 consecutive readings on the jobs report, sub 4% on unemployment. This is a winning streak in this U.S. economy. Is there anything we can put a break on?
So I think Manus, what will eventually put a break on it is what traditionally puts a break on it, which would be higher interest rates and the Fed tightening again. I think right now, the amazing thing, which people don't want to really discuss, is the Fed has raised Fed funds 525 basis points, and the economy weathered that storm and seems to be getting a bit stronger now. So if profits are going from minus 15%, which was the trough growth rate in 23, to plus 15%, which we think is going to be the peak in 24, that actually argues the Fed might actually have to raise interest rates in that environment.
Are you committing heresy on this show, Richard Bernstein? Are you committing heresy on this show? Now, come on.
I guess
you are going to be the only outlier out there that's calling for a rate hike. Are you seriously sitting on this show now this morning, Richard? Come on. Are you saying to me, man?
No, I'm not saying they're definitely going to raise rates, but I think the notion and the certainty surrounding them cutting rates, I think is misguided. I think that, to say that they're going to hold rates steady for longer than people think and potentially raise rates, I think that's more realistic than saying they're going to cut rates multiple times this year.
What do you say to the? By the way, if that's the case, I hear what you're saying, which is, should I coalesce around 3 cuts and that still does not undermine the equity rally versus 5 to 6 cuts, which is being banged like a drum by the market?
That's right. I think. Look, I think that the Fed is really banking on sort of a productivity miracle. I'm not sure they would use that word, but the productivity gains that we're seeing continuing into the future to fight inflation. I'm not so bullish on productivity as they might be. I also would note that supply chain disruptions are starting again, and that combined with some of the profits and the hiring argues that they're probably going to be very, very slow in cutting rates, much slower than the market anticipates.
I love your line. Date cash, but never marry it. Is cash the unreliable boyfriend or girlfriend? I mean, you know, I'm doing okay in cash. I actually am. I mean, I spoke to somebody yesterday. I'm about to pull you can always tell the top of the market, Richard. I've got to reinvest some pension funds from the Middle East here into the United States of America. So if I'm going in, I'm telling you, this is the top of the market, Richard. But with that in mind, I still quite like 5 1/4 in the CD.
So, you know, Manus, you're right. And you know, maybe politically incorrect to use the line about, you know, dating cash but never marrying it. I get that. But I think it's important for two reasons. One is we have to remember when people say is cash attractive, the answer is, of course it is, right? I mean, that's why the Fed raises rates. The Fed injects monetary policy into the economy by raising short-term rates, making cash attractive to try to disintermediate a broad range of investment opportunities throughout the economy. That's how monetary policy gets into the economy. So if the Fed is raising rates, of course cash is going to be attractive. But yet, people tend to fall in love with cash, right? And that's the point. Cash is a short-term investment. It's a way station. You're going from someplace to someplace and you're stopping off. It's not something for the long term. We know, and history shows this very clearly, cash is about as bad as it gets for long-term investment opportunities. Short-term, yeah, it's fine. It's a short-term investment. But I think we should really think of it as a short-term investment.
You're going to force me into, you know, an unreliable marriage with risk. I get that feeling towards the end of the year. Richard, very, very briefly, you also are quite warm to commodity. Is that my inflation hedge? What's that, 5-6% of the portfolio?
Yeah, I think commodities, Manus, are and anything real asset related, I think are going to be a very potent, not only potentially cyclical, but a longer-term story. If globalization is contracting, which I think most people would agree it probably is, it means pro-inflation assets are going to be advantageous going forward. Remember, globalization is a major factor for secular disinflation here in the United States.
You have a good authority behind you as a hockey jersey from New York Rangers. Big fan there, yeah? Go Rangers.
Absolutely. Season ticket holder.
Good lad. With the popcorn on the field, Richard Bernstein, you're welcome back anytime. Committing heresy on the market open. Not quite, but coming up. Zuckerberg, a bit of a grin on Capitol Hill, wouldn't you say?
Have you compensated any of the victims? These girls, have you compensated them?
I don't believe so.
Why not? Don't you think they deserve some compensation for what your platform has done?
Bruising day. Zuckerberg delivering an apology in front of Congress with the earnings due after the closing bell today. That conversation next.
We made it through the good and the bad times. We step into the light. Yeah, I fly with you every night. It feels like I've just died in. Tell me that it's true. Pinch me, I need you. I found heaven. Tell me I love you. Show me how you do your best.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
Breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people,
There's no question this industry is composed of some bad actors and some good actors.
the transactions,
Volumes have surpassed $24 billion per day.
and the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays. This is Bloomberg Surveillance with Tom Keene, Jonathan Farrell, and Lisa Abramowitz.
It was unimaginable that we would see rates move this fast. That was not in the realm of thinking.
Just the timeline of what they knew and when they knew it. Why didn't they do anything about it?
When do we have to see the kill? It's always for the Fed to respond to it, and this is really the tension.
Be informed.
You cannot be overly data dependent. You've got to have a view of where you're going.
Be prepared.
I think the earnings season might actually be the positive surprise. The that people are not expecting.
Be ahead of the game.
It's only the beginning of something we need to keep an eye on.
And that, I think, is really going to be an interesting takeaway from this morning.
You go all birds on us and you say, turn, turn, turn. Is that what we're doing right now?
Yeah, big question coming into this year for us was, when is that turn going to be?
What a fantastic conversation.
The news you need.
The president is calling on manufacturers to make more in America. It is working, and it's reflected in these jobs numbers.
The analysis you trust.
How do you take this anecdotal data and say, really, just focus on the now, because that is going to tell you where we're going?
What is the measurement of uncertainty that we have in studying the American economy?
Friedman had said there are long and variable lags in the impact of monetary policy. For man, it's a long slog.
The best way to start your day.
People are tuning into this program on a daily basis.
Oh, come on, it makes for good TV.
Let's move on.
Bloomberg Surveillance. Weekdays from 6 to 9 a.m. Eastern.
Have you compensated any of the victims? These girls, have you compensated?
I don't believe so.
Why not? Don't you think they deserve some compensation for what your platform has done? There's families of victims here today. Have you apologized to the victims? Would you like to do so now? Well, they're here. You're on national television. Would you like now to apologize to the victims who have been harmed by your product? Show them the pictures. Would you like to apologize for what you've done to these good people?
It really was high drama in Capitol Hill. Just take a look at these images. Was it choreographed or not? That's the question you must ask yourself. Senator Hawley grilling Mark Zuckerberg, prompting an apology to the families who say that Instagram contributed to their children's suicides or exploitation. Zuckerberg was just one of several big tech CEOs facing that Senate Judiciary Committee, discussing the various ways to improve online safety for children. Joining me now in terms of what we can expect today is our Bloomberg Technology co-host Ed Ludlow. Ed, very theatrical, and it should be said he wasn't the only CEO that was brought in front of Congress yesterday, although he did arrive voluntarily, it should be added. So, bit of context for us, Ed. Good morning.
Yeah, good morning. I mean, the reporting is it was an impromptu moment, and Zuckerberg did apologise. He would go on to say, I'm sorry for everything that you've all gone through. It's terrible. No one should have to go through the things that your families have suffered. And as Bloomberg reports, and I encourage you to read the story, there were a number of activists and victims in the room, as Senator Josh Hawley alluded to, that had mixed reactions to that apology, many of them saying it's not good enough. This was important because it was the first time that Linda Yaccarino, the ex-CEO, testified in front of Congress, as well as Evan Spiegel, the Snap CEO. And, you know, the question is what comes out of this? And the answer is probably legislation. In the first instance, Linda Yaccarino gave an endorsement for the Stop CSAM Act, which has not yet to reach the Senate floor, but is an important piece of legislation in the context of child safety. Both she and Evan Spiegel also talked up other legislation like the Kids Online Safety Act, but didn't give official endorsements. And as you know full well, Manus, the issue with these hearings is they can often venture off topic. In the case of the TikTok CEO, for example, there was a line of questioning about his relationship with China and the Chinese Communist Party and the companies. His point was that, well, I'm from Singapore and I'm a citizen of Singapore. But often it goes off-piste. This stayed very focused on child safety, which in an election year is critically important.
Look, absolutely, and it is quite shocking. You've only got to go and look on Instagram for that question. Are you a member of the Communist Party? You just see the CEO look up in complete shock as to the politician not understanding his nationality. Ed, thank you very much. Ed Ludlow with the very latest. Let's stick with big tech because it is Meta Apple, and Amazon, all reporting the results. It's going to be after the closing bell. 15% of the S&P 500, a little bit higher on Amazon and Meta relative to Apple. And Facebook's parent company expected to post double-digit growth fueled by heavy investments in AI. Scott Devitt is Wedbush Securities. He joins me now. So you have an outperform rating on the stock, a PT of $350. Scott, good to have you with me. It's hard to believe Facebook is 20 years old this year. What's going to move the dial today? Is it going to be the ad spend, or is it going to be the AI guidance? Good morning.
Good morning. How are you? I think it's both. I think the ad spend, the recovery in this business and the narrative of the stock has been quite amazing in the last 12 months, and I think that that's going to continue with the report today. We're looking for $39 billion in revenue, up 21%. I think you'll hear Zuckerberg talk quite a bit about AI, AR, VR infusion into the business. And, they've kind of taken the air out of the room in the ad industry relative to Alphabet's recent report. I think they'll see more evidence of that tonight.
I mean, it was quite bruising, wasn't it, for Alphabet? I mean, they missed, and I know the principle is that they missed, and that delivers uncertainty, and therefore the future of what they've got to spend really comes into question. But when you look at Facebook, Instagram, Reels, WhatsApp, and Threads, it's also going to be a monetization. Do you think that that's going to be, excuse the pun, a thread that we get more detail on?
I do. I think particularly Reels. You had this company a few years ago had issues with perception around the Blue app, the core Facebook app, and saturation. It had questions around Apple and IDFA, and it's kind of the other side of both of those debates very strongly. And Instagram is picking up growth, but Reels is a $10 billion run rate business now. So when you think about the TikTok debate that existed, that's also been diffused. WhatsApp is doing better. There's the messaging monetization in the business as well. So if you think of these stocks as kind of multiple fair value and narrative, Facebook has flipped the narrative on its head. Conversely, Google's dealing with something a little bit different now, where the business is actually doing quite well, but anything that it spends, investors immediately conclude that they have to spend more to drive search in an AI-centric world, and it's viewed negatively. Whether that proves to be true or not remains to be seen, but for the next 12 months, that underlying narrative very much favors Meta over Alphabet.
This comes down to what is the metamorphosis from a company called Facebook to a company called Meta, and what does it deliver in the AI sphere? One or two analysts are more forgiving of what's going on at Reality Labs, the spend at Reality Labs. Try and help me understand what Meta and AI is. What is the star of AI in the Meta domain?
So you have Advantage Plus, which is the advertising technology that's really come out of the post-Apple IDFA period, and the ability to better target advertising. That's one component of AI that will benefit the business. Probably the most relevant financially at the moment. The bets that the company is making with Reality Labs, they're running at about a $15-16 billion annual loss right now, are things like the Meta smart glasses and Llama, which is their version of the large language model, and the Meta Quest headsets, which are all very interesting open-ended opportunities. And what is so interesting with Meta now is you have that optionality built into the multiple. You're paying about 22 times earnings for a business that has an embedded $16 billion loss on things that are still, on the come. So one of two things could happen. Either A, they pull back because some things aren't working and you're paying a lower multiple as an investor, or B, this actually works and it opens up top-line growth. So I think either outcome is quite positive for the company. Obviously, you want the growth, so that's the more prominent outcome, but either is positive.
Not a bad roll of the dice at 22 times earning relative to some of the multiples we've got out there. Scott, thank you very much. Good. Let's see what we get later on this evening on the Meta report. Sector price action. Let's get back to Apple.
Well, with the S&P 500 up about 0.4%, more sectors are higher than not, led by some of those mega cap tech sectors. Let's take a look at the bottom, though, because we have some of the defensive sectors. We also have financials down 0.3%. Let's dig in just a little bit more there. And not surprisingly, with the NYCB blow up yesterday, we do have the regional banking index down 7.5% over the last 3 days, the worst stretch since October of last year for that ETF.
Abby, thank you very much. I will go do with the very latest on the sectors. Trading diary coming up. It is about earnings. Amazon, Apple, Meta are all delivering their numbers after the bell. The AI, day 2 of the AI evolution, revolution. Payrolls Friday, you got it. That's the only thing that really matters. Monday, you'll have had the hangover from payrolls, and you're going to begin a little bit of Fed speak. Atlanta Fed President Raphael Bostic. Tuesday, the earnings roll in from the European banking giant UBS, and Friday, the earnings from PepsiCo. That's it for Countdown to the Open. We are nervous ahead of these Meta earnings, as you just heard. It is all about the advertising number in those. And Apple, can they break trend? Can they deliver a rise in revenue for the first time in a number of quarters? That's it from me and the team on Countdown to the Open. Surveillance is up next. Actually, it's not surveillance. That was 2 hours ago. Thank you very much. This is Bloomberg.
Thing in life I've often said is to be happy, but you seem like a very happy person.
It's like nature. Nothing ever stops. So you could be super happy for 1 minute and then something happens. So it's just living. It's the joy of life.
For any young woman that's watching this and wants to be the next Diane von Furstenberg, what would you recommend?
I think the most important thing in life is the relationship you have with yourself. Once you have a good relationship with yourself, any other relationship is a plus and not a must. And the second advice is to be as true to yourself as you possibly can. And you have to accept and own things you may not like. But the more you could be you, the happier.
People ask me all the time, what is the key to being a really good investor? I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Today, I would say perhaps only second to AI right now, which is AI has got so much going on that folks are so excited about it. Climate tech is the hottest area to be in.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Your fixed income fix. Watch Bloomberg Real Yield at its new time, Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything. This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, you're listening to Bloomberg Intelligence. Alex Steele and Paul Sweeney here. Bloomberg Intelligence, the investment research arm of Bloomberg. We have 400 research analysts around the world covering 2,000 companies, 120 industries, and we're going to feature those analysts over the next couple of hours as we dig deep into some of the stories in the marketplace. Coming up, we're going to check in with the CEO of Rockwell Automation coming up. They just reported earnings. We'll get the latest there. We're also going to check on Julia Pollack. She's the chief economist at ZipRecruiter. Get a preview of that jobs number tomorrow. And Karen Ubelhart, she is Bloomberg Intelligence senior analyst. She covers all the industrial companies. We're going to talk about Honeywell. They're reporting some earnings here today as well. But first, let's kick everything off with Mr. John Tucker.
Hi, Paul and Alex. The Bloomberg Market Drives report being brought to you by Interactive Brokers Bond Marketplace. Access their vast selection over 1 million global fixed income securities. No markups or built-in spreads and low transparent commissions. Learn more at ibkr.com/bonds. Well, after yesterday's tech-led sell-off, 7 of the 11 major industry groups in the S&P 500, they're higher right now, and it's being led by communication services. Biggest drag that's coming from the financials right now. And after the central bank threw some cold water on the idea of a March rate cut, Tom Borselli, chief economist at PGIM, says Fed Chair Powell should get on with it and cut.
I'm not sure how much more he wants to see. We have 6 straight months of core on a 3-month annualized basis, sort of oscillating around 2.0%. The problem with wanting to see more good data is that you run the risk of potentially doing some damage from a labor market perspective.
And Apple, Amazon, Meta Platforms, all reporting after the close of regular trading today. Their updates going to give fresh insights on the companies at the heart of the recent rally on Wall Street are matching up to lofty expectations. Apple in particular, they've suffered 5 straight sales declines in a row, so we'll see how that goes. S&P 500, 14 points higher. That's up 0.3%. 4860 on the index. The Dow Jones Industrial Average up just 13 points right now. The NASDAQ 100, 53 points higher. That's up 0.3%. And after some of the data we got today, 2-year yield, that's 2 basis points higher right now. The 10-year is down 1 basis point. That's at 3.89. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker at your Bloomberg Business Flash. Paul and the returning Alex bearing with her gifts, I can see.
Yes, exactly.
Which one?
So you were Florence, Italy.
I was Florence, Italy.
Italy, okay. That's not South Carolina. Florence, Italy. And why were you there?
It was a Baker Hughes 2024 annual meeting. So you just basically get around with all these LNG CEOs and oil services guys. You just talk shop for 2 days, and then maybe there's some time for.
And what's their view on? What's their what was your takeaway for their view on kind of the energy space?
They are really mad at the Biden administration for that moratorium, and they're all talking their book, right? But they're all very much even if it's only delayed 8 months, it means we're unreliable. Japan's going to go to Qatar or somewhere else. They're not going to come to the U.S. Up in arms.
Really?
Yes, but no one's talking about Iran. No one's talking geopolitical risk, which I found to be very odd. Because so many things were happening at that time.
All right, we'll get into that.
No tree huggers in Florence.
I mean, no, at least not where I was. And then yes, I have a gift for them. I have amaretto cookies, guys.
Oh, nice.
It's very exciting.
Those are the ones with alcohol in them.
Yep, this is just all for John Tucker.
Awesome. Yes, sitting on his rocking chair in his jersey. All right, good stuff there. We'll get some more on that. So back from Italy. Good stuff to have Alex back here. All right, looking at the market here, I got a lift here. I got the S&P up about 0.4%. The NASDAQ up about 0.7%. Again, we're going to have another big tech earnings after the close, bunch of companies, and we'll break that down as well. Let's go to Norma Linda. She covers equities in the markets for Bloomberg News, and she joins us here in the New York City studio. or what are you looking at?
We are seeing a bit of lift in the market broadly, especially after digesting that data about the labor market potentially cooling. But I do want to take a look at Qualcomm. That is ticker QCOM. Those shares are falling as much as 5.7%. That's the biggest drop since September. A lot of analysts did note that there are some signs of recovery in the key markets, but ultimately, while they do expect potentially a modest recovery, the chip maker warns about high inventory levels. And so the stock is really inching closer to the price target that Citi analyst is saying. It says that it appears the beat and raise cycle is ending. Citigroup did cut the recommendation on the stock to neutral from buy. We did have BI saying that the results may mark the beginning of a turnaround in smartphones, but ultimately analysts are not as satisfied as they'd like to be thinking about this high inventory.
Yeah, I mean, it's just a matter of, like, again, where are we in the smartphone cycle? We're all looking for the super cycle. I've literally been hearing that since 2016. Haven't gotten there yet, and that is a trickle-down problem.
Right. It just falls through, and as everyone's comparing it to its peers, it doesn't seem to be living up to what we're expecting.
Qualcomm, we're going to hear from the CEO at 11:45 a.m. Wall Street time. Ed Ludlow from Bloomberg Technology will have that for us.
What else you got? Align Technology?
Yes.
What is this? What?
Back on the flip side, we're looking positive here. Align Technologies, they are actually the maker of Invisalign. So if you all are very familiar with the teeth straighteners, yes.
Okay.
So that's if you don't want to get braces and you would like to go to work and not have anyone notice that you're getting your teeth fixed.
John Tucker's for you, man.
You pop them in.
Do it yourself dentistry.
And
that's what I hear.
Two things here. Well, three things. A, I'm told it works.
Right.
B, it's not cheap. At all. And C, my 19-year-old son came and asked if he could get them, and my response, no. And the reason I said no is because he didn't wear your retainer when we did the braces thing. You had your one shot, dude. If you want to get them, you pay for it. It wasn't even that.
Those are just horrid.
Yeah, it wasn't even that back then. So when he was 13, we did it, got it all fixed, spent an arm and a leg, and all he had to do was wear his retainer for a couple years, and he didn't do that very well. Now he's coming back.
This feels real.
But this company is really showing that it has topped expectations for fourth quarter results. We do have those shares climbing as much as 15%. It's surging for its biggest move since July. So while we may not be interested, apparently some people are.
What about Peloton? Are people interested in Peloton?
We talked about this a lot last time. Tom's not a Peloton person.
Is he not?
No, so shocking. But anyway, we're talking about it, and it didn't go well for our Peloton fans.
Well, those shares are slumping as much as 15%. That's the worst day since August. Peloton said it expects yet another sales decline this quarter. It's been dealing with its own inventory issues and really struggling, as we know, to recover from the post-pandemic slump. It just doesn't seem to be getting there, and it's just predicting another sales decline, and this does not seem great. The projected revenue is $700 million to $725 million for 3Q, and it was well short of expectations for $755 million.
This is a sad situation for us Peloton users.
You're a Peloton user?
Right, I forgot about
Bike,
that.
treadmill?
Both. We have both.
Really?
I do the bike, but not much. My girlfriend is crazy.
So what do you think it is? Like, if your experience is good, is it just penetration at this point?
Yeah. It was the pandemic. It was a classic pandemic stock. You know, people, and there was at the beginning of the pandemic, they literally could not source enough bikes to meet demand, and they did a lot of things to try to meet that demand that costing them a lot of money now. Now it's just simply people going back to the gym. So that demand is not there. It's a more normalized world. They have to normalize all their operations, normalize their balance sheet, and it's just taking a while. I have spoken to the CEO, and my call was, you got 3 million crazy loyal subscribers. You got to figure out a way to make more money off of them, whether it's advertising, merchandise, I don't know what it is.
Like services, creative services, yes.
Exactly.
And they were trying to appeal to college students. I know they were doing a push toward the University of Michigan. That's what we've been reporting, but it's failed to spur enough sales.
Yeah.
Well, yeah, because they're too busy going to
their campus gym.
They don't have any money.
Oh, but
or nothing. They're just going from the
and the thing at universities over the last decade, the thing has been these crazy construction boom for quote unquote wellness centers. So they've got wellness centers, they've got gyms out the wazoo. I mean, it's an arms race. So what do they need a bike in the room for? They've got everything.
Where's the space for it?
Where's the space? I mean, geez. All right, Nora, thanks a lot. Really appreciate it. Nora Melinda joining us. She'll be back within the hour. So let's talk about things that are working and not working. Let's go to Rockwell Automation. So that company is a really great indicator of sort of end user demand. It provides control devices and software for industrial automation. Now, it reported earnings yesterday, and it tumbled the most intraday since 2022. too, because its fiscal first quarter profit did actually miss estimates. The stock now up by almost 3% today. We are now joined by the CEO, Blake Moret. We're really great to get this perspective. Hey, Blake, what do you think the market took away yesterday from your earnings?
Well, I think they did hear the message of continued underlying demand remaining strong, but we had a shipment miss in the quarter. A lot of that was execution, and we look at that as timing for shipments that will come back in the year. You know, we had very strong growth last year of 17% top line, 28% adjusted EPS. This is a bit of a reset year as we get done shipping off that older backlog that piled up as a result of supply chain shortages and go back to booking and billing incoming new orders. And so we're seeing lower growth in the year with some growing pains, but the underlying demand remains pretty strong.
That's kind of where I want to go, Blake. What are your tell us and our listeners and our viewers, like, who your customers are and what are your customers telling you these days?
We may be the most pervasive technology in American manufacturing. So everything from automotive and battery manufacturing to warehouse automation, food and beverage, life sciences, energy, both traditional fossil fuel as well as renewables. Across that whole spectrum, our technology, our hardware, and our software and our services are pretty prevalent.
So when do you know, Blake, if it's still the supply chain issues that you're still working through versus just weaker demand? Like, do you even know when that moment shifts?
Well, so we had an encouraging quarter in the demand side in that in Q1, so the quarter ended in December, we did see double-digit sequential growth in orders off of the trough in our fiscal year, our fiscal Q4 last year, and those orders increases have continued into January. So that's a very positive sign. Now, a lot of our distributors, and most of our business does go through electrical distributors, they had higher inventory than they wanted, and we expect in the coming couple of months that that inventory gets to more of a normal level so that their orders to us reflect the strong underlying demand from machine builders and end users.
Blake, how much lead time do you have in your business? What's your order book and kind of how much lead time do you really have?
So the product business, which is the majority of our business, those lead times are typically days and weeks in a normal period. And part of our challenge in Q1 was returning all of our products to those fast lead times. But in a normal environment, we get an order and it either gets shipped that day off our distributor's shelf, or we're able to make it and ship it within days or a few weeks for those products.
So are you an early cycle economic read? Is that fair to say?
You know, we certainly have exposure early in the cycle, but the so-called late cycle is also an important part of our business. Whether you're talking about the traditional process industries or life sciences, we've got pretty broad exposure early, mid, and late cycle. Although I have to say, with the supply chain backlog that we had in 2022 and 23, with the distributor overstock that we're working through now, it's hard to pin a particular point in this traditional cycle on this time.
Well, also because you're exposed to sort of all the structural changes too, like Infrastructure Act, the CHIPS Act, the IRA. So that's a structural shift, even though you're still cyclical. I can imagine that being quite confusing. So based on where you are in all the different cycles, how are we doing? Like, how's the global economy doing?
You know, particularly in our home market in the U.S., where we have the largest market share, we see continued strong underlying demand. So we're expecting our orders to be up low single digits, and we've guided to 1 point up in terms of organic shipments. But that underlying demand, I think, remains strong. And one of the key indicators for me is continued low unemployment rates in our most important markets.
So, Blake, I'm looking at the PGEO function on the Bloomberg terminal, and I can see just by geography, looking at your revenue, again, 60% roughly of your revenue is North America. So give us a sense of kind of North America versus rest of the world. What are you guys seeing?
North America is the strongest market. China has significant problems right now, and Europe still dealing with some of their structural issues. A lot of the business we get in Europe is actually for export back to North America from the machine builders over there. But we expect for this year, North America is going to be the strongest market. And that's good for us because we've got home field advantage.
This feels like a U.S. exceptionalism conversation, right? Like yet again. So if we just go macro then for a minute, if the Fed cuts rates in May, what does that do? Like, if you're already seeing U.S. hold up pretty well, does that accelerate the economy from where you stand?
I think that could help some of the largest CapEx projects, which, we get some business from, but we're not as much of a CapEx play as, some other names, and that we're pretty balanced between CapEx as well as OpEx in terms of improvements, additional efficiency in existing facilities as well. So I don't know that interest rates are our biggest indicator. As I said, for the economy, I look at unemployment and, I look at the amount of automation investment, both for new greenfields as well as adding efficiency and resilience in existing facilities.
Blake, just explain to us kind of what your competitive marketplace looks like. Where are you guys versus your competitors? Who do you compete against, and how is that changing?
So our big competitors are mostly the European conglomerates, really. It's Siemens, Schneider, ABB. In certain narrow parts of the market, Honeywell and Emerson here in the U.S., where really, we distinguish ourselves by having a very balanced exposure from discrete applications like automotive to hybrid applications like food and beverage and life sciences to continuous process applications like energy and mining and so on.
Hey, Blake, to that point, Honeywell's not having a good day. After reported earnings, one of the worst performing stocks in the S&P. Siemens Energy, part of Siemens, had just been really hurt by offshore wind here in the U.S. I should say not owned by Siemens, but Siemens owns a stake in Siemens Energy. What's your view on the energy green transition build out right now? Are you losing money? Are you making money? What does your order book look like?
It's still early innings, but we're seeing good business as a result of energy transition, and I would bucket it in three different ways. I'd look at first the decarbonization of the traditional oil and gas companies, so carbon capture projects. We've talked about the work we're doing with Occidental and their direct air capture projects, the 1.5 initiative. It's renewables, and again, we've talked publicly about what we're doing with companies like First Solar in creating, PV panels. And then it's the thing that we've been doing for our entire history, and that's driving efficiency across all manufacturing. And those are all good applications for us. There's some relatively nascent areas like hydrogen that are sources of optimism, but, I would put them in those three main areas.
Hey, Blake, I'm looking at the ANR function on the Bloomberg terminal. It shows me that there are 11 Wall Street analyst buys on your stock, 12 holds, and 5 sells, so pretty mixed across the board. What's the message that you bring to your investors into the marketplace?
That the underlying demand remains strong, that we really have a unique position among all of those competitors and among the niche competitors. I like the hand we have, and as manufacturing picks up and resets from the period of supply chain shortages, we're in a great spot to accelerate our profitable growth.
Before we end here, we have 90 seconds left. You mentioned jobs quite a few times. We have the jobs data tomorrow. We got initial jobless claims rising the most since November today. What is your assessment of the labor market? Hard to get? You going to keep labor, paying more? What do you see?
I think in manufacturing, workforce, there's still a lot of unfilled jobs. And we think that, having a skilled workforce is absolutely essential for manufacturers to compete, but it's augmented with the kind of technology that we offer. So it's really that winning hand of having an enabled and engaged workforce, and we do a lot to help with workforce development, and it's also given them so-called superpowers with the technology that we offer.
Superpowers. Sounds great.
Can you find people for your type of work?
Certain jobs, it takes longer than in others. We're actually helping with workforce development programs that we offer in-house and then provide labor, particularly focused towards technician level jobs for manufacturers in America through our Academy of Advanced Manufacturing.
Interesting. All right, Blake, we really appreciate your time here. I know you're busy with the earnings and running a business. Blake Moore at Rockwell Automation. He's the CEO over there. ROK is the ticker for the stock, and the stock down about 16% year to date. So I guess a lot of investors are waiting for that manufacturing turnaround. We did get some better ISM manufacturing data. We'll talk to Tim Fiore coming up on that. So we got it still in contraction mode, but getting better. So again, a lot of investors probably looking for that turn in manufacturing when looking at a company like Rockwell Automation. All right, let's reset right now. Go over to John Tucker, and we'll get a Bloomberg Business Flash.
And right now, the major averages, Alex and Paul, they're all higher as we await earnings from Apple, Amazon, and Meta platforms. They report after the close of regular trading in the U.S. today. A measure of factory activity, you just mentioned this, that was a 15-month high at the start of the year. They had the strongest orders since May 2022. But as you point out, still below 50, 49.1. So that does mark contraction territory. They have Peloton Interactive, those shares tumbling, the company saying it expects to record another sales decline in the current quarter. S&P 500 right now, 22 points higher. This is being led by technology, up about 0.5% after yesterday's sell-off. 48.67 on the index. The NASDAQ at 100 right now, 90 points higher. That's up about 0.5%. And the Dow Jones Industrial Average, just 60 points higher right now. That's up 0.2%. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash, Alex.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele and Paul Sweeney, we're live here in our Bloomberg Interactive Broker studio. We're also streaming live on YouTube, so head over to youtube.com, search Bloomberg Radio. That's where you'll find us. We're also in Apple CarPlay and Android Radio, so we're pretty much everywhere. Go and check it out on the dashboard. We've got the Bloomberg Business app. That's where you can find all that stuff. Tomorrow, another jobs day. They just kind of sneak up on you every once in a while. So we've got non-farm payrolls. The consensus is for an addition of 185,000 jobs. Pretty solid number. That would be down from last month of 216,000 jobs. But that's certainly something that the Federal Reserve is looking at. So let's get a little bit of a preview there. Julie Pollack joins us. She's a chief economist for ZipRecruiter, joining us on Zoom from Los Angeles. Joey, thanks so much for joining us here. What are you looking for in the jobs data tomorrow? What do you think the Fed's looking for in the jobs data tomorrow?
So I'm going to predict that job growth will continue to slow. The 3-month average right now is 165,000, but I think we can even fall below that. So I think the risk is very much to the downside. Job growth has been slowing and narrowing over the course of the year, and I think it will continue to do so as long as rates hold steady at these restrictive levels.
Well, I was going to say, yes, and also I feel like headline after headline, it's like job cuts, job cuts, job cuts. So from our perspective, sitting here, it can feel super dramatic. Is it, or are we just like normalizing at this point?
So, it's always difficult to figure out what the trend in layoffs is in January. And that's because December and January are layoff season. 20% of all layoffs in a year take place in just those 2 months. So, it's kind of like predicting that the temperature is just going to get colder and colder and worse and worse and worse when you're sitting in January and you're sort of plotting, September through January temperatures. We don't know, right? It could get worse. So far, layoff numbers as tracked by Challenger Gray are lower this January than they were last January. We know we had this huge spike in layoffs in December and January last year, but also that over the course of the whole year, according to Bureau of Labor Statistics JOLTS data, layoffs were unusually low. The layoff rate lately has been 1.0% in 2016, 2017, 2018, 2019, and averaged 1.2%. So we 20% fewer layoffs and firings now than is normal, even though it feels as though they're all new.
So I see in your notes, Julia, 92% of job gains over the past 6 months through December were just 3 sectors: healthcare, the government, and leisure and hospitality. I did not know that. That doesn't sound like a healthy statistic for the labor market.
No, it is actually quite unusual. In the previous month, it was even worse. It was 98%. So last month, job growth broadened a little bit. But that is the next big thing I'm going to be looking at. Not the magnitude of job gains, but their breadth across the economy. They're only happening in these non-cyclical sectors. They're basically fueled by the government, healthcare and government. That isn't a good sign for the economy at all. It would give us reason to understand why consumers, why job seekers, why workers are still feeling a little glum about the situation, even though we have these huge GDP numbers, etc. It's because the happiness is not spread equally around.
Well, here's a dumb question. Why is that a bad sign if it's mostly leisure, hospitality, government, and healthcare?
Well, because lots of people are working in those industries, right? There are lots of us who are in tech, or in law, or in consulting, or finance. There's massive demand for nurses. Healthcare is just hiring. Leverage in that industry shifted to workers during the pandemic, and they have not lost that leverage increase. But in the rest of the economy, it's different. It's not so easy for everyone to kind of move into healthcare, right? So when certain industries contract and the number of jobs available just keeps falling, and it's not a matter of one company doing layoffs so you can just go to the next one, but the entire sector contracting, like journalism, for example, the media, the press, well, you can end up having people who are unemployed for quite a long time. It's very hard to make a shift.
Hey, Julie, I'm looking at the forecast for some of tomorrow's data on the Bloomberg terminal. Average hourly earnings year over year, 4.1% is the projection, kind of flat with last period. That seems pretty good to me. What's the wage environment from your perspective?
That is pretty good, but most of the data does show a steady slowing in wage growth. We had ECI data yesterday that showed we had 3 straight quarters of declines in wage growth. The annualized rate of wage growth for the quarter was 3.7%, which is actually very close to what the Fed would expect is consistent with 2% inflation. So I think we could actually see a slightly lower number. We'll see. And it's also, I think, important not just to fixate on these year-over-year numbers, right? Wage growth was very, very fast last year and the year before. In nominal terms, right? The inflation was higher for 25 months. So actually, if you're looking at real earnings, wages have some catching up to do to make up for the 9% inflation.
Yep.
Are we seeing labor hoarding? Julia, you mentioned how, I know it's seasonal, but the amount of layoffs we normally see is below the norm. Are we seeing hoarding?
So there are several anecdotes in the Fed Beige Book of companies saying, business activity is, we have more employees on hand than needed given current levels of business activity, but we're keeping them because we expect conditions to improve in the back half of the year. I think that's sort of code speak for we're expecting the Fed to cut rates and investment to boom again, and people to build, buy houses and buy refrigerators and furniture. And so we're holding on to these employees because we've been burned once before and we know how hard it is to get them back. So yes, I do think that is occurring in many instances.
I can't imagine if I owned a business hoarding employees. Who can afford that?
Well, I think that's kind of the point. And you have to wonder, too, how long until they are forced to? Either does the data deteriorate that much, or do they need to see the Fed hikes get pushed out, cuts get pushed out even more? What's the tipping point for that?
I know. And, Julie, I have another thing that I just can't get my head around. What's this JOLTS thing? It's still 9 million job openings. Where is everybody?
Yeah, so
why are people working? That number's usually 5 or 6 million. Now we're at 9. It was as high as 12 million. Are people just hanging around Starbucks all day?
So I don't put that much stock in that number. There is a clear upward time trend in the job openings series that is not evident in any other labor market data. So job openings have kind of become decoupled from hires, from quits, from the things that they typically are correlated with. And I think if you remove that time trend, job openings are actually all the way back to normal. Our data is on online job postings, and by our count, it's deduplicated online job postings. We are all the way back to pre-pandemic levels, to 2019 levels.
And to that point, Paul, when I was in Florence, Italy,
Yeah, dropping
the
there
wine
again,
and
John.
pasta.
Yes.
And I was talking to a lot of these guys who are doing, innovative stuff within energy technology and stuff like that, and they're trying to build all these new facilities. They're the ones who are going to be using a lot of that IRA money. They're like, we do not have the workforce. So, at all. Like, there's no special training program. This is all new technology. They just don't have the people, and they're not going to get them anytime soon. And I do wonder how that winds up distorting
I agree. That's
a lot of the data, too.
Yep. So,
right, and so we do have very low unemployment, right? So last year was like the sixth best year on record since 1940 when it comes to the unemployment rate, after the early 50s and the late 60s. So very, very low unemployment, 24 months of sub 4% unemployment. So it is so hard for employers to find workers. And so I don't think it's that unrealistic or unreasonable to hang on to the workers you've got for dear life.
where are we in terms of productivity here? I was amazed when the pandemic hit and shutdown and lockdowns and all that kind of stuff, that people were still able to do their jobs pretty much from remotely, and it's just kind of amazed me. Where are we in the productivity discussion?
The productivity data series is a weird one. It shot up during the pandemic when there were massive layoffs, and those layoffs are typically concentrated among employees who are not, day-to-day involved in generating widgets. Then measured productivity tumbled as all of those support staff, the HR people, the marketing people came back. Then it started ticking up from a point above the pre-pandemic trend. And so it does look as though the investments that happened during the pandemic in a zero interest rate environment, when everyone was shifting to computers, to doing everything on the internet, to digitalizing every industry, those investments have actually improved productivity, and we're seeing great productivity numbers continue now.
I feel more productive. Don't I look more productive?
Well, I mean, you are literally standing in this position for 5 hours.
Exactly.
So just from that alone, yes, the answer is yes. All right, Julia, thanks a lot. We really appreciate it. Julia Pollack, she joins us from ZipRecruiter. She is the chief economist. I do think, though, that longer term, the labor shortage in different industries is going to be really hard, and I don't know what the longer term fix that is. You have to convince kids to go to trade school.
That's exactly what I was going to say. Create the incentives for the folks to go to trade schools, because, and we heard it just recently from George Ferguson talking about his industry, the aerospace industry. One of the reasons Boeing and the FAA are having a hard time kind of getting their act together is they lost a lot of workers in the pandemic, and these aren't just people that hammer nails. These are people that do pretty specialized, jobs there, and you got to get them back. You got to retrain them. It's taking harder. I didn't think that would still be an issue, but it is, and we're here from industry after industry, your industry in the energy space.
You have to wonder, at some point, does that wind up becoming longer-term inflationary?
Yeah, absolutely. I mean, a lot of folks are saying, forego college, forego the debt that's associated with college, go to a trade school, a lot of which can be subsidized and supported. Man, you can make a good living in a lot of these industries. So we'll have to see how that plays out. But good, we'll see the jobs numbers tomorrow. We'll get a lot more info on the United States labor market. And of course, Bloomberg will have full coverage on that, because that's what we do. Right now, let's head down to Washington, D.C. We'll get world and national news with Amy Mars.
All right, thank you, Paul. Plans have been approved for strikes against targets, including Iranian facilities inside Iraq and Syria, CBS News citing U.S. officials. Those strikes will come in response to drone and rocket attacks targeting U.S. forces. President Biden is expected to issue an executive order today that would punish settlers in the West Bank who've been attacking Palestinians in the occupied territory. That's expected to include sanctions against those settlers. And negotiations are advancing for an agreement to pause the Israel-Hamas war and free civilian hostages captured by Hamas. Sources tell Bloomberg conversations are still in the early stages, and a breakthrough isn't expected in the coming days. European Union leaders striking a deal on a financial aid package for Ukraine after a nearly 2-month delay. Ukraine says it's running out of artillery. A rare bipartisan vote in the House, which has passed a $78 billion business and child tax break bill. But it took some doing, as we learned from Bloomberg government reporter Jack Fitzpatrick.
Probably a big enough number, 357 votes in the House, to give it a bit of momentum in the Senate, where there still has been some skepticism, but a very impressive House vote, I think, may give it some momentum heading into the Senate.
Where Majority Leader Chuck Schumer says they are working on a deal.
I support the tax bill, as I've stated before. I'm working with Senator Wyden to figure out the best way forward.
The White House has said he will sign the measure if it can pass the Senate. A new poll from the Associated Press Nork Center for Public Affairs Research finds that 35% of U.S. adults call the national economy good. Now, that's an uptick from 30% late last year, but the numbers don't seem to be helping President Biden as he runs for re-election, in part on the economy. His overall rating remains around 38%. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg News with this Bloomberg Business Flash. Following the market's worst two-day decline since October, the major average is higher. Investors waiting for earnings reports from three mega-cap tech companies, Apple, Amazon, Meta Platforms, and that comes after the close of regular trading today. On the economic front, jobless claims data ahead of the jobs report tomorrow showing the number of Americans applying for unemployment at the end of January rose to a nearly 3-month high, so I'm going to call that Fed-friendly. And after Fed Chair Powell kind of poo-pooed the idea of a March rate cut, Kamal Sri Kumar Global Strategies suggests the Federal Reserve is being a little erratic.
What happened between December 13th and yesterday to cause a big change to hawkishness? Nothing. If anything, inflation numbers came out more benign than expected. So this is what is the problem with not having a long-term view on the part of the Fed.
And right now, the Dow Jones Industrial Average up 137 points. That's up 0.4%. The S&P 500, 28 points higher. That's up 0.6%. 48.73 on the index. And the NASDAQ 100, 120 points higher right now. That is up 0.7%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker at your Bloomberg Business Flash. My new favorite cookie. Whatever cookie that is from Florence, Italy.
That's the new one.
I don't know because it's written in Italian, but there's some amaretto thingy with some powdered sugar.
Oh.
This is what I got.
It's really light. It's just like perfect. It's
Just
not a
melts in your
heavy-
mouth.
So it knocks off Oreo from your number one list. Okay.
Well, ever since Oreo stopped putting enough of the cream in there, they just kind of skimped on that. So.
Yeah, because it's gross.
No. Well, that cookie
It's a
beats
great American,
Oreos,
great
so
American
I gotta go. So.
All right, John Tucker, thank you so much. We appreciate it. Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. We talk a lot about the tech companies reporting, but we got like some real companies reporting, real manufacturing, American global manufacturing companies reporting. One of them is Honeywell International. I think the numbers are okay, but the guidance is probably a little bit light here. Let's check in with somebody who does this industrial stuff. She's been doing it for decades on Wall Street, one of the top analysts out there. One of the absolute first analysts we had at Bloomberg Intelligence. So it's good stuff. Karen Ubelhart joins us, Bloomberg Intelligence. So, Karen, I know you got a ton of companies reporting today, and let's just talk about Honeywell, and then let us know what else we need to be aware of.
Honeywell, some of the margins were disappointing, and the organic growth was light.
Now they make what's one of their key product areas?
Aerospace is the
That's
biggest,
it.
but they also make chemicals. They make warehouse automation. They make home building. I mean,
97,000
building,
employees
a lot of
based in
different
Charlotte, North Carolina. They make all that.
They do a lot of energy transition stuff
Yes.
too. Yes.
Okay. So sorry to interrupt. So the numbers were okay.
Well, I'd say disappointing on an organic growth basis in 3 out of the 4 businesses, and margins weren't that great either. And Honeywell always sets a bar and beats a little. Sets a bar and beats a little. This time they didn't, and they were a little short on organic growth, and they just met EPS. And as you said, guidance was
Okay.
So the
they
stock
needed
is getting
more.
hit really hard, though. I mean, really hard might be an overstatement, but like we're down 3%. If you look at a chart, it doesn't look pretty. Does that make sense, or is this an overreaction?
I actually think it does make sense because even if they don't get the volume, they usually get the margin, and margins are not bad. Margins are good, but the incremental margin was not that good. And also, there's one business there. It's called SPS, but it's warehouse automation generally, and it's been really weak for a long time. It's small, but I was hoping they'd say something like maybe they're going to do something about that. And it's had 9 straight quarters of declines year over year, and I'm talking over 30% this quarter, and double digits the last few quarters. And today he said we're definitely committed to this business. It's a growth business long term. But you get tired of that kind of numbers. It's only 15%, so it doesn't kill them. But it's getting old. So that's
And I'm
my
looking
word
at
criticism.
the stock on the trailing 12 months down a couple of percent. It's really done nothing. I would think with aerospace exposure, I'd want to own this thing because isn't aerospace spending in general?
Yeah, I mean,
growth?
it's 40% of the company. It does have a good outlook. That grew 15% in the quarter against double digits last year. However, there's been so much transition and change in so many of these big companies, right? And Honeywell is unchanged. And in sometimes you can say if it ain't broke, don't fix it. But people want change out of these diversified companies, and they still own the same 4 businesses they've owned for a long time. They run them well, the margins are great, but it's like, well, what are you going to do for me today? So the ones that are running are the ones that are narrowing their businesses or, making some big moves, and they haven't really made big moves.
Is this the question that I'm going to ask about? Is it just too big? It does too many things. They're not getting credit for the things that they do well, et cetera, et cetera. And I say that because I feel like every how many years? 8 years? 5 years? Will we go through the same conglomerate conversation?
We will. I've gone through it about 4 times.
There you go.
You put them up, you put together different businesses so you can smooth the cycle of these industrial businesses, right? Then somebody decides we need focus, and then they sell them all, and then we go through a bad cycle again, and they go, oh my God, look, I'm just in HVAC now, and my business is down 20%. I better buy something to balance that out. I think it's the bankers are behind it, they get both sides of it. But so this is running. This has been running for a couple of years. Yeah, in a couple of years, it's gonna change again. Yeah.
So, all right, so that's Honeywell. What else are you seeing in your space in terms of companies reporting, and what are you kind of learning about, I guess, industrial America?
I mean, you are seeing the top line is generally slower. The margins are holding together for most companies better than expected. And then you have these great executors like Parker Hannifin. In the old days, if you saw industrial production being slow, their business would fall apart. They have completely changed their portfolio. They're 30% aerospace now, and they execute it all the time. And so they raised numbers by, from $23 EPS to $24 with a half a year left. They gave us another buck in earnings, and it's all margin. And so and Carrier is executing really well.
Stock's up 5%.
Yeah,
I mean, Parker Hannifin's up 50% on
yeah.
a trailing 12-month basis.
Yeah. I mean, there's companies like United Rental that's doing great too, but that's because they've got trillions of dollars of money from the government, right? Parker, it's execution, and having a better mix. So, there's a number of those companies that are
Cleveland, Ohio, Parker Hannifin. Cleveland, Ohio, which is your country. That's right where, industrial America is 62,000 employees.
And I've watched that company from a company so volatile, low margins to the company it's today. It's an amazing transition. And I wish I could.
Here's the good. Fair enough. That's a record.
Because we don't own stocks here.
Yeah, cannot. Full disclosure. So what I don't understand is that the companies that should be benefiting from the infrastructure bill, the IRA, and the CHIPS Act, it should be all of these companies, but we're not seeing that uniformly across the board. In fact, some of the companies like the Honeywell that you think would be crushing it with it are struggling in certain parts of their business. What is up with that?
It takes a while to get these federal things going, right? So what is running now, 2 years later, or 2.5 years later, after it passed, is the infrastructure bill. So you're seeing a lot of money flow to that, and that's the story on United Rental and hashtag and some of the others. The IRA, which is the other big chunk of change, the states have to come up with their own process of giving out the money. And I was just at an HVAC show, and there's 50 different. Yes.
So wait a second, Lacey.
Whoa.
Alex Steele goes to Florence, Italy. You go to an HVAC show in Cleveland, was it, or Orlando?
No, it was exciting. It was in Chicago.
There you go. Okay, Chicago.
Okay,
that's the world. That's the world.
Before she goes, we got to do Karen.
Wait, they can't get the processes set up.
Okay.
So, but the money is there, the demand is there. They can't get their act together. That's the story on that. But it's going to come.
Karen Trivia. Where did she start her career? Anybody? New Jersey. It was in New Jersey.
Can we do multiple choice?
Yes. No. Markel, wasn't it?
Oh yeah, I had 2 factory jobs. I did Nabisco. That was the good job. But then I did Markel, and Markel, they're both gone. Markel burned down.
Who thinks that Karen's the coolest, most interesting, smartest person?
She's actually done it.
She's done it.
Oh, I
doesn't
sweat.
talk about it.
I sweat it. Yeah, it was unpleasant.
And she's worked on Wall Street for a long time, buy side, sell side, covering these stocks forever. She knows all the management team. She knows all the people we talk to. That's why we're fortunate to get her in our studio here. So we'll let you get back to earnings, Karen. Thanks so much for joining us. Honeywell, I'm seeing a little bit of a softness here today. Karen Uberhardt, she covers all the industrials, all the ags. She's been on top of these big John Deere, Earth Mover things. I don't know what's going on there, but that's kind of her job. She does that for Bloomberg Intelligence. Looking at the markets here, we're up about 0.5% on the S&P 500. The Nasdaq's up about 0.75%. So we'll take that. The Russell, kind of flattish here today. So yields, the 10-year Treasury, 3.86% off 5 basis points today. So yields pulling in for a third day in a row. This is Bloomberg.
company news headlines on Bloomberg Radio.
And I'm John Tucker in the studio with a look at some of the company stories we're following. Let's start off with this story because it mentions Taylor Swift. Universal Music Group, this is the world's biggest record label that counts Taylor Swift and Drake among its artists. They've begun pulling music from the social media platform TikTok after extensive contract negotiations between the two companies apparently has failed. American Express and Delta revamping their co-branded credit cards to offer new rewards and benefits that target both frequent flyers and everyday spenders who frequently charge meals at restaurants and trips through rideshare services. Travelers now going to be able to use companion certificates to fly outside the continental U.S. for the first time. As part of the refresh, car holders can also earn more in annual statement credits for paying for meals at restaurants. And Shell, they kept up the pace of its share buyback program after a strong performance from its gas trading offset the impact of lower commodity prices in the fourth quarter. This is the London-based energy giant benefiting from exceptional trading opportunities. The company is going to repurchase $3.5 billion of shares this quarter. And trivia, by the way, what did Shell Trading Company used to do before it merged with Royal Dutch? This is over 100 years ago. Shell, what did they originally do?
Seashells?
Exactly. What? They made bespoke boxes covered with seashells. They were very fancy. That was a big thing.
I legit just made that up.
No.
I'm going to call out. I'm going to have to Google this thing.
That is actually true. Ford today began taking orders for a restyled version of its Explorer Sport utility vehicle, updated with new and improved technology. One option no longer available, hybrid powertrain. And that's your company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
A little bit of a lift today, fading a little bit. Here we have the S&P up 0.3%. The Dow's kind of flattish. NASDAQ up 0.5%. Yields coming in 6 basis points on your 10-year Treasury, 3.84%. We were well north of 4% just a few days ago, so yields coming in here. On the oil space, WTI crude oil is up about 0.75%, $76.40. Bitcoin up just slightly, $42,575 for the cryptocurrency. Right now, just head down to Washington, D.C. because we get World and National News with Amy Mars.
Thank you, Paul. Defense Secretary Lloyd Austin is giving a mea culpa after keeping Congress and the White House in the dark about his hospital stay late last year.
We did not handle this right. I did not handle this right. I should have told the president about my cancer diagnosis. I should have also told my team and the American public.
Speaking at the Pentagon, Secretary Austin apologized to the American people and said changes have been made to ensure lapses in communication don't happen again. A stark new warning from U.S. intelligence leaders about the cyber threat posed by China. FBI Director Christopher Wray and other officials warning lawmakers on Capitol Hill that the country's critical infrastructure is vulnerable to hackers working on behalf of the Chinese government. Jeff Green, Senior Director for Cybersecurity Programs at Aspen Institute and former White House Cyber Response Chief, says the American people can do their part.
These intrusions are happening because of fundamental flaws in devices that these critical infrastructure services are using. So you as an individual can't do a lot to protect the critical infrastructure, but you can help prepare yourself.
FBI Director Wray says China's hackers outnumber FBI cyber personnel 50-1. Another legal setback for Donald Trump. A judge in London has thrown out Trump's lawsuit that accused a former British spy of making shocking and scandalous claims that were false and harmed his reputation. Bloomberg legal and crime reporter Jonathan Browning.
Trump himself said that he would be prepared to come to London and testify, but now that the case has been struck out, the question is whether or not he might appeal. Otherwise, it's dead.
Trump sued Orbis Business Intelligence, that's the company founded by Christopher Steele, who created a dossier back in 2016 containing rumors and uncorroborated allegations about Donald Trump before the inauguration. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Paul and Alex.
All right, Amy Morris, thank you so much. We appreciate it. All right, I think what is an unpopular take, and that is I am a huge fan of the New York City subway system.
No, I'll go along with that.
What?
It gets you around by far the most efficiently around this city of 5 boroughs. It is just.
How are we judging this, though?
Well, what's my alternative? Taking a car, getting crushed in traffic,
No, that sucks.
walking, getting run over now by these dudes on the bikes. The subway gets you where you need to go. However, it ain't cheap. New York City's transit repairs to cost $43 billion over 5 years. So that ain't cheap. And I think it's going to be John Tucker paying for it through his congestion pricing. Yes.
Well, we talked about this in relation to Jersey Transit too. Like you're gonna have to raise fares to pay for just repairs, not to like make things better, just to make sure that they don't break down. And that's a tough pill to swallow when you're paying $3 a ride.
I know. But try getting from here to Penn Station. Now I walk a lot. Get steps in nice weather, but you hop on the NNER in 15 minutes.
No, I'll agree. I think it's just an absolute miracle of transportation and the network that New York City has getting people around.
But
I mean, think about it. You got to get how many millions of people every day to work or wherever it is that they're going, and it's done fairly efficiently. So
Now I just feel bad that I'm like dissing on them. I know I have no tolerance as a
Now,
thing.
do you
I
ride
think-
the subway?
Yeah. I
Okay.
think just I'm so used to things running that when it doesn't run or I have to wait or it breaks down, it just makes me crazy.
New York City's public transportation system will need an estimated $43 billion for capital repairs during the next 5 years. That's according to a new analysis by the state's comptroller. The MTA's current $51.5 billion capital
I'm
budget
reaching for my credit card.
is largest ever, directs 80% or about $41 billion to state of good repair work. So most of it's just kind of maintaining this thing. So we'll keep an eye on that as I get ready to hop on the subway in a few moments. S&P up 0.2%.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we're going to break down some ISM manufacturing number. Came in a little bit better than expected. Still contracting, but showing some signs of improvement. We'll break that down. Plus, we're going to talk a little bit about Peloton. Geetha Raghunathan, she covers global media. And unbeknownst to me until just now, she also covers Peloton. So we'll talk about that company. We'll talk about the big media stuff, too, going on. Like, is everybody streaming? And I don't know about that. And then we got Amazon after they're closed. So what we do is, and it's half e-tail, it's half kind of the cloud. So you got to have, the strong analysis on both sides. We do that at Bloomberg Intelligence. Poonam Goyal, she covers all the e-commerce stuff, and Anurag Rana covers all the cloud stuff. So we're going to get those two together, roundtable, and talk to those folks about some of the big things pushing on Amazon. Right now, let's kick everything off with Mr. John Tucker on the Bloomberg Business Watch.
All right, big tech leading rebound in stocks today. Actually, the major averages just turned mixed with the Dow in the red right now. Just 24 hours ahead of the government's jobs figures. The reports today showing unemployment claims unexpectedly rising to a 2-month high. That's actually Fed-friendly. After the heightened volatility of Fed decision day yesterday, Marvin Lowe, strategist at State Street Corporation, reacting to Wednesday's Fed meeting.
We heard from the chair that all inflation needs to do is do what it's been doing, and they're going to start cutting. And I view that as pretty positive for the markets ultimately.
And a measure of factory activity climbing to a 15-month high at the start of the year. This is the ISM's manufacturing gauge, rising 2 points to 49.1 last month. That's better, but remember, anything under 50 is contraction. And just a quick look at shares of New York Community Bank, 14% lower today. That is after the firm was hit with more analyst downgrades at Jefferies, Compass Point, and RBC Capital Markets. They cut the ratings on the lender's stock following that weak earnings report that triggered the record intraday drop that we saw just yesterday. S&P 500, 10 points higher. That's up 0.2%, 48.56 on the index. The Dow Jones Industrial Average, 21 points lower. The NASDAQ 100, 52 points higher right now. That is up 0.2%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney, we're live here in our Bloomberg Interactive Brokers studio. We're also streaming live on the video side with that YouTube thing, youtube.com. Search Bloomberg Radio. And as John was just reporting, ISM manufacturing data came in better than expected. Let's break it down with Tim Fury. He's at the conference board. He knows all this stuff. Tim, thanks so much for joining us here. Again, 49.1, still in contraction mode, but a big improvement there from consensus and from last period.
Yeah, wow. Hi, Paul. Hi, Alex. So, yeah, 49.1 was a surprise. I mean, we were headed in this direction for sure. Last time we had a conversation, I've been saying I thought we'd hit 50 by March. This got there a little bit sooner. But, I look at it from three standpoints: inputs, outputs, and demand. The input story is it just gets better. They're starting to stiffen up. We're investing in working capital, represented by inventories not contracting as much. On the output side, production is stable in January compared to December. The 50.4, that's really good. That's no sign of concern or dramatic growth even at this point. The employment side, we continue to take people out of the organizations, which we had said that we would starting back in May, and it continues. So the real story here is on the demand at 52.5 in new orders. That kind of came out of almost nowhere. But look at that in context with the customer inventory number. So we're saying the customer inventories are way too low now. And at the same time, we're saying that the new order level is stepping up. So I think those are absolutely related. Our panelist companies' customers have gone back to them, and they've probably revised their forecasts for 2024, and now things are underway.
So, Tim, hey, it's great to see you, by the way. I have to say, this is a great set of data here, super surprising on different levels. When you talk about the inventory, do you think that the orders are being used for end demand, or do you think the orders will be replenishing that inventory? And what does that inventory wind up looking like versus, say, before COVID?
Yeah, I think it's intermediate products and raw materials. So, we've been really tight with investments in this area. We spent, we've spent, 11 months contracting our manufacturing inventory. That really is reflective of the fact that we've been managing cash really close in 2023. We closed the end of the year very lean. Nobody was really carrying any inventory that they didn't have to. They cleaned the place out. So now there's a bit of a restocking going on. I think it's more about intermediate stuff, Alex, and mill run steel and aluminum truckloads and things like that. But I think it's a positive sign that companies are willing to reinvest again in working capital. I think that inventory number will get over 50 by the time we hit March. I'm still on that March thing. I think March is like the magic number. But I've been saying since August, September that we were in the trough. But this could be a sign that we're finally starting to come out. And I think it's about, the demand had to come back. There's some signs of demand here. We do have some headwinds in February. February should have a lot more new orders coming in. So we're going to need that to maintain that 52, 53 new order level. Everything kind of aligns. The other thing that's come up this morning is prices. Prices are growing. So, we have the energy markets offsetting growth in the commodity markets. Those commodity markets are probably just going to get stronger. Plastics, aluminum, and steel. Prices are not going to probably come down there. Lead times have been really stubborn. So, I think in the energy markets, eventually will probably give way in the summertime as demand increases for summer travel. But I don't see prices really going down anymore, and I don't see them going up much. It's going to be, I think we're going to see some slow demand kind of creep in here. It's going to be like a slow takeoff of a cargo plane rather than a fighter jet. But we're going to be we're starting to grow again nonetheless. And I feel even more confident that March is the right month to see that really show up.
Hey, Tim, what are the companies that you survey? What are they? Are they baking in a recession for 2024? Or do they just think, yeah, growth is slowing, but we're still going to grow this year?
Well, we lived all through 2023 not knowing what the future looked like. So there was a huge constraint on CapEx investment. We undershot our targets. We thought we were going to spend 12% on CapEx last year. We spent like 1%. All of that is now carried over into 2024. I think there's some general optimism now. The softening is still continuing on new orders. The fact that the Fed has said, hey, we're at the top of the rate cycle is really positive. They don't really so much need to know when the first cut comes in. that's not a direct relationship really on manufacturing. The fact that they've telegraphed that we're at the top of the rate cycle is really positive for us. So, things are being realigned. I think, panelist companies are probably putting a stretch plan together for their business plan based on a more accommodative market in 2024. We said in our forecast that 24 would be better than 23. We said that first quarter of 24 would be similar to the last quarter of 23, just slightly better, but the last 6 months of 24 will be much better. So I think we're on that trajectory. This is probably a month and a half before I thought it would show up, but it's welcome nonetheless.
Not so jazzed. Tim, going back to the prices paid for a second, you mentioned commodities. Is that a supply or a demand story at this point?
The utilization is fairly high, but you think you see a lot more plant capacity going into the system, and I think that's going to happen probably. A lot of this stuff is long lead. It takes 3 years to put a steel plant in, aluminum smelter, plastics, chemical plant. It takes about 3 years to do that. I don't think we're going to see any relief on the capacity side for the second half of the year. And that's what you're on to my biggest concern here, and that is that we may see a resurgence of material price inflation at higher levels than we expected, sooner than we expected, as demand comes back. And we don't have production capacity expanding fast enough. We think we're going to go up about 7%, I think, on production capacity in 2024. The question is when. Do you want to do it too early? No, not really. Do you want to do it too late? Well, that's going to cause price growth. So the timing of that's where you kind of tie in back to when do the rate cuts come into place. That might spur more demand. You may or may not have the capacity in place to keep prices down. I think the biggest issue in 24 is maintaining an acceptable price level.
Tim, you're based in Miami, right?
I'm in Jupiter, Florida.
Yeah, I've got a huge problem with that. There's no manufacturing in Jupiter, Florida. You should be in, Peoria. What are you doing in Jupiter,
I'm also
Florida?
in Connecticut.
What's that?
I'm in the heart of manufacturing technology in Connecticut. Now, you got to give me some relief.
All right, very good.
That's where manufacturing started in America.
Yeah, I know.
Connecticut.
Yep. Absolutely. All right, Tim Fury, good stuff. Appreciate it. Tim Fury, chairman of the Manufacturing Business Survey Institute for Supply Management, Wisconsin, Jupiter, Florida. Man, it doesn't get much better than that. All right, let's pivot over. We've already established that John Tucker is not and is unlikely to ever be a Peloton user. How about you, Alex?
Okay, A, it's a space thing.
Okay.
I definitely don't have the space for it.
Okay.
And I don't want to.
Okay, that's good. Even better.
No, I have a real bicycle.
You have a real bicycle.
But do you use it?
I go to, there are trails on Sandy Hook in New Jersey at the beach. Beautiful paved trails. So in the summertime, I'm not doing it now.
But this is the point. This
That's
is
the
the whole business proposition for Peloton.
And that's kind of an issue for the company and the stock. Geetha Ranganathan, she is one of the top media analysts on Wall Street, and I found out just today that she also covers Peloton. I'm not sure how that happened, but she's a great analyst when she joins us here. Geetha, are you a Peloton user?
I am not, Paul. No.
See, this is kind of the issue, man.
Geetha, you can come riding with me anytime.
All right, Geetha, what's going on with this company here? Is it just a demand thing, a lack of demand?
Yeah, I mean, this is really a complete train wreck, Paul. And I think investors are really losing patience right now. And actually, if you saw their fiscal second quarter, the quarter that they just reported, the numbers were actually fine, more or less. They reported subscriber growth. Which is a good thing, because previous to that they were losing subscribers because they had a product recall for some of their bike products. They had to completely suspend the production of their treadmill, Tread Plus, and then they kind of restarted the sales on that as well. So it was definitely a decent quarter, I think. But what really has caused so much of frustration, I think, right now for investors is that there is absolutely no catalyst on the horizon. So the pain points continue to remain pain points. There is no positive revenue growth. In fact, they are projecting a decline in revenue. And as you pointed out, this is completely due to the lack of demand. And along with that, you have this persistent inventory problem, which is causing a huge pressure on the free cash flow of the company. And they continue to burn cash, and they're not going to be cash flow positive till the end of fiscal 2024.
So Geetha, I'm going to go with something that Paul said, which I found was super interesting earlier, that you have super loyal users. Why not try and just get more money out of them rather than try and all of a sudden have mass penetration?
And they've tried to do that, Alex. So
what's the problem
to their
with
credit, Yes, I mean, they really face a very, so they don't have enough of a subscriber base, right? So it's about 3 million subscribers. And yes, they're already charging them a good hefty amount. I mean, you're paying for hardware that is pretty pricey, whether it's the Tread Plus or whether it's even a bike. A new bike costs about $1,400, $1,500. So, it is a pricey product. And then you have to pay a monthly fee, right? So you are paying about $45 per month, which is that all-access subscription fee. They are trying new things, though. They did realize that, they might need to your point, Alex, they did realize that they might want to go out and appeal to a wider base. And so they're trying something called the Fitness as a Service or a rental program, which is actually taken off. So there are obviously takers out there. It's just not enough to move the needle, unfortunately, for them.
All right, enough Peloton talk. Let's get to the juicy stuff. Let's get to the big media companies that you cover, Geetha. I guess the most topical name these days is Paramount, the former Viacom. Byron Allen, a media mogul of some sort, has made a $14 billion offer. When you talk to your investor clients, is this credible? Is this something that could actually happen?
I don't think so, Paul. I mean, Byron Allen has been bidding for everything in the media space over the past few months, and he has like this long list of empty bids, really. The bid on its own is not bad at all. It was a 50% premium to Paramount's trading price, so it definitely makes sense, and I think it's good for investors. The problem is there's absolutely no visibility into how he's going to get that money. So financing is going to be a huge problem. And then, of course, you have the issue of Paramount's debt, about nearly $16 billion in debt. And there's like $11 billion in senior notes, which will trigger some change of control provisions and has to be refinanced immediately. So there's just a lot of different obstacles there. And so I'm not really sure investors are thinking that this bid is going to go through.
Does Paramount Plus need a buyout? Like, I feel like these rumors do swirl around a lot. Like, who actually needs to be bought here?
Paramount does need a buyout.
They do. They really do. Okay, so who else would do it then? You listed a lot of reasons why Byron Allen won't, but who can?
So we've had actually multiple suitors kind of circling these assets. We have David Ellison, who is the son of, the mega billionaire Larry Ellison, who has Skydance Media. He's very interested in getting Paramount Studio. Again, this is an iconic Hollywood studio, has some great IP. We have, Warner Brothers Discovery was also supposedly interested. You have Apollo, which was also potentially interested. Of course, none of them have necessarily come out with a bid. And so Byron Allen kind of doing what he did yesterday really forces other suitors or other serious suitors to kind of come out and show their cards.
So, all right, so let's go to Warner Brothers Discovery. David Zaslav, there's a company with a lot of debt too. I mean, what's the future? What's the outlook for that company?
I mean, I think, Paul, ultimately down the road, it has to be some form of consolidation. I mean, there is no way that so many of these smaller players, whether it's Warner Brothers Discovery, whether it's Paramount, whether it's, Comcast with NBC, can necessarily function on their own, especially with their streaming businesses. So I'm sure at some point they're going to have to look at ways to kind of consolidate. I'm not necessarily sure it's going to happen right away, just kind of given the regulatory environment and kind of given that whole problem with debt and very high leverage. But it will eventually need to happen.
So,
All right.
Paul, does this make you feel like you wish you were still a banker?
Yes, because my phone calls would be to private equity. I would go to private equity right here, go out there. They still have good cash flow. They can service the debt, and you can sell pieces, parts in certain times, and that's how you do it. I don't think there's any strategic. But that's just me. We'll see how it goes. Geetha Ranganathan, thanks so much for joining us. Geetha, she is the senior media analyst at Bloomberg Intelligence, based in Princeton. She also covers probably for not much longer. I'm not sure what the going concern situation there is because they've got some debt, and as Geetha said, they're not going to get free cash flow until the end of fiscal 24. So I'm just not sure what to do there.
Stock down 23%.
Yep. So
there is that.
Yeah.
52-week low.
Yep. And as Geetha mentioned, she talks to all these investors, and I guess the sense I got from Geetha was they're just kind of like, I just don't see it's just nothing, no reason to own this thing. And it's too bad because, again, it's a great product, and they did such a great job during the pandemic for a lot of people like me. But that business model just got out of whack with where the real market was on the other side, which is where we are right now. So we're trying to deal with inventory pricing, all kinds of tough stuff there. So seeing it in the stock price. So, all right, looking at these markets right here, still hanging on to the green a little bit. S&P 500 up 0.25%. The Dow Jones Industrials is absolutely flat, and the Nasdaq up about 1/3%. Yields coming in pretty noticeably here. The 10-year's off 9 basis points, 3.82%. Hopefully mortgage rates are coming down along with it. Help us mortgage borrowers out. That'd be interesting. We're gonna have more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. The major averages, they have turned mixed right now, with the Dow down just about 1 point. You have 8 of the 11 major industry groups in the S&P 500. They are higher right now. You have technology stocks leading the way. This is another big day for big tech earnings. It's going to happen after the close of regular trading in New York today. Apple, Amazon, Meta Platforms, all reporting after the close. Now, their updates will give fresh insights on how the companies at the heart of the rally on Wall Street we've seen recently are matching up to the pretty lofty expectations of the investors. Apple, as you'll recall, has suffered 5 straight sales declines in a row, going into this report. Qualcomm shares, quick look there. They're down 4%. Analysts noting that there are signs of recovery in the key markets for the company. But the chipmaker also warning about high inventory levels. And then Citi downgrading the stock to neutral from buy. S&P 500, 14 points higher. That's up 0.3%. 48.59 on the index. The NASDAQ 100, 62 points higher. That is up 0.4%. The Dow right now back up 15 points. Notable treasuries, Paul, you pointed this out. The 2-year more policy reactive there. That's down 5 basis points. The benchmark, the 10-year, is 7 basis points. We'll call it 8 basis points lower. That's below 383 on the 10-year. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul.
John Tucker, thank you so much. Alex, I did try the cookies.
Oh, yeah,
Florence,
and?
Italy, awesome. Very
I mean,
good.
just melt in your mouth, light as a feather.
Italians are good on the whole food thing.
Oh my
in general.
But you might as well just apply it right to your waistline.
No,
because it's
I don't
like
think that's true because the ingredients are so different than some of the stuff that you get in the States.
nothing that tastes that good is going to be like
I'm not saying it's going to
low-cal.
take pounds off. I'm just saying, like, you're not going to get the same kind of weight that if you went to, like, and bought a ton of Oreos.
Yeah,
In
exactly.
some kind of
Double
Nabisco factory.
Well, I'm going to do that too.
All right, Alex Steele, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio and streaming live as well on YouTube. So you can head over to youtube.com and search Bloomberg Radio. That's where you get the video feed. Big earnings again after the close. We got Meta, got Apple, and we got Amazon. And the way we do it at Bloomberg Intelligence, looking at Amazon, we got to recognize that this is a huge retailer, of course, global retailer. It's also a huge technology company. It's really evolved and developed its technology over the last 10 years or so. So the way we do it is we get Poonam Goyal. She covers all the retailers for Bloomberg Intelligence. And we got Anurag Rana, who covers all the tech for Bloomberg Intelligence. We bring them together and we roundtable them, and that's how we can really get a holistic view of what's happening at Amazon. Anurag, let's start with you here. What do you want to hear from Amazon tonight? What do you need to hear? What's the market need to hear about their cloud business?
Paul, the magic word tonight is cost optimization, that they are not seeing any more of it, that customers have started to spend back. That is going to really be magic to my ears. I think we heard some of that from Microsoft, but not entirely. I think that is the direction, that is going to set the direction for cloud names for over the next 90 days.
Can I ask the demo question? In real terms, what is cost optimization? Like, what does that actually mean if I'm reading through the call?
So sorry about that. So that just basically means companies or corporations are not cutting costs in their cloud consumption, that they've stabilized or started to spend back. That is going to be the only thing that I hear about.
See, Anurag's whole career for product technology is always a growth industry. They never have down years. It's just a question of how much growth.
Totally.
So the tech spending apparently the last couple of years, the growth rate has slowed, and that's got these tech analysts all anxious. And so they want to see a re-acceleration of that tech spending. That's my read. Let's get to the important stuff. We're talking about Amazon. That's like people buying stuff, and the box is showing up at my door. Poonam, you cover the whole retail space. You've got the best view of this. How is retail spending out there, and how is Amazon competing?
Amazon is taking share, and retail spending overall is good, especially online. When you shop online, Amazon is the clear winner there. So we're actually expecting good results for the fourth quarter. We know holiday was strong, and Amazon likely took share there. So from an online standpoint, we think they'll do well, and the results will be driven once again by gains in their third party, which is the sellers that sell on Amazon versus their own first-party goods will be the reason that they outperform.
To that point, isn't Amazon kind of looking into a world where they might not be responsible for those third-party sales in terms of safety and quality, etc.? And how dramatic could that be?
That could have an impact. Right now Amazon is not responsible. So if you're the seller and you're selling something on Amazon, it's not Amazon's responsibility to authenticate that good or even to maintain the control over that exchange of goods. But if that changes and Amazon is going to be accountable for that, it's seen as a distributor, as what we're hearing, but that could change things up, and it could make Amazon institute more best practices and also be held liable, right? Because we know that there's a lot of stuff sold on Amazon that could be counterfeit. And until today, Amazon has no responsibility over that. It doesn't need to.
Hey, Anurag, give us a sense of just kind of the landscape of cloud computing. You got Microsoft, Amazon, Google. How does it play out, and how does Amazon position itself?
Yeah, so in the cloud infrastructure world, which is basically the storage and the computing that you need to build any application, there are three big players. It is Amazon, the number one with the biggest market share. Microsoft has done a phenomenal job over the last 10 years to catch up and is the second biggest. So, structurally, there are two big players, Amazon and Microsoft, and then Google's been catching up, and Google's a very viable contender to both of them. So what's really happening right now, at least in the last 12 months, is Amazon does not have an AI play as such. Now, that's really not true, but that's the narrative in the street, that Microsoft has a close relationship with OpenAI. They're pretty much kind of, are very close to OpenAI, and OpenAI's backend is everything Microsoft Azure. So OpenAI makes more money, Microsoft really, benefits from that, which is what we saw in their results a couple of days ago. For the case of Amazon and Google, they really need to talk about what is going to be their strategy. And their strategy actually is very simple. Enterprises or corporations, when they're going to go out and build those AI models, they're going to use one of those three, cloud vendors. I think it's going to, for them, it's taking a little bit longer, maybe, a year down the road, 6 months down the road, and that's what everybody says, that, Microsoft is ahead and Amazon. I think in the long run, all three will make a lot of money. It's a matter of when it starts.
To your point, Paul, though, Azure Cloud Service sales gained 30%. Hello, what company wouldn't want that growth rate? But it was like just 1% more than what the street expected. But those are some big numbers. I gotta say, we gotta turn to Apple because we just have a few minutes left, but I'm having a really hard time getting excited about Apple's quarter today. They're gonna make a lot of money, they're gonna sell a lot of stuff, and then what? Anurag, what are you expecting?
This is probably the weakest I've gone in terms of sentiment for Apple. There isn't much going in their favor at this point. Regulations, weakness in China, them losing share in China. It's just probably the lowest expectations I've seen going into a quarter for Apple. I'm not expecting any, major positive surprises. But guess what? Sometimes that's when fun happens, is when you go in with low expectations.
Hey, Poonam, as we step back here, how does Walmart compete against Amazon? Because it seems like the Walmart.com, they've done a really, really good job competing from my perspective, just as a user. But what do you think?
I think Walmart has made some strides on its .com presence. But, when you think about Walmart and you think about Amazon, and I think they can both grow share together. It's not that Amazon loses if Walmart wins. But remember that Walmart's business, it's still 50% grocery. And grocery is a low single-digit business for Amazon. So they're almost two companies that may seem alike, but they're very different in their product offerings. We think both can grow their online business. Both can drive double-digit gains as the online vertical just grows as a channel, irrespectively of what happens to brick and mortar.
I love that we spent one question on Apple, and then we're like, let's go back to Amazon, which I think says a lot about to Anurag's point.
I think from what I understand, talking to Anurag and other tech folks, it's all China. If you get comfortable in China, you can get comfortable in Apple. If not, then not.
Yeah, and they're just the sentiment's just kind of meh at the end of the day. So, Poonam, when we go to Amazon though for a second, what is going to be the catalyst growth driver though on the retail side, or is it all just going to be focused on that cloud?
I think a lot is focused on cloud, but keep in mind the retail side brings advertising revenue.
Yeah.
So the ad revenue growth is going to be a key focus area for Amazon, not just today, but also for the foreseeable future, as that drives very high profit margins, close to 50%. So we think you want to see retail grow, right? Because as you get those Prime members shopping on Amazon, you also get more eyeballs and you get more ad revenue.
Yeah, that's right. The digital advertising business for a long time was in effect a duopoly, Google and Facebook, and then Amazon came on. And in a matter of, I don't know, what's it been, Poonam, 5-6 years, they've become a huge advertising platform.
They are. They control about 10% of digital media advertising, and they're at a run rate of $50 billion, and we think they can get to $100 billion over the next several years.
Yeah, and that's literally from nowhere, standing start. So it's really amazing. All right, guys, thank you very much. We appreciate getting both of you together. Poonam Goyal, Anurag Rana, both for Bloomberg Intelligence, covering both the retail side of that story, as Poonam says. That's important for a lot of reasons, including the fact that it's driving this advertising business for them. And, of course, on the technical side, the cloud has really been the profit story for the company. and really probably the multiple stories of the company. Get kind of the high multiple on that.
Right. I mean, hence the whole, if you only beat by 1 percentage point for growth, you're kind of disappointed in terms of the valuation.
I wonder if you ever, just put on my banker hat on, anybody has the, the gumption to go to Amazon and say, hey, just split up this business, just spin out the cloud business. That would be bad.
What would be the downside to that?
I don't know. I mean, kind of giving up a little bit of ownership of it, getting some more ownership. I don't know. It's interesting. I think it'd be kind of cool because I would think that would get a monster.
Oh my gosh, yeah.
All right, right now let's head down to Washington, D.C., world and national news with Amy Mars.
All right, thank you, Paul. Plans have reportedly been approved for a series of strikes over a number of days against targets, including Iranian personnel and facilities inside Iraq and Syria. Weather is going to be a major factor in the timing of these strikes. CBS is reporting there have been no new attacks on U.S. troop locations since Hezbollah announced it was suspending military operations against American forces. European Union leaders have unlocked about $54 billion in aid to Ukraine after Hungarian Prime Minister Viktor Orban lifted his opposition to the deal. Now, Bloomberg's Ellen Milligan is covering the EU leaders summit in Brussels and says the deal wrapped up quicker than expected.
On a €50 billion aid package for Ukraine, all 27 EU leaders were able to strike a deal.
Bloomberg's Ellen Milligan reports the leaders agree to debate implementation of the aid package every year to gain Orban's approval. The House has passed a $78 billion business and child tax break bill that would provide a boon for U.S. companies with large capital and domestic research expenditures. It was a bipartisan vote with a few Republican holdouts like Thomas Massey of Kentucky.
There's something in this bill called tax credits, but they're also called refundable. So what is a refundable tax credit? It's welfare by a different name.
Republicans are pushing back against a provision that allows some people with no taxable income to collect the child tax credit. Illinois Democrat Danny Davis says the bill isn't perfect, but he supported it.
You know, I've been told that a half a loaf is better than none, but this isn't even a half a loaf. But I'm going to vote for it because our families and businesses need help.
The White House says once it passes the Senate, the president will sign it. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Major stock averages, well, right now they're all higher, but pairing some of the earlier gains, the Dow actually has been jumping in and out of gains and losses. Investors, of course, waiting for the earnings results. This comes after the close of regular trading in New York. From the tech mega caps, Apple, Amazon, and Meta Platforms. Up 17%, you have Corteva, the leader in terms of index points in the S&P 500 right now. This is the agricultural, chemical, and seed company. They're reporting an earnings beat. Well, after the Fed chair, Jerome Powell threw cold water on the idea of a March rate cut. Karen Ward at J.P. Morgan Chase says inflation pressures, they've eased in a lot of key areas.
We should be anchored on what our labour markets are telling us about where inflation is going to be in 2 to 3 years' time. And the Fed has got 4% wage growth with 2% productivity. So that cost pressure coming from the labour market has receded.
And then you have Merck forecasting annual profit ahead of Wall Street views. Sales of its cancer blockbuster Keytruda remaining strong ahead of a looming expiration of their patent. Merck could face generic competition later this decade for its top-selling Keytruda. That grew 19%, $25 billion in sales last year for the drug. Of course, that's Rahway, New Jersey-based Merck and Company.
Yes.
S&P 500, which you go by the headquarters when you're on New Jersey Transit coming into work. S&P 500, 22 points higher. That's up 0.5% at 4867 right now in the index. The Dow Jones Industrial Average up 79 points. That's a rise of 0.2%. The NASDAQ 100, 82 points higher. That is up 0.5% right now. And as far as yields, the 2-year, 3 basis points lower. That is at 417. And the benchmark 10-year yield right now, 7 basis points lower. That is at 383. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alex and Paul.
Johnson & Johnson, New Brunswick, New Jersey.
That's the world corporate headquarters. Yep. And, you know,
there's a bunch of, why are there so many pharmaceutical companies in New Jersey?
Because New Jersey's the place to be.
Is it corporate? No, low. I don't know if this is true.
Well,
I'm just asking.
it might be. I mean, you'll recall that the precursor to Exxon Mobil, Standard Oil, transferred from Cleveland, Ohio to New Jersey because the New Jersey legislature at that time enacted laws and regulations that were favorable to trusts such as that. So who knows? Maybe that's in some ancient legislation.
What do people like? What's the motivator for most things? Taxes and profits.
Right.
So that could be like my guess.
But I mean, literally all over the state, there's huge for all the big pharma companies. They're all over the place.
Yeah, you go down Route 1 in New Jersey, it's just like this company, this gigantic manufacturing facility.
Plow, they're all over the place. Yeah. So anyway, it's good employers. We've got, in just a matter of moments, we're going to have Qualcomm CEO Cristiano Amon. He's going to be speaking with Bloomberg's Ed Ludlow, talking about the quarter they reported last night. The stock's off about 3-4% here. Earnings forecast for the current period meets analyst estimates, but it's all about the handset chip sales. This is the phones. These are the big guys that put the chips in the phones, which is obviously over a period of time a great growth story, but apparently there's been some relatively short-term inventory issues. There's a lot of phones out there.
Yeah.
You got to work through that. So that's kind of been the issue for that company. So
it kind of goes back to that super cycle story, right? Like, so we're waiting for that to happen, and then the penetration. Citi, though, downgrading the stock to neutral from buy based on those high inventory levels after the quarter. Paul, Bloomberg Intelligence, though, trying to have a little bit of optimism here. Kujan Sobhani saying that this may mark the beginning of a turnaround in smartphones.
Yep. I don't know. Yes, I have the, I don't know what I call it, 11 or something. I haven't upgraded in a while, but I don't know. We'll have to see. But I mean, it's certainly a growth market, and you got to think about some of the growth markets like India, huge growth market. China's still growing. The question is, where do they get
Exactly. Yeah.
So, what's not in this story, which I'm sure they would like to get in the story, is just some AI buzz.
Right.
This is a phone.
Because they don't make AI chips at all. Like, they're not in that right now.
Again, but if I were just CEO, I'd be like, guys, can you give me something so I can get on the conference call and say we're making investments and get the buzz.
Well, Well, Morgan Stanley's saying that specifically. They say with some market share headwinds, Morgan Stanley sees limited growth potential intermediate term, but Edge AI, so apparently they do have Edge AI, presents an interesting opportunity. I don't know what that really means for analysts. What does analyst speak mean for interesting opportunity? We don't really have it in our estimates yet, but we could maybe in the future. And I've got a buy rating on there, so I have to talk about something like that. Investors have been looking for signs that consumers are upgrading their smartphones at a faster pace. On that front, Qualcomm had good news. Revenues from handsets gained 16% last quarter, compared with a 27% decline the previous 3 years. So that sounds like a turnaround. And Qualcomm also said Wednesday that Apple extended a patent licensing agreement by 2 years. It now runs until March of 2027. The chipmaker also signed a new agreement with Samsung Electronics, with the South Korean company agreeing to base future devices on Qualcomm processors. So that sounds pretty good.
Here's my uneducated question. If you wind up having AI more integrated into your stuff, like Internet of Things or something along those lines, or your phone, did you go buy a new phone? Like, is that going to be a trigger for a huge cycle?
I mean, I buy a phone because, well, hey, the battery craps out. That's usually how it works. But, I mean, otherwise, it would have to be a really cool improvement in functionality. Or but these phones today, they're effectively cameras with a phone. So basically your laptop on a phone. I don't even carry around an iPad. Everything's on the phone.
It's so true.
Yep. And all the Sweeney family, with one notable exception, is in the iPhone family. So
where do they go?
He's Android. He's an engineer. He says Android's better. I'm like, come on. Now we can't have our little joint things together because he's not.
He's got to pay for his own thing.
He can't FaceTime. So it's kind of silly. Anyway, Qualcomm stock's off about 4% here today. Taking a look at the stock just over time, it's been a huge company. You always forget kind of how big they are. $159 billion market cap. It's up about 5% over the trailing 12 months. So got a little bit of work to do, kind of getting that message out there for the marketplace. So we'll see. We'll take a look. Again, $142, down 4% today is the stock. Coming up, we're going to have Qualcomm CEO Cristiano Amon speaking with Bloomberg
Tech, B-Tech.
Yeah, Bloomberg Tech. Yeah,
Ed Ludlow, Caroline Hyde.
Yeah, he's based out there in California. So I'll have that right for you right now. Let's take a listen.
Happy to be here, Caroline.
All right. Looks like they're having some technical difficulty on the television side. Caroline Hyde and Ed Ludlow. They cover
at some point, we'll say things.
Yeah, he was there. Cristiano Amon was there. But again, the question, I guess, for them really is, since they have such a heavy reliance. All right, we're going to go back to that. Cristiano Amon, CEO of Qualcomm.
Bloomberg television and radio audience worldwide, more earnings, and this time Qualcomm delivering a solid earnings forecast for the current period, helped by a recovering market for smartphone chips. But some analysts also noting high inventory levels in other business lines. Delighted to bring in Qualcomm CEO Cristiano Amon. And let's get right to the inventory narrative, Cristiano. So smartphone, you said the inventories have improved. The lingering concern is Internet of Things, which for our global audience is basically anything with a network connection, right? From industry manufacturing through to connected devices in the home. And you're saying that they're still working through inventories there. But because that business line is so broad, what can you tell me about where the inventories linger specifically? Geographically, heavy industry, retail?
Very good. Ed, good talking to you. First of all, I don't understand where this inventory commentary is really coming from. We saw this, I think, in the press yesterday. Maybe I'll use this opportunity to explain. The majority of our business, handsets, we're working very hard to diversify the business. We're making good progress, but still the majority of business handsets. And handsets, we have seen that inventory had actually stabilized since last quarter. I think what we see in the results, especially with the beat and raise in EPS, is that handsets are getting back to normal. We're happy with the health of the Android ecosystem. Premium tier, it's strong with HN3, and we still see that in the numbers. IoT, we talk about industrial inventory actually before every other company. We were some of the first ones to talk about it. still a smaller percent of our business. We'd like it to be bigger, but we had said that that is the lowest quarter, and we expect to see growth in the coming quarters. So, yeah, I don't understand this comment on inventory. We're happy with the results, and we're happy with a number of the analyst revisions that actually came out this morning on the stock.
I'm just reading the transcript from the earnings call, right? And you said second half of the fiscal year, as we see the inventory kind of normalizing in the IoT context. A positive area was China. You promised that we would get an uptick in China sales. We did get that. Does it reflect customers in China having been through inventories, or is this a commitment to forward ordering, signs that those end markets have demand?
Yes, this is a great question. And I want to start by saying we have two vectors that are very encouraging. One vector is the premium tier has proven to be resilient, even within the macro uncertainty. And it shows that users, when they go buy their next phone, they want a better phone. The second thing is we're starting to see the first innings of Gen AI. Some of the use cases are starting to come in, and that has brought some excitement. Some of our customers had record pre-sales of their new devices with HN3. And what we see in China right now, I think there was a lot of concern in the past about Huawei coming back to the phone business. But what's actually happening is Huawei is increasing the size of the TAM, and our customers are holding share and seeing opportunities in the premium tier, and that's reflected in the quarter. We have a lot of orders of HN3, especially for phones that launch or launching in the market. We're happy. We're just cautiously optimistic since we don't know how the second half of the year in phones in China is going to unfold.
Cristiano, how do you navigate geopolitics when it comes to China, not just macroeconomy?
We just do business. I think we focus on what we can control. I think we're happy that we have a strong relationship with China. Our technology is differentiated and is helping, I think, both sides. One, it's business, it's export of semis for the U.S., for China. It has been growth for technology. We have not been impacted to date by any of the restrictions. And as we diversify the company going from handsets to automotive and industrial, I think we see our China business expanding as well.
Let's go back to the bread and butter that is phones, though, and I think about Apple's earnings coming after the bell, everyone wanting to get some sort of steer on where the consumer is at right now. And ultimately, you've said, look, consumer, we're recovering in phones. But how excited are consumers to renew, do you think? And how much will this manage to carry you on into the rest of 2024?
Look, we don't want to make a prediction. Phone cycles is very difficult to make predictions. There are a couple things that we know it will happen. Once every 10 years, you have a generation of wireless. We've just been to the 5G transition. But the early signs of Gen AI use cases are actually exciting. I think you saw Samsung launching S24 with a number of Gen AI use cases running on the device. Same thing happened in China, I just mentioned about that. So that could create an interesting opportunity for upgrade cycle in phones. It's just hard to predict the timing.
For our Bloomberg television and radio audience, we're speaking to Qualcomm CEO Cristiano Amon. Cristiano, you and I have talked about on-device processing of generative AI tools and running of large language models, on-device airplane mode. When does that business that you're involved in show up in the financials?
Yeah, the way you should think about the financial impact, especially if you think about phones, is really a premium tier becoming a larger percentage of the market, and we're kind of starting to see that. And then the other one is more silicon content. I think our ASPs increase on the chipset, and that has a positive contribution for the business. And the dynamic that we see with the success of HN3 is just the first signs of the opportunity. Just to be cautious that we still need to see a lot of use cases develop.
Lots of partnerships and deals kind of talked about on the call. When we think about names like Apple and Samsung and the handset makers in China, look at the history of Qualcomm. Can you kind of guarantee investors that you can continue forward on the deals and avoid the legal entanglements you've had in prior years?
All right, so you mentioned partnerships. I think we have two very important conversations, and I want to make a distinction. I think the first one is our licensing business. And we have been saying that the licensing business, which has been the reason we have been in a number of disputes in the past, it's very stable. It's one of the most stable times that we had since the beginning of the licensing business. And in the quarter, we announced three very important milestones. One is we saw an extension of the Apple license agreement. That means that Apple is paying license for the Qualcomm standard essential patents, and that's regardless of using or not using a Qualcomm chip. We also saw two Chinese significant customers renewing the license agreement, which speaks to the value of the Qualcomm intellectual property portfolio, even in China, in the middle of the geopolitics. That's a very positive side to investors. Now, the second part of the question is about partnerships. What's exciting about Qualcomm, and I know we spend a lot of time talking about handsets, but auto, there is a lot of reports on the peers of a decline in auto. If you look at this quarter, we actually had record auto revenues with 31% growth year over year when the whole market is down. And that speaks to the number of chips we've been making in auto for the future of the automotive industry, and that's an important metric where the future of Qualcomm is going to be.
Still about that diversification. Qualcomm CEO Cristiano Amon, great to have some time with you. We thank our radio and TV audiences.
All right, that was Caroline Hyde and Ed Ludlow, Bloomberg Technology. And Cristiano Amon, CEO of Qualcomm, reported some numbers last night. Stock's off about 4% here today, up about 6% on a trailing 12-month basis here. But I guess for that company and their chip business, primarily driven by the handset business.
Yep. And he says, we were talking about AI. Use case is exciting, timing hard to predict, Internet of Things, they were supposed to be a $1 trillion business a few years ago. Like, it's there, but it hasn't seen the same kind of growth maybe that we were all expecting.
Yep. So we'll keep an eye on that one, but good to hear from the CEO directly after their earnings last night. Boy, another stock in the news, a little bit local here to New York. The New York Community Bank stock is off another 12%, hitting another 52-week low yesterday. I think they really surprised the street yesterday with their results and talking about the risk to their loan portfolio, causing them to jack up reserves and cut their dividend. That really would seem to be a surprise to investors. The stock was down like 40% yesterday, another 12% today.
Yeah, now it's down total about a little over 45, or slightly off the lows, but Moody's may cut rating to junk. But so I was away in Florence, I was doing my oil thing, and then I log on the plane and I was like, what just happened?
Yep.
Is this like a systemic regional banks are failing thing, or is this like they had a couple bad loans that they had to account for and kind of do their due diligence and got out in front of it?
Yeah, I think it's probably, from what we've heard, now the Citizens Bank CEO says NYCB an outlier as regional bank pain is in the past. We had Herman Chan, who covers the regional banks for Bloomberg Intelligence, say also that it is not systemic, that it is kind of specific to NYCB because of their particular loan portfolio tied to a lot of rent-controlled housing, and there's not so much they can do in terms of offsetting some of the higher interest rates that they're dealing with on their balance sheet. So, but again, it kind of brought back some bad memories from about a year ago when we had those West Coast banks have some issues. Which then at that time, it certainly did call into question, hey, do you have something going on in the banking space? Turned out, I think, in hindsight, the answer to that is also no, specific to those individuals.
But on the flip side, yes, New York Community Bank Corp bought Signature Bank's deposit base, right? So that is theirs. But they have higher capital requirements and more regulatory scrutiny. They're not the only ones who are going to have that. So you have to wonder when these guys wind up reporting. There's a reason why the KBW Regional Banking Index now also has a 2-day drop. Like, do they have this offshoots of the loans? Maybe not. But they definitely will still have the regulatory requirements and how they're going to account for that.
Yeah, it's an issue. And, as we kind of learned, I guess, last year, while there maybe not be some loan book quality issues per se, i.e. taking big write-downs, it's going to result in lower earnings for a lot of these companies, and that's kind of what Herman Chan's been telling us about, and that's what's going to be weighing on the stocks. Now, we did see the stocks rally; those regional bank stocks rally off, kind of 30% off that October low. So people were kind of saying, all right, maybe we're either setting a bottom or getting close to a bottom, and then just give it.
Yeah.
So we'll pay attention to this. And again, we've got some smart people covering from the Bloomberg News side. We've got Herman Chan and his team at Bloomberg Intelligence looking at it from there, so we'll have you covered there. S&P 500 up 0.5%. Balance of Power, that's coming up with Mr. Joe Matthew from Washington, D.C.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
This is a dangerous moment in the Middle East, so says the Secretary of Defense. Welcome to the fastest show in politics as Lloyd Austin meets the press today at the Pentagon to talk retaliation, but makes more news on his health, apologizing to the American people for the way he handled his prostate cancer surgery. We're going to have the latest on all this straight ahead from Bloomberg's national security team. Nick Wadhams will be with us with insights today from Holly Dagres of the Atlantic Council, with news leaking now on what a possible retaliation might look like. New numbers on the campaign trail spell trouble for Nikki Haley. We'll have more on both sides of the campaign with Mohammed Yunus of Gallup, and analysis from our panel today. Bloomberg Politics contributor, Democratic analyst Jeannie Shanzano is with us, alongside Lisa Camuso-Miller, Republican strategist, former comms director at the RNC. We have a lot to cover this hour, and we start, as always, with a look at Wall Street. Charlie Pellet in New York. Hey, Charlie.
Thank you very much, Joe Matthew. Happy Thursday. I got a lot to cover as well, with the Dow, the S&P, NASDAQ all advancing. Tech advance underway right now. Stocks are higher as traders await earnings from a trio of mega caps. They're also weighing mixed economic data ahead of tomorrow morning's jobs report. But we begin with tech, because right now we have got NASDAQ up 96, gain there of 0.6%. NASDAQ 100 index also higher now by 0.6%. S&P up 29, that is a gain of 0.6%. The Dow up 136, up now by 0.4%. Also advancing today, the Russell 2000 index of small cap shares. It is up now by about 0.1%. 10-year yield 3.84%, with a 2-year 4.18%. Gold up 1%, now at $20.60 the ounce. West Texas Intermediate crude oil is up 1.2%, $76.78 a barrel for West Texas Intermediate crude. Bottom line here, we've got big tech leading the rebound ahead of earnings after the bell from Apple, Amazon, and Meta platforms. But what about politics and the markets, specifically the presidential election and the timing of Federal Reserve interest rate cuts? That question this morning for Stephen Stanley, chief economist at Santander U.S. Capital Markets.
Here's where the election plays in. If the market's right and the Fed gets started early in the year, they can just keep going right through the election. And they've done that on either side, tightening or easing in the past. But I don't think they want to make newspaper headlines in the heat of the election season. So if we get through, let's say, the July meeting and they haven't moved yet, then I think the first move is not going to come until after the election.
Hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Ahead of earnings, Apple up 0.8%, Amazon ahead of earnings up 1.2%, Meta platforms up now by 1.3%. Yes, Bloomberg will have you covered on all of those mega cap tech earnings after the close of trading. Recapping, S&P up 30, up 0.6. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
All right, Charlie, we thank you. Welcome to the Thursday edition of Bloomberg's Balance of Power. I'm Joe Matthew in Washington, where we start today with our focus on the Pentagon. A late scheduled news conference by the Secretary of State had a lot of folks thinking we were going to hear about an authorization for a military strike, knowing that the Pentagon has been formulating plans for a response to the deadly attacks on U.S. troops in Jordan just days ago. There was some insight brought by the Secretary of Defense, Lloyd Austin, his first time standing in front of cameras since coming back from the hospital after a lengthy stay, of course, surgery for prostate cancer. And he likely made more news talking about the way that was handled than anything else. Here's the Secretary of Defense from earlier. Well, I guess we'll just have to move ahead and take my word for that. Lloyd Austin, again, holding forth with reporters, and we want to bring in Nick Wadhams, of course, runs our national security team here at Bloomberg. It's good to see you, Nick. The impact of this news conference on his tenure, he says he was not prepared to resign, but he apologized to the American people and to the President of the United States. Did he just put this behind him?
I think he has now put this very much to bed. It was an interesting press conference because everybody had really been waiting for sort of proof of life, if you will, him coming out and just saying, listen, I screwed up. I mean, it was so obvious what happened here. He was hospitalized. He had prostate cancer surgery. He didn't tell the president about that. He was then hospitalized for complications. Didn't tell anybody about that for 5 days. And then he was hospitalized for 2 weeks. So this is a big deal. I mean, if you had a subordinate in the military who hid from his superiors that he was being hospitalized for, he was in the ICU, you'd get fired for that. And he was actually asked that very question, and what would your response be? And his response, I mean, he was in full groveling mode, basically. Listen, I screwed up. I apologize directly to the president, but he had no intention of resigning. And then, as you mentioned, you've got all the potential for strikes against Iran, Syria, Iraq. So it was a clever pivot in a way, because he's saying, listen, I screwed up, but by the way, look at all this really important stuff that we have to do right now.
Yes.
And he's signaling he's very much going to be in control of that response.
Interesting opportunity, I guess, to address the news at hand, and also maybe try to get around what was a bit of a scandal, if we can call it that, certainly a controversy surrounding the secretary. In terms of what we learned, very little about apparently imminent strikes against Iranian proxies, if not Iran itself. The strike will be multi-tiered, he said, echoing what we've heard from John Kirby so far.
Right. So I think what you're seeing is this administration signaling we may get action imminently, but it's not going to be the last of it. We're still trying to, frankly, sort of puzzle through this strategy, because they are essentially telegraphing to Iran and all these groups over there that this is coming. And so why is that? There has been a suggestion out there that it's part of some sort of back channeling with Iran, but it is an interesting strategy. He said, the enemy is not prone to taking one and done sort of actions, and neither am I. And I also have a lot. My guns are a lot more powerful than theirs are, basically. So he's sort of suggesting, look, this is coming, and what you see in the next days is not going to be the last word on this from President Biden.
Are we surprised he wasn't announcing a strike? Do you have any sense of timeline? What you hearing?
Well, generally speaking, when they do these strikes, they tend to do them at night in the target area, so that's evening our time. At least that's what happened when they struck Yemen, when they struck the Houthis in Yemen. So you would anticipate that it would happen in the nighttime. I mean, everybody is just on high alert. We had some indications that it would happen last night. That didn't pan out. But I think what they're signaling very clearly is there will be some sort of strikes. There's a CBS News report today saying in Iraq and Syria, Iranian assets in Iraq and Syria. Very unlikely that they would do strikes on Iran itself for fear of provoking that wider war. They say they will move.
I know your team is awfully busy right now. I appreciate your coming to talk to us. Sure. As always, Nick Bottoms with us here on Bloomberg, who runs our national security coverage here in Bloomberg's Washington bureau. More on the CBS News report that Nick mentions, because this is the most information that we've seen so far, where officials are confirming, as I read, to the news organization, that plans have been approved for a series of strikes over a number of days against targets. Remember this multi-tiered approach the secretary was talking about? They include Iranian personnel and facilities inside Iraq and Syria. This, of course, following the attacks over the weekend in Jordan that claimed the lives of 3 U.S. troops. We add the voice now of Holly Dagras of the Atlantic Council, runs the Middle East program where she is a senior fellow. And it's great to see you, Holly. Welcome to the table and for being with us today on Bloomberg. I'm not sure your thoughts. You watched the secretary today at the Pentagon. Did we learn enough on an official level about what's happening here? And how come I'm reading battle plans in CBS News?
I mean, I think there was more focus on the secretary's health.
There sure was.
Than there was actually on the recent events.
Was that the real purpose of this news conference then?
I felt like it was, so given that was most of where the conversation was addressing that and the status of his administration at the Pentagon. But just unpacking a bit of what you said about the CBS News report. I think there's a lot of frustration with why is this so publicized that the United States wants to hit back these Iran-backed Shia militias in Iraq and Syria, and so publicly, and even talking about weather being an issue. And I think that the frustration is, well, not just is this so public, but the fact that we're also hearing reports that IRGC top advisors in Syria are actually leaving the country.
Are we telegraphing plans for a reason? Is there a strategy behind this, or is there just news leaking out of the Pentagon?
That is a very interesting question you asked. I think definitely we have to remember that the worry is this becoming an escalation that could potentially lead to a blowout war since the October 7th attack by Hamas, the terrorist group. And so I think you're getting a mix of both, that this is deterrence, hey, this is what we're going to do not escalate. And you're also hearing from Kataib Hezbollah, the Iran-backed Shia militia that been more or less seen as responsible for the killing of 3 U.S. service members in eastern Syria, saying, well, we're going to reduce our presence, we're not going to be attacking U.S. forces in the region. So I think it's a two-way messaging going on right now.
We've heard that this was the Islamic resistance in Iraq responsible for the attack in Jordan, at least according to reports here. Give us a sense, you're an expert on these so-called proxy groups. What are these relationships like? Are these wholly owned subsidiaries? Are they loosely connected to Tehran? How does this work? How does this network happen?
So the Islamic resistance of Iraq is a new umbrella group, but it essentially is made up of Iran-backed Shia militias that we've known prior, including Kataib Hezbollah. These groups are trained and armed by Iran. They get their money. They do have their own agency to an extent. So whether Iran gave that exact order to kill 3 U.S. service members is unclear, but
the president, though, says they supplied the weapons. We can take that as a point of fact.
Absolutely, and that's where I was saying that they do train and arm them. So I think by proxy, it is in the hands of the Islamic Republic that they had a role in this. I think, well, not that I think, but the fact is that their modus operandi is that they want U.S. forces out of the region and they want the destruction of Israel. And so this attack on Sunday was part of that calculation, that if they push the United States enough on several fronts, which is attacking our troops and bases, that will withdraw from the region.
This was seen as a win to try to get the U.S. to retaliate from their view. Are they in constant communication with their organizers, if I can use that term, in Iran, or do these groups sever ties and act on their own once they're trained around?
Well, they definitely have visits from the IRGC Quds Force Commander, and they do interact with Tehran. They're part of something even wider called the Resistance Axis, which is Iran's proxies in the region. So whether it's the Houthi rebels in Yemen, Lebanese Hezbollah, Hamas and Palestinian Islamic Jihad in the Gaza Strip, and of course the Shia militias in Iraq and in Syria. So, and of course the Bashar al-Assad regime in Syria. They are all part of this big entity, and so they are getting some direct killing to an extent because they're all on the same page with their MO.
You just rattled off a half dozen groups that some of our listeners and viewers maybe have never heard of. How many are there in total?
I'd have to sit there and count, but there are that many. Yeah, because even under the Islamic resistance of Iraq, there's smaller Shia militias, and so there's at least half a dozen there at least.
You mentioned the Assad regime. To what extent do they play into this?
Well, the Assad regime, of course, they didn't have an exact role here, but what's important to note is that our forces or troops are in Syria because of the fight against ISIS. And there's been a lot of push from these players that the U.S. withdraw its forces, and I think that would be seen as a win. But my sense is that the Biden administration will probably double down on U.S. troops in the region, even though there's been a push for, obviously, for them to leave.
You're hearing battle plans where we started our conversation here. If this is in fact the course that we take, and I guess this could take days or weeks, but going after Iranian personnel and facilities inside Iraq and Syria as opposed to Iran itself, what's the response to our retaliation?
Well, this is a shadow war. It's been a shadow war for 45 years.
Does it stay that way?
It really depends. I think the fact that we've openly and obviously decided we weren't going to actually go in and attack on Iranian soil, whether it meets nuclear program, its defense facilities, or the IRGC itself. I think that's telling that it won't escalate for the time being, but I think it's always worth noting that miscalculations happen and there's always room for escalation, especially in the context of the regional tension since October 7th.
You mentioned the nuclear program. How likely it might be a cyber attack or something that would be non-traditional? We've seen this happen before.
Yes, actually, I thought in my initial assessment among attacking Iran-backed Shia militias in Iraq and Syria and the IRGC itself, that we would actually see cyber attacks potentially in additional U.S. sanctions on IRGC-affiliated entities. So,
to what extent can we set them back with a cyber attack? Wouldn't that be actually much more costly for the Iranians than going after proxies in other countries?
It can. It will delay their nuclear program, but not just cyber attacks, but actual other instances we saw, allegedly Mossad being behind some sabotage attempts over the years and it's slowed down Iran's nuclear program. But unfortunately, they would also do push it more underground, so that meant it would be harder to actually penetrate if they were. It's not
We're talking with Ali Daggers of the Atlantic Council about what might come next here, as we heard from the Secretary of Defense a bit earlier today. A multi-tiered strike. It could start, according to our national security team, as soon as tonight. We're told this is not going to be shock and awe. You're going to read about some strikes. Maybe you'll see grainy video from a surveillance drone. Is that what you expect, or do we want to shake up these players?
That's a great question. I think that they want to send a harder response than usual because we have a history of already doing such actions in the region, in Iraq and Syria. So I think they want to send a wider message this time around. But will it deter Iranian proxies in the region? I would say no.
So this typical attack continues then. Do you worry about any domestic terrorism or kind of ancillary damage that could come from this?
No, I don't think that this will trickle back to the United States. I think it will just stay in the region.
A direct attack on Iran would be a different story.
That I can say that would be a much more complicated story.
I bet you're pretty busy right now. I appreciate you coming in to spend some time with us and share insights from the Atlantic Council's Middle East programs. Senior Fellow Holly Daggers, great to see you. Stay in touch with us here on Bloomberg, because this is a story that we're going to keep a close beat on here throughout the day and, of course, the weeks ahead. It's not going to end anytime soon as we try to assemble the pieces here on a story that brings us halfway around the world. With news today from the Pentagon, our thanks again to Nick Wadhams. Coming up next, we're going to turn to the campaign trail and insights from Mohammed Yunus, the editor-in-chief at Gallup. He's with us in studio. Our panel will be with us later. Jeannie Shanzano and Lisa Camuso-Miller today on the fastest show in politics. Live from Washington, this is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got stocks pushing higher. Big tech leading the rebound today before results after the bell from Apple, Amazon, and Meta Platforms. Shares of all three companies right now, they're trading higher, with Apple up 0.9%, Amazon up 1.6%, and Meta Platforms up by 1.5%. Stocks are rising as traders await those earnings from the mega caps. S&P up 35 right now, close to session highs, up by about 0.7%. Dow Jones Industrial Average up now by 0.5%. That is a gain of 193 points. And NASDAQ, the composite index, up 122, up by 0.8%. 10-year at 3.85%, with a 2-year that is now yielding 4.19%. Spot gold up 1%, 2,060 the ounce. Right now we've got Bitcoin up 1.3%, just above 43,000, 43,011 now on Bitcoin. And West Texas Intermediate crude up 1.1%, 76.71 a barrel. Elon Musk moving ahead with a plan to move his company's incorporation from Delaware to Texas. Musk plans to summon Tesla shareholders for a vote on shifting the company's incorporation after a judge earlier this week voided his $55 billion pay package. Tesla shares now lower by 0.4%. Recapping stocks higher. S&P right now up 34 points, up 0.7%. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
All right, Charlie, thank you. Thanks for being with us here on Bloomberg Balance of Power, on the radio, on the satellite, and on YouTube. I'm Joe Matthew in Washington with new numbers on the campaign trail today. We'll start with South Carolina, only because we've been waiting weeks since the 5th of January for a new reading on this. That was the Emerson poll today. Washington Post, Monmouth University finds not good news for Nikki Haley. The numbers have barely budged, and this sample was taken after Iowa and New Hampshire. Nikki Haley, 32% in her home state. Donald Trump, 58% at home, what she calls sweet home South Carolina. With 3 weeks to go here, a pocket full of money, but no real path, according to most of the experts that we're talking with. It's a big question about what happens if she cannot win her home state. Donald Trump leading among women, among men, and among all age groups in this poll. More where this came from on the other side of the campaign. Of course, Joe Biden is running for re-election here with a real problem when it comes to the economy, connecting the dots, although we have seen some improvement here. But my goodness, third-year job approval average looks second worst, according to new numbers from Gallup. And I'm glad to say we're joined by Gallup's editor-in-chief, Mohammed Yunus, with us at the table here. It's great to see you, Mohammed. Thanks for coming over.
Always great to be here.
This is just not good for Joe Biden, as he's looking at now immigration top the economy in terms of most urgent issues for voters. He's losing on both.
Absolutely. And, let's start with the economy. I love to say the economy in presidential election choices for the American public, it's not just king, it's king, queen, and bishop. The economy is everything.
Yeah.
When you look back historically into all of the modern era presidents, how people felt about the economy, in addition to approval ratings, were the most important thing, not only in how they voted, but also in what they said they cared about when they came to vote. So right now, that's actually a relatively positive point for President Biden. In our Economic Confidence Index, we ask monthly how Americans feel about the economy today and how it's doing into the future. It's been the second consecutive month of improvement for him. So it's still negative 26 out of...
He's got time.
And he's got time. And of course, as you all know here at Bloomberg, the economy can really change from period to period. A big part of President Trump's story was how COVID wiped out the economy. And it became very, very much a different pathway to him seeking re-election. In January of 2022, he had a 50% approval rating. He was doing really well because people felt really good about the economy despite the politics.
You look at 39.8% job approval. You're referring to history. That teaches us that in a re-election cycle, we're underwater. How much time does he have to pull this above 50%? Is that where he needs to be to keep his job?
And let me just correct. President Trump was not at 50% approval. He was at 50% of people that said he should be reelected.
Got it. Yeah.
So at that point in his presidency, he was doing really well. President Biden today, 38% of Americans say he should be reelected. We looked at his 3-year average. His approval on the 3-year average is 39.8. He's behind every single president except Jimmy Carter at this point in their presidency. So just to give you a sense of how far behind he is. That being said, a lot of those presidents led in times that were far less partisan than today.
Okay.
And it's really hard for either a Republican or a Democrat to get people from the other side to approve of the job they're doing. And this dates back to President Obama. It's not a Trump-era dynamic.
Well, talk to me more about that, because I don't know how you do your job anymore. When people are having fun trying to mislead pollsters, when samples are being challenged by cell phones, no landlines anymore. We don't always know who we're talking to, it seems, depending on the poll. And I'll let you speak for Gallup, but this job's not getting easier as we go forward.
It's absolutely not. But one of the things that is actually amazing and hasn't changed is that with a really good RDD national sample, you get a really accurate measure of how the country is feeling. We were talking a little bit about state polls a second ago. It's important to understand that with a state poll, it's far more challenging to really get a representative sample. The other thing, I think, Joe, just as your listeners and viewers start consuming more political news about the election, the notion of aggregating polls is really useful and fun to deal with. It's very useful in the finance world with indices. It's not a great or accurate way to assess where the public is going, because a lot of those polls are gathered with different methodologies. Online polls are great for certain purposes. They've proven to not be so great for national assessments of the political testing models. Our methodologists have worked year in and year out to really test these tools, because essentially all of these methods are really tools and they're very useful, but it's about what's the right tool to fix the right school for you. Yeah. And with national politics, it's about having a really good national.
How many people do you need to call to get a single valid response? What's that ratio?
That's a great question. So our polls tend to run around about 1,000 respondents. Okay, sure. The hard part is only about 6 to 7% of people actually call. So we need to call far more people. Fascinatingly, though, with the proper statistical methods and weighting and all of that, we're able to actually get a very accurate sample review on the public, even with that low number of responses. The other, I think, misnomer is that response rate continues to drop dramatically. Actually, it's held pretty flat now for a long time. Okay. So we have a series of ways that we actually test our own accuracy. We stopped forecasting elections back in Romney and Obama, but we absolutely test to see how people would have responded to that question and what the actual popular vote turnout is. We do that every election, and it's been remarkable how accurate it is. And it's no secret if you are a member of the APOR, kind of the Association of Public Opinion Researchers in the U.S., and a lot of this is debated, written about in peer-reviewed journals. So for those of us in this space, it always, I think, baffles us to note how the public is having a conversation about the polls. You can't trust the polls.
How about that? Yeah.
It depends on the poll. It really does depend.
Well, it certainly does, and we really do try to talk about methodology when we report these numbers. But this is a fascinating peek behind the curtain with the editor-in-chief here at Gallup. We're in a primary season. We saw in Iowa and New Hampshire that immigration was far and beyond the #1 issue for Republican voters. What's that going to look like when we get to the general?
It's only going to grow. Immigration is the biggest.
So it's not just the economy stupid for the balance of this campaign.
It's not. So it's a matter of, so life is multi-dimensional, right? And so is voting. So the way we ask the question is, what is the #1 issue that's the most important for you? That's always the economy. Always been that. But we also ask a lot of other questions. One of the questions we ask every month is, what's the most important problem facing America? You could say your favorite cereal name, or you could mention a policy issue. The #1 issue for Republicans is immigration. I think it's one of the most underreported stories in our times today. And it's not just Republicans. Consider like 12+% of people at the national level are saying immigration. As the situation at the border worsens, which I think from your reporting, it seems like it continues to do that. It is absolutely going to be a major topic, particularly among the Republican Party. It also, if you'll please, perfectly ties into the most important issue for Republicans generally. And we did a 30-year analysis of what are the issues that where there's the most partisan divide on. The number one issue is the power of big government.
Wow.
And you can see how the issue of controlling the border ties right into that concept philosophically.
So many controversies in Washington right now really do. We've got a deal, we're told, on the verge of a deal in the Senate that's dead on arrival in the House. Donald Trump says no deal. It looks like this could be crashing into the rocks here. What does that do to congressional approval ratings? You should look at this not that long ago. What are they at 12%? Or, I mean, this is
Absolutely.
desperate.
Absolutely. A good month for congressional approval ratings is for not being a single digits, which is, it's funny, but it's also kind of scary.
It really is.
That being said, so will you re-elect Joe Biden? We also asked, will you re-elect, do you think that most members of Congress should be re-elected in that same poll?
True to form.
This is just a few days ago.
Yep.
24% of Americans say that most members of Congress should be re-elected. But, and a really important dimension to this is, when you ask them about their members,
it's overwhelming, right?
It's like nearly 6 in 10 say they should be.
Just don't mess with my guy.
Exactly.
And that goes for the economy as well, that we've seen in some polling, right? Where people are feeling better about their local economy. The question is when you connect the dots there on a national level.
Yes, and the big issue there is inflation. So even though that ECI number has improved, what we also found in the same poll, 63% of Americans are still saying that price increases are causing them financial hardship. That actually has now plateaued since this whole inflation thing began. What was it, 2 years ago now? So that hasn't improved. You know, you report a lot on the Federal Reserve and the real interest rate.
We talk inflation every day on a politics show.
Of course, absolutely. I've learned most of what I know from your reporting. But from the public's perspective, it's still just as bad. It hasn't improved at all.
Because they're looking at prices from before COVID, and we're talking about just slowing the rate of inflation, not actually turning the clock back. And you wonder if that ends up happening in the next year. You're going to be walking in here with much better numbers, I can only assume, for Joe Biden, but we'll find out together. Love talking to you. Thanks for coming. Editor-in-Chief at Gallup, one of our neighbors here actually in downtown Washington. Thanks for making the walk over. As we turn now to world and national news, Nancy Lyons has that in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. President Biden says he's working to bring hostages home and to create a lasting peace in the Middle East. He spoke to other leaders gathered this morning for the National Prayer Breakfast.
I'm engaged in this day and night, working, as many of you in this room are, to find the means to bring our hostages home, to ease the humanitarian crisis, and to bring peace to Gaza and Israel, and enduring peace with 2 states for 2 people.
Biden today also signed an executive order allowing the U.S. to impose more sanctions on Israeli settlers and possibly government officials who are involved in violence against Palestinians. Drug makers are receiving initial offers today for how much Medicare is willing to pay for their medicines. This kicks off deliberations that could last for months as the nation's largest single health payer engages in drug price negotiations for the first time. Health and Human Services Secretary Xavier Becerra says there will be offers and counteroffers. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. 12:40 the time now on Wall Street. The Dow, the S&P, NASDAQ 100 Index, Russell 2000 as well, all advancing on this Thursday ahead of major tech earnings today after the close of trading. Right now we've got Apple, Amazon, Meta all advancing. Apple up 0.8%, Amazon up 1.2%, Meta Platforms ahead of earnings up now by 1%. S&P up 34, up 0.7%. Dow Industrials up 214, a gain there of 0.6%. NASDAQ up 70, up 107, a gain of 0.7%. The NASDAQ 100 Index also up by 0.7%. 10-year 3.85% with a 2-year yielding 4.19%. Gold up 0.8%, 20.56 the ounce. Bitcoin up 1.3%, 43,012 right now on Bitcoin. And West Texas Intermediate crude flat on the day, now 75.81 a barrel. Economic news, there is data on America's labor market in the build-up to tomorrow morning's employment report. And with that story, here's Bloomberg's Vinny Del Giudice.
Weekly jobless claims rose to a 2-month high, as did the total number of workers on unemployment rolls. The labor market has defied Wall Street forecasts over the past year, and yet there are signs of a pullback. Job cuts from United Parcel Service to PayPal to NASDAQ. Meantime, another report shows labor productivity advanced at a rapid pace in the fourth quarter, wrapping up a year of improving efficiency. Vinny Del Giudice, Bloomberg Radio.
Speaking of jobs, Deutsche Bank plans to cut 3,500 jobs over coming years. The reductions, most of them are back office jobs, all part of cost savings at the Frankfurt-based lender. Bank had previously announced Deutsche Bank up now by 5.7%. Again, recapping here, stocks are advancing very close to session highs on the S&P. A gain right now of 36 points, up by about 0.7%. I'm Charlie Pellet. That, Joe Matthew, is a Bloomberg Business Flash.
All right, Charlie, thank you. Welcome to Balance of Power. If you're just joining us, we're live from Washington, D.C. on the radio, on the satellite, and on YouTube. We'll be on Bloomberg TV next hour as we try to get a sense of where we're going on a couple of fronts here, having heard from the Secretary of Defense earlier today. No strikes yet that we can tell you about, though reportedly authorized, and we've got an eye on what's happening here in the Middle East, as well as on the campaign trail. We were talking earlier in the broadcast about polling. Sometimes money is a better indicator of where we are, certainly as we try to project months ahead into the campaign here. The FEC filing deadlines have passed, and we're now able to look inside the coffers in the Trump campaign and the Biden campaign, and boy, they tell very different stories. We'll get to the Nikki Haley campaign, too. But we talked yesterday about Donald Trump's multi-million-dollar outlays for legal fees to pay for his lawyers. And indeed, we learn now his 5 political action committees together spent $210 million last calendar year, while raising just shy of $200 million. We have a math problem. As Joe Biden stuffs the bank account, his campaign, the affiliated committees, and the DNC raised $97 million in the last quarter. They start this year with $117 million in the bank. So if this is a war of money, Joe Biden might be winning it right now as we assemble our panel. Jeannie Shanzano is here, of course, Bloomberg Politics contributor, Democratic analyst, alongside Lisa Camuso Miller, Republican strategist, former spokesperson, communications director at the RNC, host of the Friday Reporter podcast. Great to see you both. Jeannie, is Joe Biden going to have the last laugh here? This feels tortoise in the hare. People haven't really even been looking at his campaign, but he's stacking up quite a savings account here to spend on a lot of ads later in the cycle.
He is, and they are already putting money into ads. They raised a lot. They really ramped up in that last quarter. We saw that they spent more in the last 3 months than they had the previous 9. And of course, to your point, they raised an awful lot. The one caveat I would say is I remember back to the 2016 campaign, and I remember telling students, money always speaks in politics. Hillary Clinton's got more money. She's got a leg up on Donald Trump. Nobody does free media like Donald Trump. And so it is important that Joe Biden has that money. It's important that they have more than Donald Trump, but they can't stop at just that because Donald Trump is a master at free media, as we know.
Well, true enough, Lisa. What's your thought on that? Does Donald Trump actually need to worry about money? Because he doesn't like to spend it on the campaign trail. He does in court, $50 million to legal fees. Does this matter for a candidate who is so often the exception?
Well, it definitely matters. And because there's so much work to be done, right? I mean, the problem here, and Jeannie has talked about it, we've talked about it over and over again, the American electorate is really not that interested in either one of these candidates, Joe. And so, in spite of the fact that I absolutely agree that Donald Trump is a master at being able to talk about and being able to get his own press regardless of how much money he spends, he's also going to have to figure out ways to counter what it is that's happening from the Biden administration. And I suspect every political analyst that I talk to tells me that this is going to be one of the nastiest elections we have ever seen before, because neither one of these candidates has sort of a specific something that makes them appealing to the electorate, so they're going to have to make the other look worse.
Okay. When I look at those who are donating to Joe Biden, Jeannie, it's, I realize it's Democrat here, and he's made trips out west. He's done the tour in Hollywood to raise money. He's gone to Florida now. He did Miami this week. Among his biggest donors, Steven Spielberg and his wife, Kate Capshaw, giving $929,000 each. Also on the list, George Soros, Eric Schmidt, the former Google CEO, Shonda Rhimes, the creator of Grey's Anatomy. Is this a good narrative for him when he might want to be talking about individual $5 donations from grassroots supporters?
Well, it's always good to raise money. Donald Trump would take it where he can get it if he would stop alienating the million and billionaire donors who have supported Nikki Haley. But the reality is, of course, you want to couple those big money donations from the Hollywood types that you mentioned with small dollar donations. And where do we see the president? We see him in Michigan. We see him on the ground trying not just to raise big money, which is going to be critical to the air wars that we are going to see. To Lisa's point, they are going to get nasty, and they're already banking on that. But also, you do want to ramp up those small dollar donations, because one thing that we do know from the research, if people give even a little bit, $1, $5, a little bit, whatever they can, that means that they are more likely to get out and support you. Forget about giving again. They are more likely to talk about you to their friends and neighbors and family. And that's what this is going to be in the end. It's going to be a turnout race.
Turnout and engagement. We look at numbers. Lisa Camuso-Miller for the Haley campaign. Nikki Haley pulled in over $17 million in the last quarter and starts the year with $14 million in the bank. I don't know if those numbers sound like enough to you, but does she stay in this race as long as the money keeps flowing? Because these new numbers today in South Carolina are looking pretty desperate.
It's pretty tough for her, and she does really have a tremendous narrative about how she's never entered a race and not won. And it would be, to me, if that is something that she really feels like is an important legacy about her own political career, and then to know that South Carolina the numbers are looking very difficult. Even before the primary season started, it was clear that it was going to be a difficult path for her beyond New Hampshire. And so the one thing I think that keeps the steam in her sails, Joe, is that she has a tremendous amount of support in terms of fundraising. And so that, I think, as long as that continues to happen and there continues to be folks that are standing behind her and supporting her in that way, perhaps she sees it as the long game and wants to stick around. But I don't know. I don't really quite know. It was very clear, and she made a terrific concession speech after New Hampshire. So much so that, everybody's reported it got way under the skin of the former president. Perhaps that ends up being sort of her role in this primary season, sticking around and making him spend all that money in the primary and not dedicating the money to the general.
Fascinating. It's almost a sacrifice play, or maybe it's a just-in-case strategy. Donald Trump's trial here in Washington is still supposed to begin in March. It depends on that immunity ruling. We're going to have a lot more with our panel, Jeannie Shanzano and Lisa Camuso-Miller. Another late night in the House. They actually passed something, a tax deal. Dare to dream. But is it already dead in the Senate? We'll have that next. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are on Earnings Watch, specifically Big Tech Earnings Watch. Major names after the bell, including Amazon, Meta Platforms, and Apple. Mandeep Singh is a senior tech analyst with Bloomberg.